Hi, my name is Joe Mazumdar. I'm the editor of Exploration Insights, and welcome to the September 2021 edition of the Virtual Metals Investment Forum. So today we're going to do, I'm going to do a quick presentation on a major theme that we're seeing in the mining industry, the environmental, social, and governance criteria that major investors are using to determine what stocks and sectors they actually invest in and the impacts on mining. After that, we'll go through 3 companies with exposure to copper, cobalt, palladium, copper, and gold. Various mining jurisdictions, from remote to close to infrastructure, where there's major operating mines. One's a development story, another one with an exploration with a major partner, and the other one is a grassroots exploration story. So without further ado, I'll start with my presentation on ESG and mining. So what we'll go through is the attraction basically on general investors to ESG, how the mega mergers, were executed to attract these generalist investors. Who are these generalist investors? ESG principles, and what we're going to see is that actions speak louder than words here. And then what we see, the thematic here is that is the mining industry investable? And then what we see in terms of how they rate and rank, because a lot of these projects use a lot of power, that ability to access clean power, such as in places like Canada, has a significant impact on emissions and your carbon footprint. And then the other thing for us in the junior world, how will it impact investment decisions or M&A? So in a letter that I put out annually for subscribers in 2020, one of the thematics that I introduced was, this idea of reduction of the global emission of greenhouse gases. So the metals that were exposed to that were the metals that I wanted to be exposed to in terms of the companies. And then whether you're a climate change denier or Greta Thunberg, you can't ignore the amount of capital deployed for this venture in terms of the thematic. My focus was basically on the metal demand. What I basically missed was the effect on institutional equity investors and what their criteria would be. The generalist investor is one that major companies have been trying to attract and trying to gear away from the passive investing in GDX and GDXJ, those sort of things, ETFs. And so part of that attraction, you will have to also meet their criteria of ESG requirements. And that's what we're seeing now. It appears right now, looking at how we're benchmarking, there's probably a lot more work to do for mining companies to appease some of these institutions. So if we look a bit of the background, attracting the generalists away from passive ETFs, we saw several years ago Barrick acquisition of Randgold, Newmont purchase of Gold Corp, and then the consolidation of both their asset bases in Nevada to what we know now as Nevada Gold Mines. The whole idea there was higher liquidity, which would attract the generalists, better margins by reducing corporate G&A, optimization of portfolio. We saw a lot of divestments, and then all that generates is focus on free cash flow generation. And you could see that from the cumulative free cash flow that Barrick had made from 2019 to 2021. And then also the better balance sheets, the reduction of net debt. And then all that leads into better dividends. And that's one thing not a lot of ETFs can actually pay out are dividends. And that's a big attraction to the generalists. So now you're attracting generalists into the sector. Who exactly are you attracting? So the generalists do not focus on any specific sector, but exposure to sectors that fit their macro investment theme, whatever it happens to be. And they could take major positions in large companies, 4 to 8%. They need liquidity so they can come in and out. And these new mega mergers have given them that liquidity. And these institutional investors come from North America, US, Canada, Europe, and at one point they had about 28 trillion in assets under management. So a significant sum, and all these mining companies are asking for is a proportion. They've been signing up back in 2005, so this is a theme that's been happening for a while, into this Principles of Responsible Investment, which also includes the idea of ESG. And it sort of reflects the growing relevance among institutional funds for this type of practice that basically drives some of their criteria for investing. So BlackRock, one of the large macro generalist funds, has about 6 trillion or more in assets under management, has been looking at investment through an ESG lens for over a decade. Okay, and so what are ESG principles? The ones we focus in on is the environmental, and this is easy to quantify. Anybody with a technical report or an operation can tell you their emissions, based on what they're using for fuel. Most, trucks use diesel, where they're getting their power from. And so it's not just that they get power off the grid. Where does the power from the grid come from? Our use of water and the waste, high strip ratio, that sort of thing. Safety has always been important on the social side for mining. It's a reflection of efficiency. Diversity is new in terms of trying to put that into the mining companies' thinking. That might be easier from the corporate perspective, doing it at the where the company's based, and maybe more difficult at site, depending on the communities, local communities, and that. And then the other thing, obviously, is community relations. I would say that mining companies, have been in the business of advocating for good community relationships for a while, because if they do not have good community relationships, they cannot proceed with the development of any kind of project. In terms of governance, we are seeing some transition to more independence and diversity, but more from the major companies. But we need to see that a little bit more from the junior companies, and then also compensation policies. Those are basically some of the major things that the companies that are basing their investment on ESG criteria are looking for. And so ESG benchmarking is something new. So we can't take everything people are saying, as the truth, because everybody's using different metrics. It has yet to be very well standardized. When the World Gold Council put out, all-in sustaining costs and just said, okay, this is the way you do it. That's not the case right now with ESG. It's a benchmark scale. It's relative. This was done by Sustainalytics. And what they're showing you basically is gold companies score very poorly on the metric that they're imposing. So if you were an ESG investor, you might shy away from the entire industry, even if you were attracted to the sector. So why would you do that? Because we know that operating trucks uses diesel. You can do electrification if you're close to power. Companies can use heavy fuel oil to operate power plants versus the grid power. But then the question is, if you do have grid power, is it coal, is it gas powered, or is it hydro or nuclear? That would impact your emissions. The treatment of water in remote regions, that would impact waste rock. Is it acid generating? And this is something different for gold versus base metals or any product that requires further refining. And so the metrics don't stop at the mine site. So if you produce gold, which a lot of companies do produce, which would be the actual refined end product, there's no knock-on impact with further freight, smelting, and refining to get you that fungible product. Gold companies have that advantage. Whereas copper companies, nickel companies, these other ones that produce concentrates, they will still be imposed the impact of freight, smelting, refining, to get to that saleable product. Those ESG impacts will be put on that mine or that project. So that's something you got to think about. So it's not only that you're thinking about, hey, we've got hydropower at our mine site, but if you're sending it to a smelter in China that, derives its power by coal, that would also impact your ESG score. So if you can see what the social and governance impacts, there's talk about occupational risk, safety, but again, safety in that is something embedded in mining that mining companies do a good job on, more so than I would say a lot of companies. Their problem is local workforce diversity, depending on the communities they have, and trying to advocate that. And if you look at the lower right there with respect to Newmont, they do a good job of diversity or female representation on the board of directors. But, depending on the community, they have a harder time of getting that type of maybe local or indigenous representation, depending where they are. So sometimes it's not the company's fault, it's just where they are, and training and all that they try to do with respect to getting that project in production and working efficiently. The other problem is corruption, and so that could deal with the country that you're operating in as well. And so if you look at these scores, and this was done by Scar and Associates, who are trying to implement a system that companies can use. Scope 1 is at the mine site. Scope 2 is taking into account everything else that you might do. But you could see from this, if you look at versus commodity, in terms of the first level, in terms of companies, what you do from emissions or carbon dioxide equivalent emissions by commodity to first saleable product. If you just look at the mine site, gold, is up there with copper, more so than nickel, let's say, and metallurgical coal. But gold does not have a lot of the impacts of downstream freight, smelting, and refining. You can see that primary aluminum has a big impact because of the amount of power required in the aluminum industry. So that, basically is heads and shoulders above everybody else. But the gold's advantage right now is that it does not require the freight, smelting, and refining. But then gold's disadvantage is that if you want to reduce greenhouse gas emissions, gold's not a product that's going to help you there. Copper will, nickel will, and other kind of commodities like that. And then if you look at this is a ranking of ESG from, again, the Scar Analytics, where I've plotted it, and these are different companies, but you can see the range here. And what we see that the severest ESG rankings, the worst, tend to be the Chinese companies that work in conditions that have, that aren't very safe, that use, coal or some other kind of hydrocarbon for power. And those are on the very far right of this graphic. The ones that score the best here are the royalty companies, because I guess that they're not given the same kind of impacts of where those royalties are actually coming from. That could change, but right now, the royalty companies score, very low on this metric. And so if you wanted exposure and you're just looking at this chart and you thought this was the truth, basically, you would look maybe to get your exposure to gold through the royalty companies versus the actual mining companies. So Scar and Associates now is, taking a role, because this company I used to use in terms of benchmarking costs. And they benchmark costs by going to the roots, like, finding out how many barrels of diesel you use, how many kilowatts of hour power you use, how many megawatts. And so by that, they can derive your cost. That same methodology would also get you your carbon footprint. And so this would be the E part of the ESG. And you could see that here, in terms of refined gold product, versus tons of carbon dioxide equivalent, and this is over ounce produced, you can see that the ones on the right will still be those Chinese producers. But you can see Barrick and Newmont, because they've got a lot of exposure to Nevada, which uses lots of natural gas, and still there's some coal power there, and they occupy a lot of power. They mill, they have autoclaves, and so they don't score that well on this metric, And if you go to your left, the ones that score really well, like you can see Agnico scores very well, Pretium scores remarkably well, because they're in Canada where they're exposed to hydropower. So you can see that if there's any kind of a strategic push to diversify and lower your score, there might be an incentive there to look at assets that could actually mitigate your ESG score, especially your carbon footprint. So that's something else to think about when you're thinking about, oh, is my project or my company a takeover target? So if we follow the money, we can see that now ESG, environmental sustainability, and governance, like if we look at Newmont, takes up a significant part, 30% of the short-term incentive plan for executives. And so if that is the case, and that pervades the industry in terms of the companies that would potentially be the suitors for your junior, then that could impact their investment decisions. That could impact which assets they buy. Choosing projects with smaller greenhouse gas emissions may be, in the end, an important criteria if they want to maintain their generalist investor base. So again, actions speak louder than words. And what have we seen from the big diversified miners? We've seen, over the past several months, BHP, the second largest mining company, has shifted its oil and gas assets into a joint venture. And how that worked is they basically split the equity. And so somebody can own BHP without having exposure to the oil and gas, because they can sell out of that company and just own BHP. With respect to tech, a Bloomberg article recently came out that now they're looking to spin out or sell their metallurgical coal business. And this is not a business that has been losing them money recently. This is 35% of their profits in 2020. They produce a significant amount of met coal, 21 million tons from 4 sites in Western Canada. But their whole idea is shifting focus to copper, and as we can see, as are many of the other diversified miners. And then a Russian mining company, Polymetal. Actually, no, I don't think they're Russian, actually. But they've agreed to a $400 million sustainability-linked financing. And this might be a new form of funding that we can see, but then the imposition would be of maintaining these ESG criteria, carbon footprint, on the operation. And the banks would basically lend to you, and there's money that will go into these funds to raise capital for projects like this. And so people are trying to tap that as well. But what we have to know is that you have to really understand that your project would have a very low footprint. And so all of this, again, driving investment ideas, investment, what you're going to do going forward, and also, how you raise capital. Okay, so basically, summary, impacts of these generalist funds are in the gold sector and other mining sectors that we've seen is now synchronizing their investment criteria. These generalist funds control a significant amount of capital, and their ESG principles are now being applied to mining companies, some more so than others. Like I said, safety was always an issue. Community relations was always important. Diversity is becoming much more important, as well as carbon footprint. Again, right now with the first scores that are coming out, the mining industry doesn't score that well. Diesel consumption, wastewater, power. But some of these metals that we mine are the metals that have to be used to reduce these greenhouse gas emissions. So we have to look at the fact that if we don't produce these metals, we might not have these medium to long-term impacts on reducing greenhouse gas emissions. Gold companies, their thing is that they don't have that, let's say, material offset with what they produce, but they also don't have that additional smelting, refining, freight issue, because most of them produce the fungible product at the mine. These new ratings that we see, royalty companies tend to perform better than the operating mines, especially on the right-hand side, the Chinese gold firms that basically use these coal-fired plants or other carbon plants, and then they have their safety issues. Companies are actively linking their management's incentive plan with ESG principles, and so that's one way of following the money in terms of how these investment decisions will be made. And then the question is, will companies with large carbon footprints, and community issues is a given, because if you've got big community issues, nothing's gonna happen with you. But if you have a big carbon footprint, will you be at the top of the list with respect to potential suitors, despite your production profile and despite your all-in sustaining cost, which might be in the lower quartile? So in summary, the impacts of ESG principles is something we should think about, even if we're junior investors, because this will trickle down to all of us with respect to mid-tiers, juniors, and how we invest and where we draw capital from. All right. Okay, that's it for me. And now we'll move on. And so now we're moving on to the three companies that are presenting this morning. First up, we have Midnight Sun Mining, listed on the Venture Exchange in Canada. It has a major land package, prospective land package in Zambia, very close to a major mine, Kansanche, which is operated by First Quantum. They have a joint venture with Rio Tinto that's exploring their ground. So speaking on behalf of Midnight Sun Mining, we have President and CEO Al Fabro. Al.
Thank you, Joe. Midnight Sun is an explorer in Zambia. We're looking for copper. Cobalt, we did discover some cobalt a couple of years ago. It's not a primary focus, but we will be happy to accept it if it comes. We've been working in Zambia for approximately 8 years now. 6 of them by ourselves, earning in on this property. 2 years ago, we made a corporate decision to dilute the property as opposed to dilute the company, and we brought in a partner, Rio Tinto. And Rio Tinto is in the process of earning 75% of the concession by spending in excess of $50 million. When we started this joint venture, we had a 60% interest in the licenses, and our Chinese partner had a 40% interest. Through Rio's expenditures, we've upped our interest to 80%. The concessions are very large. They're 500 square kilometers. They surround Kansanche. Solwezi is the main town. Solwezi was a town of about 1,000 people back in 1995, and now it's about 40,000 people. It's a real little hub in Zambia, and it just goes to show what a large impact a major mine can have on a community. Rio is the operator for the under the earn-in agreement. The commodity is copper. Basically, there is some cobalt. We have had some gold, a little bit of nickel, but for the most part, this is a copper-focused exploration play. The jurisdiction is in Zambia, English law, English language. We like operating there very much. The government's very cooperative. They've made some headlines in the past about raising royalty rates and stuff, but I think the new election has brought in a more common sense approach to the mining industry, and I think there's going to be a bright future for Zambia exploration and exploitation. Rio Tinto, we did a deal with Rio Tinto, and one of the criteria that we thought about when we structured this deal was they had to spend enough money to at least kill the project or make the project. I didn't want to partner when we were half pregnant. So it was structured that they had to spend approximately $20 million US over 4 years to earn 51% of the project. And at that time, we felt as a board and a company that $20 million would be enough to show that there was something significant there, and Rio agreed with that. So that was a terrific outcome. Past management, we were the original Rocks Gold board. We made the discovery at Yaromoko back in 2011. So we're comfortable in Africa. We enjoy operating in Africa. We recognize the risk, but we also recognize the upside of the geology, and there's a lot of areas that we can find projects in. Copper is a commodity. I'm not going to pretend to be an analyst and tell you copper is going to $10 or 20 cents. I don't know. I do know that what we're looking for is a generational mine, and that we guaranteed 4 or 5 cycles of copper prices in that cycle. The region that we operate in is expected to be the 2nd largest copper producing area in the world this year, but it's tremendously underexplored, and we continue to look for opportunities in Zambia to take advantage of this situation. I do believe with the change of government, you'll see an influx of explorers come into Zambia, and you can't find better mines, copper mines in the world, except maybe for Chile. The Kasanchi mine is turned ESC Junior into a major mining company in very short order. The infrastructure in the area is tremendous. First Quantum operates a 250,000 ton a day sulfide plant. They operate a 50,000 ton a day oxide plant. They run their own smelter there. It's the roads, their haul roads go right through our property. So any smaller discoveries there that wouldn't be developed by RTZ would be sold to First Quantum and be part of their operating system. I just mentioned the recent election. He's a pro-mining guy. He seems to get that the miners and the government have to work together. Zambia basically goes from a 3rd world country to a 1st world country, depending on the copper price, and it is a tremendous important to their economy. Now, in my background, you can see elephants, and our slogan sort of been hunting for elephants in an elephant country, and you know, it's a long way from Vancouver to Sulawesi, and the prize has to be big enough to make it warranted. So what we're looking at, Kasanchi in excess of 2 billion tons of 1%, Lumwana 800 million tons of 0.8%, Sentinel mine is about 1 billion tons of 0.5%. Ivanhoe's mine is just north of the border here, 1 billion tons of 2.5%. These are huge mines, good grade. They make companies, and they're there for generations. How we got here, we signed a deal with Rio about 2 years ago. They made an initial cash payment of $700,000 to us, and that kicked in a $3 million earn-in due diligence period. That period was supposed to be for 2 years. They did that in 6 months, and by paying us the $300,000. That kicked off stage 1. They have 4 years to spend $16 million US, and they make annual payments to us of $250,000. So far, they're about $3.5 million into this earn-in, and we just started a drilling program now that will continue from now to the end of the year, and that should do another $2.5 million. If they elect to continue after the earn-in period, they have 3 years to spend $14 million in expenditures. They will not complete really a feasibility study. They'll make what they call a decision to mine. They don't use outside consultants to make these decisions to mine. It's all internal. So they will make a decision to mine. If they do that, they have an option to earn another 10% by spending an extra $10 million. Our geological team, as I said, we made the rock skull discovery here at Mokum. Bob Sipthorpe was part of the Fire Creek discovery of Klondike's. We've all worked I've worked on the trading floor, I worked in mining camps, investment financing, a lot of brokerage experience. Our motto when we were with the brokerage was we would find projects that had done all the target generation work but didn't have the drill money, and we would find, if we liked the drill targets, we would finance the drill programs. And we've sort of taken the same approach on the other side of the market here. We want to find projects that were drill ready and go hit them and try and kill them as quickly as possible. And if they don't die, then we run with them. Why we're excited about this is there's 3 target areas that we think could possibly host a Rio Tinto size mine. And Rio Tinto, when we started negotiations, said we're looking for 10 billion contained pounds of copper in a deposit. So that was their sort of minimum threshold. And I actually asked the question, I says, why are you talking to us? And he says, well, we see 3 areas where you could have 10 billion plus pounds of contained copper. So the first target is Dumbwa. Dumbwa is a 20-kilometer long soil anomaly. There's an area in there that runs about 500 meters of up to 0.7 in soils. The best drill hole in there, we've got a 16-meter intercept of 1%. We've got a bunch of 15 and 10 meters of 0.6 and 0.7s, but nothing at all that can explain that soil anomaly. So detailed geophysics and some geochemistry has caused Rio Tinto to reinterpret this thing, and they're going to commit a 5,000-meter drill program that they've already started to see what if they can explain Dumbwa. Then what we call the Kasiba Dome target. It was our original discovery zone. We had drill holes of up to 6% copper and oxide, 14 or 15 meters of it. But then we would get into barren marble. We'd go back and forth. We'd get a good hit, a good miss. Continuity was a problem. We went to First Quantum. They said that was a similar problem they had at Kasanchi early days, and we got to go deeper. At the time, we didn't have the funds or the inclination to go deeper. But that was a target for Rio. Rio has done some analysis of that, and they expect to drill that in the new year. And then the final one is V2. We call the whole trend on V2. It's about a 17-kilometer trend, and it abuts the dome. And we had this going north-south, and we've got about 2 kilometers of strike on the V2 deposit. It runs about 1.5% copper. And then we stepped out about 4 kilometers and hit a hole that was the best hole drilled in Zambia in the last 10 years. It was 12 meters of 4%. But we bracketed that hole and missed on all sides. A new interpretation with the geophysics and some geochemistry has shown that the trend might not necessarily be north-south, but more northwest. And there's a 5-kilometer by 3-kilometer geophysical target that the good hole is right at the bottom of. So that's the only drill hole in this whole target, and we expect them to drill that in the near future. Kasanchi is First Quantum's flagship mining complex. It is an incredibly large complex. We've visited it several times. It's a very impressive operation, and they've just announced they've got about 12 more years of mine life there. Now, today drilling is primarily done on the V2 target area. V2 is the small one to the north. It's about a kilometer and a half by a kilometer. Every drill hole we drilled inside that ran ore. Every time we got outside that geophysical target, we got blanked. So we've got a lot of targets here that have not had any drilling on them. The Lakota looks interesting. That's where we had the good drill hole, and the target to the left there running northwest looks like that's where the future Lakota may be. We've got some very good V10 targets that need to be drilled, and the next 18 months we should see a lot of work done on that. That's the Dumbwa target again. Rio has divided that into 4 different target areas. Very little outcrop on this part of the property, and they're going to start drilling that as we speak. So in summary, we've got a very large land position. We're 10 kilometers from Kansanshi. We're 60 kilometers from Wana, 100 kilometers from Sentinel, 200 kilometers from Oaxaca. So it's an area of big mines. We're operating with Rio Tinto. The relationship has been impeccable so far. We're very happy with them as a partner. We've made 2 high-grade discovery zone areas, but we have not been able to get the continuity we need to take to the market. We figured that with Rio's expertise and money, that we will be able to develop those targets. And we really do like the copper market. We like the copper market at $250, and we like it better at $450. Thanks for your time.
All right. Thank you very much, Al, for that summary of what's going on in Zambia and your exposure to it through this Solwezi claims and the joint venture with Rio Tinto. Going forward, we're coming back to Canada, Northern Ontario, with Generation Mining that has the Marathon Palladium Copper Project. I'm speaking on their behalf is Kerry Knoll, the Executive Chairman. Kerry.
Thanks, Joe, and welcome everybody. Yeah, the Marathon Palladium, Copper, and Platinum Project in northwestern Ontario. So, for those of you that don't follow palladium, palladium is not like these other metals, the metal of the future or the metal for the green metals of the future. It's actually a green metal now. Its use is almost entirely in catalytic converters in cars. And what the catalytic converters convert is carbon monoxide, which is poison. And just as important, it converts nitrous oxide. And you don't hear much about nitrous oxide, but nitrous oxide is actually 300 times as potent a greenhouse gas as carbon dioxide. And you don't hear about it much because of palladium. Palladium converts that into nitrogen, which already makes up 70% of our atmosphere. And so it's extremely, extremely important to gasoline cars and reducing the greenhouse gases. We've also got 4 million ounces of that in measured and indicated. We've got another bunch in inferred. Well, we've also got 1 billion pounds of copper as a byproduct and over 1 million ounces of platinum. So we have a nice suite of metals. We also have some gold and silver, which I'll talk about in a moment. So as far as the people goes, we have a really strong group of people. That group is growing. Jamie Levy and I have been working together for about 8 years. Our last company was Pine Point Mining, which got taken over by one of the Osisko companies. Previous to that, entirely in my career, I've started 6 mining companies before this one. 4 of those made it into production, and all 6 have been taken over. So I've had a decent track record. Drew Anwell joined us about a year ago. He was one of the 3 key guys behind building the Detour Gold, the big gold mine in Northern Ontario. He did about 2 months of due diligence on us before he joined us, and he was looking for the next mine that he could build. And Brian Jennings has got an extensive experience in restructuring companies as well as chief financial officer of various mining companies. And I won't get into all the people, but as far as the directors go, we've got a very, very strong group of people here, all at the top of their game in the mining business. We have a lawyer, we have an accountant, we have an engineer, we have a geologist, and we have a geophysicist. And they are a very, very active board of directors. So location, very important for a whole pile of reasons. One, of course, being the access we have to infrastructure. Another one being the access we have to clean electricity and cheap electricity, and another one having the community support of both the First Nations and the local non-Indigenous communities as well. And we're probably in the most active mining area in Canada. The Hard Rock mine just to the north of us is going ahead now. The Alamos has expanded the Island Gold Mine several times. Magino's under construction. The Hart Gold Mine was built a couple of years ago. And there's a number of other development projects in the area. And Canada's only palladium mine which is owned by Impala, a South African company, is just to the northwest of us. Getting a little more local, we have the Trans-Canada Highway coming through the property. We have a CPR main line. The town of Marathon, which supports the big Hemlo mine, is just south of us. We've got 3 deposits on the property, and the blue area is our property, but the feasibility study we did was strictly on the Marathon deposit. And as you can see, we're just north of the airport there. And one of the key things here is this power line. The government of Ontario has just spent $1 billion upgrading this power line to bring clean power to this part of the world. And we are going to be the beneficiary of that. The hard rock mine, for example, to the north of us, they have to use natural gas and generate all of their own power. We're going to get it all off the grid, and it's going to be cheap and it's going to be clean. Ownership, we own just right now, right around, it's just approaching 83% interest. We have a partner, Sibanye-Stillwater. Those of you who follow us will remember that Sibanye had a one-time back-in right after the feasibility study. It was very onerous. We didn't expect them. We never expected them to exercise. The market did, unfortunately, and it kicked our stock down a bunch. But we never believed that they would exercise. And in fact, we're now negotiating with them to buy them out. Not sure we'll get there, but if we do, we'll have 100% of the project. And the real key here for the people want to know why Sibanye walked. Well, one of the reasons was how onerous it was. They would have had to spend more than $250 million to buy into this, just as their initial down payment to buy into this project. It didn't make economic sense. The other reason that they have stated publicly and by their actions as well is they have decided to go after battery metals. So they bought a nickel refinery in France, they bought a lithium project in Finland, and now they just committed $500 million to a large lithium project in the United States. So they're moving in that direction. It's kind of odd for a precious metal company, but that's where they're going, and I wish them well. They have been a good partner, but we're going our separate ways now. So we did a feasibility study that came out in March. It was done by the top tier engineering firms, G Mining and Ausenco. Showed a 13-year mine life with about 245,000 ounces of palladium equivalent a year. And the upfront capex is $665 million, and we can produce the palladium for just over $800 an ounce. The base case at 1725 palladium, IRR is 30%. That's a good number. You don't see less than a quarter of the mining projects are above 30%. And the net present value is $1 billion against our market cap of just over $100 million. And that's at much lower than current prices. If you look at more closer to spot prices, and if you look, for example, at today's spot price of both copper and palladium, you've got a $1.6 billion net present value. At the spot prices when we came out in March, the net present value was $2 billion. By the way, at spot prices, the payback on this project is 1.5 years, almost unheard of for a greenfields mine construction. And the base case, even at the lower metal prices, we've got a 2.3-year payback, which the bankers love. So the bottom half of this slide shows the distribution of revenue. As you can see, we're primarily a palladium mine, but copper has a big impact, and that's at 320 copper. It's 27% of our revenue. At 450 copper, where it was, we calculated that to be quite a bit higher. We're now approaching 40% of the revenue. So it is a significant copper development. And this just shows the base case, the undiscounted cash flow at the spot price of $5 billion over the life of the mine. And that's a 13-year mine life. And that only counts the main zone. We have other deposits on the property that will extend that mine life further. So fantastic cash flows for a company, given our market cap today, almost $1 billion over the first 3 years, and averaging close to $200 million for the rest of the mine life. So very good numbers. And that's, again, at the base case. We've designed this mine to focus on the palladium in the first half of the mine life. And the reason for that is because we do think that in time, palladium will start to back off in terms of importance as the world goes towards electric cars. We think the rollout of electric cars is going to be a little slower than a lot of people think. But nevertheless, it's going to happen. So we're getting 2/3 of the palladium out in the first half of the mine life. And then we've reserved a lot of the copper for the second half of the mine life, because we think if electric cars get popular, well, and I'm sure other people can tell you the same thing, there's not enough copper in the world for the whole world to go to electric cars. So copper is going to become a very valuable commodity. And then we've got all these other metals. We've got a good amount of platinum in many of the years, 50, 60,000 ounces of platinum as byproduct. And of course, platinum is supposed to be important for the fuel cells, which may be powering buses sooner than we think. We've also got some gold and silver, and we're looking at, we've been in discussions with a lot of the streaming companies to stream that gold and silver, and we're getting a phenomenal response, partly because of our location, but it's just, it's really pretty exciting for us that we think we're going to be able to finance a large part of this mine by streaming the gold and the silver. And then quickly on the sensitivities. If you look at, current palladium price is just over $2,000 an ounce. That adds $300 million to our market cap. If you look at current copper prices, it adds almost $300 million to our market cap, our net present value. So very sensitive. But what's really I love about this slide is if you take almost $1,000 off the current palladium price, and palladium, of course, has already dropped $800 this year because of the slowdown in automobile sales due to the chip shortage. But if you knock almost another $1,000 off the price, we still have, and this is still at 320 copper, we still have that 20% IRR, which to me is the threshold which determines whether or not you should be building a mine. Location, important. So this kind of summarizes the carbon footprint of the 5 largest palladium producing areas in the world. 3 of those rely almost exclusively on coal. It's not really that great for our environment to use coal to produce electricity, to produce green metals, or for that matter, electricity for electric cars. Ontario is 96% carbon free. Only 4% comes from carbon, and most of that is in the GTA with gas plants that come on during peak times, not up where we are. So almost virtually a carbon-free area. And we are looking at we don't have our carbon footprint figured out right now because we are looking at using electric assist trucks to lower our carbon footprint even further, and also even electric shovels in the pit. So we're doing all those cost trade-offs. We're negotiating with Ontario Hydro to figure out what our exact electricity cost is going to be, et cetera. And here's the palladium story. Again, palladium is in shortage. It remains in shortage. It's gone into a little bit of a surplus right now because of the reduction in car manufacturing. But that car manufacturing, when the chips are available, is going to explode back, and so we expect the palladium demand to explode back as well. Just to put our mine in perspective, if you look at the largest precious metal mines in Canada, if we were in production today, we would be number 7, ahead of Rainy River, ahead of Hemlo, and if you did a gold equivalent on that, it would be just around 300,000 ounces a year. Yet we're trading at the very bottom end of the net present value of the development companies. And a lot of reasons for that. One is people think that Sibanye, since they walked away, this is not a good project. That's not the case. Number one, Sibanye is still a shareholder of ours and has not sold a share. The second knock we get, of course, is that how is a junior company like you going to raise $700 million? Well, I've raised $1.5 billion in my career, and this project is robust enough. And I've never, ever been in a situation where there is so much money available to build mines. It's coming from private equity companies, from streamers, from smelters, all over the place, lenders. And we're in discussions. We've got NDAs with over 20 financial groups to figure out how that mix is going to happen. But I can assure you it is going to happen. So what's going on in the future? Well, we're working on our permits. We're expecting, with a little bit of luck, to have that all wrapped up within a year from now. We're also about to start the detailed engineering, which we need to do so that we can hit the ground running once we get our permits. We're also negotiating with the local communities and First Nations. We've got a letter of intent with the Maven First Nation. And in fact, our top management is on site today with the at the First Nations, presenting to the government, to the panel who's looking at our permits. So we're working very closely with the First Nations, and with a little bit of luck, we're hoping to start construction in the third quarter of next year, July, August, and if that's the case, it's about 18 months or 20 months to production after that. Just a quick note, we are continuing to explore. We've made a fairly major discovery 300 meters to the north of the main pit. So this thing is getting bigger. And that's what some of the core looks like. And just to finish up then, we've got 150 million shares outstanding. We've got some pretty smart shareholders. Eric Sprott's been in our last 2 financings. Lucas Lundin has been in 3 of 4 financings. Sabanier is a shareholder and has never sold a share. I know Cisco Mining trades our stock pretty actively, but has been in every single one of our financings and has done very well. Directors and officers all bought their shares out of the market or in the financings. There was no founder stock in this market, in this company. All of our shares, and that's well over 10 million, were bought at the same price as the rest of the market had to pay. And our market cap it's come down a bit from this. It's palladium has had a rough couple of months. The reason for that is, again, the chip sales or the chip shortage in the cars. Toyota announced a couple of days ago that the October production would be down 40% year over year, and that knocked about $200 off the palladium price. But the palladium price will come back. It's still in shortage. There's no new mines coming on anytime soon. There's no replacement for it, so we're pretty confident on the palladium market. Thank you, and hope to hear some questions from you.
Thanks very much, Kerry. So that was Generation Mining with the palladium copper development play in Northern Ontario. And now we're moving on to Northern Quebec with Azimut Exploration, who are exploring several projects in that region and have been actively exploring for decades. But now they've actually made a discovery. And so to talk about Azimut Exploration in Northern Quebec is the President CEO, Jean-Marc Rouland. Jean-Marc?
Thank you, Joe. Good morning, everybody. Okay. Yes, Azimut can be presented according to 3 main facts. The first one, Azimut has one of the largest exploration portfolio in Quebec, and we are focused on gold, on copper. As you know, Quebec is recognized as one of the best mining jurisdictions in the world. The second idea about Azimut, we have a discovery named Elmer along the Part 1 zone. It's clearly our flagship gold project, and it is 100% owned by the company. Finally, we have a data processing technique, which is named AztecMin, which led the company to develop many joint ventures. And this is a true exploration edge by better recognizing good targets at a very early stage. And it's a proven data analytic techniques which led us to discover more than 500 prospects on mineralized zones across Quebec. A few highlights regarding the corporate side. Azimut has been founded in 1986. We have close to 82 million shares outstanding. What is important is the quality of the share structure, which has never been consolidated. The retail part of this share structure account for 30%. The remaining part is owned by the insiders, by Quebec-based institutions, and large funds. Azimut is clearly recognized as having one of the lowest share dilution rates in the junior space in Canada. We currently have $30 million as a working cap and no debt. Coming back to the Elmer property, Elmer is located about 100 kilometers west from the Eleanor gold mine. operated by Newmont in the James Bay region. James Bay, even located in northern Canada, has excellent infrastructure, quite outstanding. We have paved roads, power lines, airports, and maybe more importantly, the First Nation support. This is very important. This is a key site to operate in the region. Again, access are very easy, and it's a year-round operating project with no climatic pressure. We can drill everywhere, anytime on the property. The Elmer property itself, again, it is owned 100% by Azimut. It's a 35-kilometer long project. And the discovery, which is named Patouan, is located in the mid part of the property. It is well located. We are not close from a boundary. You have listed here on this slide the best drill intercepts so far. Last year, we started to look for some additional exploration targets around the initial discovery site. We defined an 8-kilometer long by 3-kilometer wide priority exploration corridor. This led to the discovery of additional high-grade gold showings, which are representing potentially additional targets for a comparable discovery. This project is covering a typical Archean greenstone belt, and its exploration level is still at an early stage. This year, we are expanding our assessment of the property along strike. Again, we have added a systematic till sampling phase and a prospecting phase, which is still ongoing. And of course, we believe that we will have more insights about the gold potential along strike with the Patouan discovery. Now you see on this slide the best intersection over this 500-meter strike length deposit and down to 450 meters, which is the current advancement stage of the Patouan zone. You see, we're talking about robust mineral intercept. The best one, 24 grams per ton over 18 meters. And you have listed the 5 best intercepts so far. True thicknesses are very strong, very interesting. And you know, this mineral intercept are located, you know, they are well distributed along the discovery shape, starting from surface down to 400 meters, 450 meters. You know, there is, it seems that we have a grade increase with depth, and we stay with the same wide gold-bearing intercept. This is the shape of the discovery projected to surface, again, with a 500-meter strike length, going down to 450 meters. The mineralized zone has been systematically drilled with 500 meters spaced drilling grid almost since the start of the discovery. And this provides us a fairly good idea about the upside potential to expand the discovery. The average width is at current time 35 meters. Within the central part of the discovery that we call the core zone, the average true width is 50 meters, up to 82 meters true width. This is a drill cross-section in the mid part of the discovery. Again, a drill intercept show quite remarkable continuity starting from surface down to 450 meters. It's a simple, continuous, predictable geometry, which include also in most of drill holes, a high-grade component. And of course, it's a little bit too early, but we can think about an open pit operation, which will be followed by an underground operation, or eventually directly an underground operation. Again, it's a robust discovery, which provides us a lot of flexibility regarding the future, a potential future mining plan. This is a mineralized envelope using a 0.3 gram per ton cutoff. Again, we're not talking about small disconnected mineralized lenses, but we're more likely talking about one unique, robust, wide mineralized envelope, which is open at depth. At current time, deepest hole reaches 450 meters, but it's clear that there is a potential, an obvious potential to expand the size of the mineralized zone. This is the progress we made since the first announcement in January 2020, 1.5 years ago, until July 2021, with a cumulative number of 23,000 meters of drilling. Again, we have been able to consistently expand the discovery size. We still have several holes to be announced. We are taken by this terrible bottleneck from the labs, but have no doubt we will continue to expand this discovery. This is a future drilling plan we have for the incoming drilling program, which will start in 1 month from now, mid-October, with 3 drills. We are planning a minimum of 40,000 meters to expand the size of the discovery. Again, there is no plan at current stage to do any infill drilling, but just incremental drilling to expand the discovery size by having like a 50 by 50 meter drill spacing down to 500 meters, and then start exploring deeper down to 800 meters with a 100 by 50 meter drill spacing. The idea for us, the next drilling phase will account for a minimum of 20,000 meters. As we just discussed, the idea is to expand the pattern zone with 14,000 meters of drilling. But in the meantime, we will drill additional holes around to discover comparable zones nearby with 6,000 meters of drilling. It is very clear that we believe that there is an additional discovery potential immediately around the pattern discovery. Again, we started to do exploration on this property 2 years ago, and we are in the process of recognizing comparable targets in the vicinity. We are a data-driven company. This takes time, but I believe that the most difficult part is already done with the discovery of a strong potential ore body with the pattern zone. On the rest will follow with the next program. The objective is simply to advance towards the delineation of an initial 2 million ounces gold resource and produce a 43-101 report by the end of the year 2022. And this is the objective of the next program. Now I would like to report about our progress on the REX trend, which is clearly one giant copper target. The idea is to unlock the potential of a remote region, but showing an incredible copper target in lake bottom sediments It's a 300 kilometer long target in lake bottom sediments. Now we can say that it is strongly correlated with the discovery of significant copper mineralization, which is providing a route for this giant copper anomaly, which is certainly one of the biggest copper targets in Eastern Canada. We have discovered 150 mineralized zones on prospect along this belt. And we are talking, we believe that we are dealing with a new mineral province, a new copper-bearing mineral province in Quebec. We have signed a $40 million option agreement with SOQUEM, and we operate the project. This is the location of the main mineral prospect. We have just completed a 3,000 meter of drilling this summer on 8 of the main targets. We are just starting, but it's clear that there is a significant copper, not only copper, but also gold potential in this region. For until the end of the year 2022, we have a minimum $16 million planned exploration budget for Elmer, 10,000 meters, essentially for drilling. The remaining part of the budget is a partner-funded project for at least $5.5 million. To summarize, Azimut is experiencing a strong organic growth, of course, with a growing gold discovery with the Elmer project. We have a good financial position with $30 million in the bank. We have a good strategic partnerships with SOQUEM. Collaboration is excellent. The upside is fantastic, especially for the Rex trend, which can be the next copper district in Quebec. Thank you.
Great. Thank you very much, Jean-Marc. And that ends the presentation part of the morning session. And so now we'll move on to the Q&A. So we have a mix of questions from the audience and my own. We'll start with Midnight Sun with Al Fabro, the president and CEO of Midnight Sun Mining. I guess my first question would be, you know, you've got this large land package right next to First Quantum. So how is it that you got that property and it's not in the hands of somebody like First Quantum?
Well, actually, First Quantum actually had this package, and back in the early 2000s, the government, 90% of the exploration ground in the country was tied up by 4 majors who weren't doing any exploration. So they came up with a use it or lose it program, and so they made them shed half their licenses, and this is one that got dropped, and our Chinese partner had picked it up. And he was involved with the Beijing third world financing of exploration programs in third world countries. And when Beijing pulled the plug on that financing, he was looking for other alternatives, and he came to Bob Sipthorpe and he said, "Would you guys have any interest in doing something?" And so we reviewed all his projects, and this one stood out head and shoulders above the rest, and so we did a deal on this one.
So at that time, where were we in the copper cycle?
Copper was about 275, I guess. We weren't so concerned about the price of the copper cycle. We were more interested in the size of the licenses and the potential there.
Okay. And so I guess as a follow-up, having Rio Tinto as a partner, I guess, what was the attraction? And then 2, like news flow, you know, how it is with a big company in terms of trying to get the news flow out. How is that working out?
But it's one of the downsides of doing a deal with the senior. You give up your news flow until they're ready to give you something. So that's a bit of a problem. But as part of the agreement is that anything that would be material to us, not necessarily material to them, they have to release immediately. So we will have access to that. and we have monthly meetings that update us on the exploration, what they've done, and where they're going.
Okay. Now going to generation mining, and Kerry Knoll, the executive chairman, we have a question from the audience. Is quoting the question, as days ago it was mentioned, Shona Zone is showing a potential as another deposit. They'd like to know, how many holes, meterage have been drilled in this zone, and how is this going to advance?
So we have announced 3 holes from the zone out of, I believe it was a total of, I think it might have been 11 holes. So we've drilled, and we're just finishing up that last hole. We won't have any assays on the remaining 8 or so holes for a while because the labs are backed up. We're not expecting them until mid-October at the earliest, but we do have a lot of core out for sent out for assay, and more going out. As I say, we're not quite finished drilling yet.
So in terms of assay turnarounds, how are you in Ontario with respect to that?
Well, it wasn't too bad for a while, and then what happened was our whole region got shut down because of forest fire risk, and so everybody stopped drilling for a month, and then everybody started at the same time, and the one lab in Thunder Bay that everybody was using just got overwhelmed, so that slowed it down. They will catch up over time, but right now it's they're kind of behind. There's probably 60 drilling programs going on in that part of the world, and most of them send it to ALS lab in Thunder Bay.
Okay, now moving on back to Azimut Exploration with Jacques-Marc Lewin, the president and CEO. A question from the audience, like when you were talking about the Rex project, obviously the PAT 1 is what's taking up most of your time and discussion and potentially valuation. With respect to the assays from Rex, would you, a question from the audience, report them individually as they come, or are you waiting to batch them all together? And what is the turnaround time that you're experiencing in northern Quebec?
Just to make a point regarding the turnaround time, it's really too long. We're talking about from 2 to 3 months at current time. We hope that it will improve over the next few weeks, but at current time it's difficult. It's a true bottleneck. Saying that, we are in the process of sending all the samples to the lab coming from the Rex project. All the samples will arrive at the same time to the lab, and we should be able to deliver all the results at the same time.
Okay. Coming back to Midnight Sun and Al Fabro, just a little bit more on that presidential elections. Like obviously we've seen some presidential elections throughout the world, and copper being a major part of Peru's economy. Now we have a new president, and that election is potentially impacting some investment decisions there. And what we're seeing is like Newmont announcing during the Denver Gold Show that they're going to defer their decision, the construction decision on their Yanacocha sulfides project, which is the base of the high sulfidation epithermal system, so gold and copper. That's $1 billion investment being deferred. Now we see with the presidential election in Zambia being probably more of a positive in terms of market friendly. Like, how are you seeing the investments in Zambia going? Like, I know that I believe First Quantum was looking at a refurbishment of their smelter and an entire plant complex there at Kansanshi. How do you see that happening?
I see that going forward. I think they're in negotiations now with the government, and they're friendly. This election was important for a change of government, but it was also important because with all the strife going on in Africa, to see a peaceful handoff of power without any rioting or any nonsense, it was refreshing. It just reaffirms our faith in Zambia and the people there.
Okay. Then going back to generation mining and Kerry, the question I'd have, like with the loss of Sibanye, and you talking about that your share price plunged based on that, because I guess that the market was saying, okay, now the financing risk is yours, now the technical risk is yours, and execution risk on the permitting. So how have you mitigated those different risks from a perspective of a non-cash flowing junior company?
So on all three of those, we were advancing all three of those before Sibanié's decision, in anticipation of them doing exactly what they did. So we started the permitting last year. The permitting is going on, and nothing would have changed had Sibanié stepped in, because it's a process, and it's a process that we were doing correctly, and we're fully expecting to get those permits, and it's a matter of time and obviously some money. We do have $12 million in the bank, so we're not broke. As far as the financing goes, we had lots of discussions. We had a number of proposals previous to Sibanié's decision, but nobody wanted to get into the details until they made that decision, because it might have, if had Sibanié backed in, it would have rendered it all moot. So as soon as that happened, we engaged Endeavor Financial. We looked at a number of firms to manage the process for us. We chose Endeavor, and I've worked with Endeavor on and off those people for over 25 years on different financings. So we are now in the process of talking to lenders, talking to streamers, talking to private equity companies, talking to smelters, and getting a number of new proposals. And tomorrow's our deadline that we've given out for everyone. We've got some really good ones in hand, and we're going to be managing the process. And over time, it'll take several months. We will be announcing various financing milestones being hit. And as far as managing the project, we've got the people. I mean, we're hiring people. We just brought a guy over from Glencore. We're going to be announcing some new hires in the next short period of time. And, frankly, Sibanié had no employees in Canada, so they would have had to build from scratch. We have Drew Anwell, our chief operating officer, one of the guys who built Detour Lake. I mean, he knows the people. He knows who he wants to hire. He knows the team that we want to put together to build the mine. So I don't see a lot of risk on that side. We use G Mining and Ausenco to do the feasibility study. They're absolutely the top firms in Canada in that business. So we're pretty confident.
Okay, now moving on to Azimut with Jean-Marc. I mean, discovery is not something that happens often in the mining industry, and so in terms of a grassroots exploration discovery, which appears to be this Patouan project, how did that occur? Like, what were the metrics for our audience to understand how you go from grassroots exploration, systematic grassroots exploration, to saying, okay, let's drill this, and wow, I think we've got something here?
Yeah, it's of course, it's an interesting question. We have been exploring the James Bay region over the past 15 years. We are taking a very systematic exploration approach by integrating all the parameters, by using our expert in-house Aztec main system. Anyway, we have been very, very systematic. And the Patouan, the Elmer property, was recognized as a very good target, but this target was not available. He was belonging to another company, and when this company dropped the claim, we just rush on this target. We stake it. We have been very lucky to be the first to stake it. And we reprocess the property scale database. This led to identify the Patouan target. We started to sample this target. We have been able to recognize a wide gold-bearing corridor, and right away we decided to drill it. That's it.
Okay, so it worked. Coming back to Midnight Sun with respect to Zambia, like with the presidential elections, are you seeing a lot more people coming into Zambia? Because from what I'm hearing from a lot of companies, is they want more copper exposure. Is Zambia a legitimate target country for expanding their copper exposure?
I believe so. Um, it's a great country to operate in. It's super underexplored considering how many big mines there are. I think a lot of the problem now is going to be more expensive. Most of the mines that outcrop have been discovered, so you're going to have to use more geophysical and geochemical tools. But there is a lot to be discovered there, and as you're seeing with what's happening with Ivanhoe just north of us, that there was a 1 billion ton deposit sitting on their ground for years that they didn't discover until 7 or 8 years after the original discovery. So it's there's a lot of work left to be done in that belt, and I think it's going to open up big time.
Okay, just for our audience's sake, people worry about geopolitical risk, and does the fact that you have major mining companies operating in that country and one of the largest copper mines, developed and all the way actually to a smelter refinery with First Quantum, does that help with respect to talking about the geopolitical risk of operating in a country like Zambia?
Oh yeah, for sure. The thing that Zambia always had a reputation, they nationalized the copper industry back in the early 80s. So that is always in the back of people's minds. And if it happened once, it can happen again. So that was always a reputational thing. And then they always had a way of shooting themselves in the foot. Anytime the copper market got a little bit bullish, they would come out with these outrageous royalty demands, which would be public, and then the negotiation would be private. They would come to a rational royalty regime. But some of the politicians really started, they talked too much for headlines as opposed to doing what's best for the country.
Do you see that changing with the new president?
Very rational, very common sense guy. He's a guy that I think is going to do what he says he's going to do, and I think he really is a Zambian patriot.
Okay. Now getting back to generation mining with Kerry, I mean, we like in Northern Ontario, like very north, we have seen this multiple bidder war on Noront, a nickel explorer between BHP and Wyloo. How does that impact other assets in Northern Ontario?
Well, I think longer term it's going to be very, very positive because BHP does its homework before they would bid on something. This is something that's not for next year or even the next decade. This is a long-term acquisition for them. So they see that long-term political stability there, and that's going to be a kind of a flag to other possible foreign companies, Australians or European companies that are looking for a safe place to do business. Northwestern Ontario would be considered safe, and so it's a great precedent for us. That said, we're the federal government has some interesting rules. They put out this critical minerals list, and so they essentially put that list out to prevent Chinese national companies from taking over certain critical minerals, and so Canada itself. I mean, Australia is considered fine, so BHP is Australian, and it's all good. But Canada as a country is going to be more selective going forward about who they allow in.
Okay, I mean, we saw that, I guess, with TMAC and
Exactly.
that M&A that ended up being Agnico Eagle coming in as a white knight.
Yeah.
But I mean, does that really impact you that much in terms of was that one of your?
No, we don't expect Chinese interest in our project. Our project is going to be more, I think, precious metal companies looking to green up their portfolio, and we're actually in a number of discussions on that front.
So, I mean, like you were showing the sensitivities, which is very interesting. And, like when palladium was going up, it was a palladium project. But like you said, like with copper coming up, is it more of a copper project? Because in the end, your product that's leaving the mine is actually a copper concentrate with palladium in it, correct?
Correct. Yes.
So how does that look in terms of, hey, do copper companies look at this as a project that's, in the permitting process? And that is one question from a viewer is like, what is the timeline with respect to permitting and where are you at right now? Because you said something about hopefully you get it in 12 months, but is that just something that's being initiated right now?
No, the permitting's been going on for many years. The previous owner, Stillwater, started the permitting process in 2012 and got 2 years into it, and then it was paused until we restarted it last year. So the timeline that we have is we're expecting the project to meet what's called sufficiency, which means the government will say, okay, we have the information we need to assess your project. So what happened is we submitted in April all of the documents that were updated from the previous Stillwater time. We submitted them, and now they've been coming back with groups of questions. We just got another 96 questions from them, and we're answering those questions, and they're all answerable. None of them are unreasonable. So as we're getting through that process, once the questions are all answered, the next step is to hold community meetings with the First Nations and the local communities. Once that's finished, they have a 90-day period to make the decision. And then they will give that decision to the federal and the provincial environment ministers, who then will either say yes or no. And that's kind of how it's going ahead. We don't see anything. We haven't seen anything that would be a large issue that would stop the project. So we're thinking it's all going to happen. In fact, we're confident enough that it's going to happen, and that we're willing to start doing our detailed engineering, which is a $20 million plus project, previous to the permits. So once it reaches sufficiency, which should happen in the next month to 2 months, then we're just moving ahead. So it's a defined timeline. They had 270 days to make their decision. This is a joint panel that was appointed by the provincial and federal governments.
Okay, now moving back to Azimut with Jean-Marc, got a question from the audience, like looking at the location of this project. Rex actually was what they were interested in. You were talking about a big copper gold prospect. What is the geology underlying that? First, from my perspective, what do you think the type of deposit it could be?
Different type of deposits. The main target type is IOCG, iron oxide copper gold type, Olympic dam type. We have also intrusion-related polymetallic potential and shear-related copper gold type. It's what is interesting. Copper can be found in different mineralized deposit types in the region. What is interesting is a very strong correlation between this giant copper anomaly in lake bottom sediments and different mineralization type along this copper anomaly. It's not only copper. We have also tin, tungsten, bismuth, and gold. It's really interesting. It's totally new. It's the main control are deep-seated structures on related magmatism.
So the question from the audience is that the project looks quite remote. So from a perspective, like what kind of size do you think makes sense, to actually build the infrastructure to support it, if you find anything in terms of development?
Yeah, of course, it's clear that we need a world-class deposit. Just as a reference, further north, we have the Raglan mine, which is successfully operated by Glencore. And what we need is a discovery size which by itself will justify the creation of new infrastructure. And it's really the target we are looking for, a world-class discovery. Just to say that this program is fully funded by our partner, SOQUEM, which is the governmental-owned exploration arm in Quebec. And again, there is no downside risk for Azimut. This program is fully funded by SOQUEM for $40 million. Just to say, our main focus, where we are allocating our own funds, is our flagship, the Elmer project.
Okay. Now, well, we'll end this with a few questions, hopefully quick questions for Al and Midnight Sun. One quick question is from the audience is, when do you expect like a progress report on the drilling that on the several targets you discussed? And then the next question is about Zambia, the previous president, when the economy, sovereign debt issues, will they try to get more out of the mining companies operating there to basically help with getting more hard currency? So those are the two questions for Al.
As far as the sovereign debt is concerned, I believe this leader has made it clear, HH has said from the beginning, there will be a harmonious relationship between the mining companies and the government, and that a healthy mining industry is good for Zambia. So I do believe that will be rectified. Sorry, Joe, what was the first question?
The first question was in terms of
results.
Rio Tinto news flow. Yeah,
Yeah,
like is that a monthly?
I would expect something significant out by the end of October, I would think, where we could give a full update to the market, meterage results, where they're working, and et cetera.
Okay.
End of October, yeah.
Okay, great. I think we'll end it there on the Q&A session. Thanks for all the questions from the audience. Really appreciate it. And thank you to the companies, Midnight Sun Mining in Zambia, looking for copper with Rio Tinto. Presenting on their behalf is President CEO Al Fabro. Generation Mining with Kerry Knoll, Executive Chairman, a palladium copper project, development project in Northern Ontario. And finally, Azimut Exploration, CEO and President Jean-Marc Lulin made a discovery with the Patuan project and hopes to make another one with the Rex property. So thank you very much for attending the morning session of the September 2021 edition of the Virtual Metals Investment Forum. This is Joe Mazumdar, editor of Exploration Insights. Thank you very much and have a good day.
Good day, everyone. It's Eric Coffin, publisher, editor of the Advisories and co-owner of the Metal Investors Forum. I just want to welcome you all to the September 2021 version of the Metal Investors Forum. This is my speaking block. I'll be doing a short presentation about what I'm referring to as the contradictions in the market, and it'll be followed up by presentations by 4 companies that I follow in the newsletter, all of which I own not insubstantial amounts of stock in. Great companies. They're all building very impressive looking resources. One of them is actually mining a resource, so they're on to the next stage already. But this is a great group of companies that you definitely want to be taking seriously and paying very close attention to. You know, I've been, as my subscribers know, I've been kind of going back and forth on the whole, is inflation transitory, not transitory? I've leaned so far, and I'm still sort of leaning to the transitory side of the fence, but only just. And the reason why I sort of gone back to the middle in the last little while is, as new metrics have come out, we're seeing more, what I would refer to as sticky prices, and that would be things like wage increases, rents, things that generally you don't see drop down again and lose their gains, essentially, unless there's a recession. That's almost always what it takes to actually stop inflation in those those sticky items like that. And we have seen those. They're not going crazy. They're definitely not the main part. They still are not the main part of the higher inflation rate, but they're definitely getting bigger. So I think it's clear there's definitely going to be some residual inflation, even if the transitory stuff comes off. So it's not like it's going to go back to 1% or anything. I don't see that happening anytime soon. I've spent a lot of time lately trying to figure out what the hell's going on with supply chains. I find it quite odd that, I don't find the supply chain issues erupting to be surprising. What surprises me is that it's taking so long for them to get worked through, and people that are specialists in supply chains that are in the supply chain industry, if you will, most of them are quite they're quite skeptical about how fast this is going to get fixed. I mean, they're mainly talking middle of next year, and that's the other reason why transitory, schmandatory, depends on how you want to define it, because it sounds like some of the issues and supply chain issues are a big part of this. Those aren't going away anytime soon. I find it a little bit shocking, honestly. It does bring into question the whole just-in-time inventory we've been using for 30 years. I really didn't think it was going to take a year and a half to fix this stuff. We're talking about shipping at the end of the day for most of this. But, I would note that if you look at the bond markets, if you look at how bonds in general are trading, you look at the yields, most of them are at least in the middle of the transitory, not transitory continuum like I am. And in fact, most bond traders seem to be highly skeptical that the inflation rate is going to stay up. You can see that simply and easily based on where bonds are trading and what the yields are. If a bond trader thought we were going to have 6% inflation for the next year, he would not be buying treasury notes up to the point where the yield was 1.3. So they clearly do not believe in the inflation scenario. We're gonna find out what's gonna happen. The conundrum and the confusion and the annoying thing in the last few months has been this kind of backdrop. You really should be expecting and getting a better performance out of the gold market, out of all the precious metals. This is, by definition, certainly by my definition, the classic bullish scenario for precious metals, and that's long-term negative real interest rates. It's not clear to me yet, honestly, why this isn't happening. Maybe it's fear of the taper that it's going to come in some point in the next few months, I think. And the other thing that's unfortunately not helping the resource space, not commodities in general, but the resource space, when you think of stocks, is again, we've got a really crap year for asset turnaround. There were several other companies that were humming and hawing, wanted to present at this myth, and the reason why a lot of them didn't, quite frankly, is they got no results to talk about. They're not sitting on stuff. Believe me, I know a lot of these guys. I talk to them. They're swearing down the phone, talking about how terrible the lab turnaround is again this year. We thought it would be fixed. It isn't. That's another thing that's not helping these stocks with that problem. At least should take care of itself once the northern results start flowing in, and we get some nice ones from Brandon, the next presenter this morning. Once they start, we should start seeing a lot more regular news going forward. But it's taken a month longer than you were expected to. So that late August lift that you often get in the sector just didn't happen. Now, when I look at the whole transitory, non-transitory argument, here's a really long-term chart for you. Unfortunately, this one starts just after the original, if you will, the original gold bull market in the 70s, but it gets the point across. The blue line is CPI, U.S. CPI. The white line is 10-year bond yields. Essentially, if the blue line is below the white line, then real interest rates are positive. If it's the other way around, they're negative. And as you can see, for virtually all of that period, really until about 2013, 2014, we had positive real interest rates. The scale of the positivity shifted. And if you take a look in the middle of this, if you look in the middle of the chart, you can see there's a couple of spots here where you see these kind of jaws narrowing. And those are previous periods where gold did well. It doesn't seem that it has to be negative real rates so much as declining real rates. Of course, the real anomaly is the one that we're right in the middle of right now. That's a pretty amazing tail on that chart. You can see bond yields have gone up, but really not very much at all. Bond traders are clearly not buying in to this much larger jump in inflation that we've seen. You know, if they thought that was normal and lasting, you'd see nominal rates up here someplace, and that's not happening. It doesn't look like it's going to. But again, this type of action, if we see the rates continue to stay low or we see inflation continue to be elevated, it's generally the positive background for commodities in general. Now, like I said, I'm not completely out of the transitory camp. You take a look at this. This is the August CPI and the core CPI. The core CPI was actually more of a surprise, interestingly. Sorry about that. It was more of a surprise than the full CPI, but you can see both of them dropped quite a bit. The fall from July and especially June to August, and the fall from sort of April to June down to August in the core. It's quite substantial. You can see that things are definitely decelerating. And interestingly, you can see that if you take a look at this shows you, this is a core index, but they've broken out parts of it. So the yellow is changes in used car prices, red's airfare, hotels, travel stuff, basically. And blue is the core rate with those excluded. And, you know, it's pretty obvious here. You know, after we came out of the first wave, and definitely after the vaccines came in, when things opened up, that's where you really saw the inflation push. But a lot of that push was in things like travel, you know, people getting out there. Another thing, oddly, was used cars, and I think there's two reasons for that. One is there's been a problem with car manufacturing because of semiconductor availability, and that's a whole other supply chain thing. But it's also the fact that I think, frankly, after a year of COVID, a lot of people who maybe are just on the edge of affordability when it comes to being able to drive to work said to themselves, I don't want to be in a bus or a subway car with 50 other people. Screw it. I'm buying a junker. So that's the reason why used car sales did so well. But you can see that those came off. They were actually, in August, they actually both took away from the final rate. But you can see also, though, if you drew lines here, you can see the core rate has gone up. So I'm not saying I think inflation's gone back to 0 or 1%. It looks to me like it comes back to, say, 3 or something, which is not insignificant in terms of what we're thinking of in terms of positive and negative real rates. Interestingly, again, I thought this chart was interesting because this one is professional investors, and the definition of professional investors is essentially fund managers, hedge fund managers, and it's how many are expecting higher inflation going forward. And as you can see, as you came out of the pandemic and then sort of to the end of Q1 this year, that went through the roof. I mean, basically in March, April, 80 or 90% of the fund managers were expecting higher inflation. That's back to zero, which and zero in this case basically means 50-50. Half of them do, half of them don't. I suspect we'll see that fall further. I think this helps explain what's going on in the bond market because these big institutional investors, of course, them and sovereigns are essentially the treasury market. Treasuries are not a retail market. So I think this helps explain why you're just not seeing the bond yields move the way everybody thought they might. And again, here is the chart itself. Here's the 10-year yield over the last 2 years. You can see where it bottomed out here, middle of last summer. You'll see a peak on the gold chart here, same time. And then as we came out, and especially once the vaccines got announced, we saw things get up to about 1.8%. But interestingly, that's kind of where it topped out, even though the inflation rate, the annual CPI, kept climbing right up to here. It didn't get followed by the bond market. We've seen that drop in bond yields kind of flatten out towards the beginning of August. I'm sure if you trade the gold market or gold stocks, you'll remember the beginning of August. That was interesting, to use the old Chinese curse. And that is kind of where it reversed again. But we're not seeing much of a move. Yeah, it's sort of grinding its way higher. But really, I mean, the 10-year yield is only at 1.3. These are done in 10 basis point increments. So this 13.44 is actually 1.34 in terms of the actual rate. So, I mean, it's very hard to imagine the way bond traders are trading this right now, unless everybody has a change of heart. I just don't see how we get to a situation where we're going to have positive real rates. They'd have to move up literally 3 or 4% from here, and I just don't see that happening. And they're not even back. They're not even back to where they were, or they're not even close, really, to where they were pre-COVID. So, the bond market is definitely sending the message that they're not expecting higher inflation. And keep in mind, during this latter period, there's been a lot of treasury issuance, and there's going to be a lot of treasury issuance at the rate the governments are spending money right now in the U.S. There's going to be a lot more treasury notes issued, and it's actually kind of impressive that the interest rate has really only moved up about 0.25% in the last 3 months in the face of a lot of new issuance. That tells you how strong the demand is. Demand for treasuries is very strong. So there's obviously a lot of uncertainty out there. So, I mean, what the hell is wrong with the gold market? I'm not entirely sure anything is wrong with it, really. I should preface it by saying that. I know it feels like crap to most of us, and we're definitely not happy about where some of our stocks are trading. But really, I mean, this is a pretty big move. I mean, you know, it went from 1,400 to over 2,000 in the space of under a year, in about 9 months. That's a pretty big move for the gold market. Some of this was topping out. This spot where this topped out. This is where yields bottomed out last year. So the initial reversal here was people saying, okay, well, that's the end of lower and lower negative real rates. So the pullback you saw here was a lot of this was consolidation. And again, when we saw real rates start dropping off again, in large part, really, because inflation was going up, we saw another ramp up above the 1900s, and it's just flattened. Sorry about that. It's just flattened out since then. This was another bottom, actually. The most recent bottom in bond yields was when everything got slaughtered at the beginning of August. Bond yields are up a few basis points today, and that's helping gold and silver and everything else get slaughtered today. And that's really one of the most frustrating things lately, has been metals in general, but especially gold and silver, react negatively to what are, in the scheme of things, very small moves. I mean, we're talking 5-10 basis point moves. I mean, that's nothing historically, but you'd think the world was coming to an end every time the bond yields go up a few basis points. That everybody in the metals market just completely flips out. I find that quite odd, and it's, you know, people are obviously seeing something or think they're seeing something going forward, and I'm really not clear on what it is. One thing that I guess, you know, it's been part of the push, but it's pretty hard to make an argument and blame it on the U.S. dollar. I know that's the traditional nemesis of gold bugs everywhere, but this is a 1-year chart of U.S. dollar, and it's essentially hasn't gone anywhere in the last year. Yeah, it's gone down, it's gone up, it's gone down, it's gone up, but it's pretty much where it was a year ago. So I wouldn't get too caught up, and I try not to get caught up in short-term moves in the U.S. dollar, although I'm well aware of the fact there are traders that trade the gold-dollar pair. You can see that today. The dollar's having a good day today. That's definitely increases selling in gold, but I think that's a very short-term thing. Medium-term, I'm just not as sold on that being the factor. Like, it doesn't, if you overlay this on a 1-year gold chart, the correlation is not that great. And so I think, you know, I do think that one thing that we don't have here, we don't have that sort of longer term sort of slide down, ramp down in the US dollar. We did see that, for instance, we go back to the 2000s. Part of what, you know, China was obviously then and now really for non-precious metals, it's the big buyer. But part of what helped commodities in general was you did have this long, and it was a pretty significant slide by the end of it in the US dollars through the, you know, like 2003 to 2008. It dropped about 20%. We don't have that this time. We don't have a rise that explains some of the pullbacks. We're not getting that ramp down either. We did get one through late 2020, and it was definitely it was a factor in it going up. But I just, I look at this chart and I just can't see it as being the main factor. There's something else going on here. One thing that it has helped in the negative real rates and strong economy coming out of COVID, if you look at these base metal charts, the base metals are actually acting a lot more, normal, I would say. This is the kind of action you would expect with a strong growth profile coming out of something like COVID-19 last year. It's pretty hard to be unhappy about any of these base metal charts. They all look great. Because keep in mind, when you look at something like, say, zinc, that's like a multi-decade high. We're not that far off of it. Most of the other ones, I mean, nickel's not a multi-decade high, but it hasn't been trading in this range for 10 years now. The same copper is close to its all-time high. Of course, you can see the all-time high in the chart there. These all look pretty good, and the supply chain issues that are a bugaboo for other parts of the economy, they're obviously a positive if you're someone who's trading base metals. I don't think those supply chain issues go away quickly. I do think the demand change with the move to electrification, that's quite real. And politics, which is something we probably all shake our fists at. I'm sure you all own one or two stocks that are being held up by permitting or politics. God knows I own a few. That's a real downside for those individual names, but that's actually an upside when it comes to longer term pricing story, because there's just going to be trouble. There's going to be trouble getting some supply to keep up with demand. You don't need huge demand increases for copper and zinc and nickel and lead and iron ore to go through the roof if nobody's letting anybody build a mine. You don't really want to be trapped in one of those companies that can't build a mine. But if you're thinking in terms of attention for the sector and explorers, ironically, it's not a negative thing. It's not a negative thing for them. It's a negative if you own one, and I own a few, but it helps in terms of it's just going to make the supply side that much tougher to keep up and the prices that much better going forward. I mean, I wish I had some nice, neat explanation for gold's moves, but I don't really. I think some of this is fear of taper, which is coming at some point. I'm not one of these guys that believes the Fed's never going to taper. I think they are. I think they'll probably start late this year. I think the market's vastly overreacting to the impact the taper is likely to have. Well, what the taper really means is we're going to go from buying 120 or 150 billion in treasuries a month or a week, and we'll take it down by 15,000 or 15 billion a month over the course of several months to get it down to zero, which doesn't mean we're selling bonds. It means we're not buying bonds. They're not even talking about selling them or quantitative tightening yet. We're nowhere near there. I think inflation is mainly transitory, but transitory in this case is probably at least a few quarters because of supply chain issues. And like I said, I don't see some things like rents and wages. I don't see those falling back until there's a recession. So as long as this expansion goes on, we're probably going to keep seeing, say, somewhere I would say between 2.5% and 4% inflation, probably on the 4% side. That, in my mind, is more than enough to keep real interest rates negative. It doesn't matter which party's in power in the U.S. Republicans actually run bigger deficits historically than Democrats do. Both of them are quite happy to do it right now. I don't see that changing. So we're going to see, the Fed's really painted into a corner. Their job is going to be to keep the bond market from freaking out as they keep rolling out these treasury issues, which they're going to do unless you go to MMT. And if we go to MMT, then all bets are off and you better buy gold stocks and metal stocks handed over fist, because the US dollar is going down the tubes if they do that, which is fine with me. And like I said, everybody's forgotten already, gold did have a big move next year. I think it's very easy to make the argument, really, that what we're going through right now is simply a consolidation, a larger bull move. There were 2 or 3 of these during the 2000s. If you think back to it, there were 2 or 3 very dead periods, and they weren't like a month. They were like a year and a half. U.S. dollar decline stalled out. That might be it for dollar weakness. Really, the big competitor is the euro. The euro was actually coming out of their deflationary period same way as the US is. In the case of the Eurozone, it's actually great news that they have a couple percent inflation now. I mean, they look like they're in a deflationary spiral. So I don't see them really wanting to screw that up, but it could be that they don't stay as far behind the Fed when the Fed finally does start moving rates up. And again, when they do that, I'm expecting very small rate increases. And this expansion coming out of COVID, I don't see anything in the short term that's going to stop it. This is probably the weirdest economic cycle in history. So honestly, I have no clue what's going to stop it. It's probably going to be something none of us have thought of, but I don't see any particular reason to think it's going to end soon or even soonish. And that being the case, you know, base metals are going to keep being strong. And I think gold will ultimately get stronger again. We are in the right environment for it. I think we're mainly in a consolidation. Hopefully then soon. That's it for me. That's all I've got. I'm going to introduce my first company presenter. Brandon was nice enough to say, I don't need your stinking bull market, and put out a really hot drill hole this morning. It's very, very impressive. I haven't really had time to spend a lot of time on the news release or the one from Tim this morning, but it was a great release. Those of you who aren't familiar, Brandon runs Fireweed Zinc. Fireweed has the Mac Pass project in the Yukon, arguably, I think, one of the best zinc projects in the world. It's going to be one of the bigger ones for sure, in my opinion. There's a lot of room for this thing to get bigger, and it's not small now. These guys have done a great job of keeping a tight share structure, pushing this thing forward. And Brandon's going to tell us what he's going to do for an encore. Take it away, Brandon.
Yeah, the encores keep getting harder and harder because we just keep raising the bar. You know, I've titled this presentation "Continued Exploration Success" because as big as the project is, it just keeps getting bigger. So without further ado, obligatory cautionary statements. And look, in summary, I'm not going to dwell on the market stuff. I think Eric hit that pretty well. You know, key thing is a lot of people don't seem to notice we are already in a bit of a base metal bull market. The zinc price where it's at now, in any other point in time, would have people exuberant. Now seems to be a muted response in the underlying, even producers, let alone you know, us poor juniors, you know, explorer developers. But you know, look, the light's going to turn on at some point, and the best companies are going to move first, and they're going to move the farthest. And I like to think, although I'm a little bit biased, that Fireweed is in that category of best zinc companies. You know, our 2021 program, we're just getting initial results in, and at the risk of sounding like a broken record, it is game changing again, right? So here we go, you know, 3-4 years in a row with significant discoveries of some sort, you know, the McMillan Pass project. And we're dirt cheap. Like, where are you buying a project of this caliber at this sort of price? You know, it seems absurd to me, but this is how irrational markets work. Yeah, look, I'm not going to dwell on the team. You know, John Robbins, our chairman, threw a quote in the news release today to say that, you know, he doesn't know that he's worked on an exploration project that's exciting to this. And considering the caliber of exploration projects he's worked on, it's a pretty strong statement. You know, the project, again, I think everyone's pretty familiar with this. So you're not going to dwell on the location, Eastern Yukon Territory, Canada. You know, road access, we can get heavy equipment in there. We did in 2018 a resource update in PEA, you know, which Eric kind of hinted at, that the existing resource was already pretty good before we started to get all the success. Pretty good. It was already pretty great before we started to get all the success. So, you know, key things is that's a snapshot at a point in time. It's a indicator of where we were in 2018, and just so much has changed since then. You know, we've got government support on the road. We've done great work at Tom and Jason, the initial 2 deposits, to improve and expand those. But really, it's been about the exploration success that's taking this needle and not like kind of ticking it up as, you know, sending it way forward. The little red box you see in the lower right there, that's what we had in 2018. That was the basis for that 2018 PEA and the underlying resource. And really, since then, we've taken this concept of this major basin bounding fault, a big crustal structure that seems to be the fluid source for these deposits. And we've taken that thesis and we've expanded that, and we've gone way west. We've made some discoveries out there, and this year and last has been focused on boundary zone area, specifically boundary zone and boundary west. Boundary zone initially, this had holes into it from Kamenko back in the 80s. They were drilling kind of low grade, big broad intersections. Interesting, definitely got your attention. We came in 2019 originally, 230 meters true thickness of 4.5% zinc. First 100 meters of that true thickness from surface, almost 9%. So when you consider like potential big scale open pit, scenario, this is absurd margin potential. So we looked at the potential for both high grade and bulk tonnage here, and it proved super interesting. And what we noticed was that the mineralization styles we're seeing here were not like what we were seeing at Tom and Jason. Tom and Jason being the classic, stratiform SEDEX or shale hosted base metal deposits. This hydrothermal breccias, clast replacement, big fat veins, you'd get a meter of 62% zinc in a pure sphalerite vein, right? And the different character of it kind of gave us a lot of head scratching about, well, what is this thing? And the pre-2020 concept was, this is probably a feeder zone. This is a big, broad feeder at this intersection of two faults. It's producing this widespread mineralization, modest grade, locally very high grade when you hit the big fat veins. And maybe if this is plumbed into a barite horizon, you'll get, that'll act as a chemical trap, and you'll get some sort of massive sulfides and continuous strata-bound deposits like you see at Tom and Jason, and like you see the same sort of thing happening at, other big deposits like this and deposits of this style like Red Dog. So, working on this thesis, we did a gravity survey and pushed west following that gravity anomaly, and drilling in 2020 and 2021, more focused west of boundary zone, which is kind of the lower right of this map. But boundary west, the first hits there immediately proved that thesis that we were looking at, which was, we saw this vein style mineralization. Then we saw a massive sulfide cap on it that pretty clearly from textures, from relic textures, was a outright replacement of a barite horizon. So you had pyrite, sphalerite, massive sulfides, pretty good grades. Seemed to be a bit of a trend. We didn't have a strong idea of the structure there. And then the big bonus in 2020 was what we called the lower sequence. And that was in much older rocks than we'd ever seen mineralized in this district. Was not something we expected to see. There to gain the grade modest, locally very good, but for what was unexpected results and non-targeted, was very, very, very interesting. And this kind of took the convention of this district of, okay, there's a very fine band of ages that you have to work in to find mineralization, and then just tossed it out the window. So this is the same, age of mineralization in the nearby Howard's Pass, which is the largest undeveloped zinc project in the world. So this led to a pre-2021, you see where I'm going here, again, pre-2021, with the new conceptual geology. It's like, okay, well, we have that vein style mineralization, and now we know the massive sulfides on top of it because we found it. And now we've got this lower sequence that is new and was bonus, and we hadn't really considered that to have existed before. So, this told us, like, okay, the system's much longer lived than we thought. There's a substantial metalliferous fluid flux here, clearly multiple pulses of mineralization. Like, this thing's a beast, right? Like what's going on at boundary and across the district is just really exemplifies, like, a crazy, district and styles of mineralization, right? So That led into the 2021 drilling at boundary zone and then west boundary, which led to today's results. And this again took the model and just tossed it out and forced us to rethink everything again. So notably, again, vein cell mineralization, massive sulfides on top of that, and then we had a gap in the strata, and then we hit a new like Tom Jason style, finely laminated, barite hosted mineralization layer that the grade was absurd, like 10 meters of 24% zinc and healthy 3.5% lead and 75 grams silver kicker, right? So for something again that we were not expecting to hit, this was an incredible bonus. And then interestingly enough, the concept had been, as we had thought about pre-2021, was that, oh, this is all stratigraphically above what we see, just east of here at boundary zone, and this is like the cap on boundary zone. But actually, as we started to see fossils in the shales here, which can be difficult to age, it led to a new thinking. And this is a bit crude because my geologist threw it together this morning and he did a good job. But now we know that boundary west actually sits below boundary zone, and then the lower sequence sits below that, and then boundaries on top of that, and then Tom and Jason are on top of that, right? So how many sequences do we have here? I don't know, right? Like the notion of an upper and lower sequence now has to be thrown out because we just don't know how many sequences there are. So this just further reinforces and expands upon this notion that whatever the dogma was historically about, oh, there's one horizon, it's the Tom Jason horizon, you got to explore that, everything else is garbage, is obviously nonsense. First off, Tom and Jason aren't the same horizon. Second, we're seeing numerous stratiform mineralization horizons below that, and then we're getting these vein style mineralizations that are cross-cutting that. And so you can see like various drill holes kind of sketched onto here of where we've been drilling over the years. And so this kind of reflects as well that, when you're drilling a boundary, they'd hit a certain layer and the mineralization would peter out and they'd stop drilling. But should they have kept drilling? What sits below boundary? What sits below Tom and Jason? There's so much depth potential here that's never been explored that we're really excited about. But it's not just taking the known deposits and going to depth. We've been firming up these targets and we have a pretty good idea of where this major basin bounding structure intersects second order structures. You get the formation of these deposits and through a series of like gravity surveys, geochemistry, tracing mineralized boulders up ice, and then sometimes just stumbling across a mineralized outcrop. We've got a new zone, the Quinton zone, found by world famous geologist Quinton Wilms, who works for us. And, that's a sphalerite and galena outcropping in volcanics, completely unexpected, existing there between end zone and boundary zone, but with a certain periodicity that we've come to expect with the formation of these second order deposits. So it does make sense. So it's just a wealth of opportunity here. And it's kind of led to my next cheeky slide of like, what does it take to find a zinc deposit at Mac Pass? Well, it is fish in a barrel. It is a wealth of opportunity here, far more targets than we can drill in any year. And what it's shaping up to be is we have no intention of being perpetual explorers. We're not going to explore here forever and never build it. We intend to take a look at that 2018 PEA and look at all the value creation opportunities that exist inherent in boundary west, engineering improvements, the funding of the road, and some of that blue sky exploration, and build on this. And that previous, $450 million after tax PEA is a snapshot of a point in time that looks nothing like this. We really expect the next study, which is going to come after next year's drilling, we hope, is going to blow that out of the water. And the terms like tier one get abused and abused a lot. And to be clear, I don't think Tom and Jason in that 2018 study would constitute a tier one zinc mine in production. But what we're shaping up here is something that probably will be. This is something that's very potentially going to be one of the 10 largest zinc mines in the world. first or second quartile costs and a long multi-cycle mine life, and the sort of mine life that you've got 20 years of, resource ahead of you constantly because you're exploring and expanding. So, the objective here is not to drill out the biggest resource in the world and be making sure we've, flesh out years 45 to 50 in the mine life. It's not a sensible use of our time or investor money. It's time to take this seriously and put the big boy pants on and get down to work here. So we got some big tasks ahead of us, but this project is such an amazing opportunity and such a rare thing for a junior to be holding, that we really just have to go for it. So that's it, so I will turn it back to Eric. We're here for the Q&A, and you can always reach me on my email address there, or phone me, or tweet at me. So thank you very much, everyone.
Thank you, Brandon. Great presentation. That project just gets crazier and crazier. I mean, today's drill hole is it's just nuts. Like the thing just never ends. It just keeps coming and keeps coming. I would agree with you. I really don't see how this thing doesn't end up being a tier 1 deposit. And tier 1 deposits, my mouth to God's ear, tend to get bought out. Those are the ones the big boys look for first, because everybody wants, especially base metal. Base metal producers want 20, 30, 40, 50 years of production. They know what cycles look like. They've lived through enough of them. Nobody really likes buying a 1 or 2 cycle mine. They want to buy a 5 cycle mine. And certainly it looks like MacPass could be something like that. My next presenter is already in production. So Ralph has the advantage of getting a little bit of joy from the metal prices rather than grinding his teeth because his stock isn't going up. I don't generally start following producers. I certainly follow companies into production. Altaley was an exception because when I looked at their current in production mine, Campo Morado, I could see so much room for that mine to get better and so much room for them to grow. They can grow the resource, but just grow the revenues and grow the top line and the bottom line with a bunch of improvements that Ralph is in the middle of working on. But on top of that, they were doing a restructuring that totally cleaned up their balance sheet and also brought in the money for the second mine, which is a precious metal mine, which is under construction now, which I believe will be at least they'll be starting to put ore through the mill probably by the end of the year. I think this is a great growth story. Lots of people lay claim to being growth stories because that's what guys on the tech side and the generalist side love. But I do think Altaley is a genuine growth story that's going to see big increases in both revenue and profit over the next couple of years. So if you're just being introduced to it now, your timing's good. So now that I've given you no act to follow there, Ralph, why don't you come in and explain why I'm not full of crap when I say you're going to be such a good growth story?
Great. Thanks, Eric. Really appreciate it. So, Altaley Mining Corporation is building Mexico's next mid-tier metals producer. We have Campo Morado in production. That's the one shown here on the right. And we're building Tabahueto, which will be 1,000 ton a day underground gold mining operation. Okay, technical difficulties here. All right. Forward-looking statements, obviously everyone's seen these, so please read at your leisure. Here's our project locations. Tabahueto up in northwestern Durango. This is the gold mine we're building. Campo Morado down in Guerrero. We're fully financed for growth. We're completing low-cost expansions, optimizing mine plans on Campo Morado, and we have near-term growth resource potential on both our projects. Exploration potential on both of these is quite good. District scale properties, both of them. We own both 100%. So we're constructing 1,000 ton per day operation. It's about 70% complete at Tabahueto. That mine, as Eric said, should be up in operation at half capacity near the end of this year. We'll bring it into full capacity early next year. We should be producing about 25,000 ounces of gold on an annual basis, 400,000 ounces of silver. Low all-in sustaining cost is estimated at around $800 per gold equivalent ounce. We have a 9-year mine life in our current mine plan. There's 20 potential years based on M&I resources, and excellent potential through exploration to double or triple the size of this mine. That would be our plan over the next 2 to 5 years, is get it drilled again, bring in new resource reserves, and expand the size of the mine. Campo Morado, currently the 6th largest zinc concentrate producer in Mexico. It's an underground mining operation. It's around 2,000 tons per day on average. We have produced about 21 million pounds of zinc up to the first half of this year. We project we'll get to the 43 million pounds of zinc if production continues the way it has in the first half of this year. Q2 2021, all in project costs, or C1 cash costs they're called, is around 48 cents per pound of zinc produced. All in sustaining cost at 77 cents per pound of zinc. So we've turned this into a pretty low cost producer at this point in time. And obviously metal prices are very good. So we're making decent money these days. 7 years in the current mine plan, there's 20 years of potential available in M&I resources. So investment highlights, as I say, stable and growing cash flow from Campo Morado. We're generating around $2.1 million in EBITDA monthly. We have a pathway to increase production to 1,000 tons per day to get up to 3,000 tons per day, simply by bringing online a flotation circuit that was under construction from the previous owners. It's around 80% complete. We'll get an engineering study done on that and bring it up to current cost and decide whether we'll move that forward to get it into production. With exploration and development, we believe over a longer term, maybe up to 4, 5, 6 years, we could see a pathway to double the size of this mine up to 5,000 tons per day. At Tawa Hueto, we have recently completed a $25 million funding, which gives us all the money we need to finish construction, 70% complete, initial production near the end of this year. We'll be producing 69% of the revenue from gold, 12% from silver, and the rest from base metals. And once again, exploration potential is excellent here and a pathway to double or triple the size of this operation over the coming 2 to 4 years. Once Tawa Hueto comes in production, we expect to get a re-rating as a precious metal producer because we'll be producing about just under 60% of our revenue will be from precious metals. At this point in time, we're trading 2.2 times enterprise value over EBITDA, and that's around 75% below other Mexican metal producers, our peer companies. And we've really strengthened up our management team recently. So quickly we don't have a lot of time here, so just outline a couple of people. David Rhodes is our chairman and director, recently joined us. He is involved and one of the main guys in Endeavour Financial out of the UK, and this group has raised billions of dollars for mining companies. Mark Bailey used to run mine finders in Mexico. He's now retired, but lots of experience in building mines. We have a very senior mining engineer, 40 years experience, just joined us. Natasha Kernan, very smart lawyer. She was ranked as the top 40 under 40 rising legal stars in New York from the Financial News. Over here, Ruben Alvidrez is the brother of the CEO of Fresnillo, one of the larger mining companies in Mexico, and his father was now retired, but a senior member of Peñoles. So we have very good contacts throughout Mexico. Armando Alexandri's built mines in Mexico before. He's joined us as our COO and is handling the construction at Tawa Hueto and overseeing operations at Campo Morado. So quickly talk about Tawa Hueto. This is the gold mine that's in construction. Our probable reserves are 3.2 million tons at a high grade of 3.4 grams per ton gold, 41 silver. Once this is in production, this should be one of the top 4 or 5 highest grade gold producers in Mexico. M&I resources 6.1 million tons. That includes the reserves. So with reserves, we have 10-year mine life. With M&I resources, we could bring this up to 20-year mine life at 1,000 tons per day. Gold equivalent basis of all metals, around 42,000 ounces of gold on an annual basis at 1,000 tons per day. 25 of that, 1,000 ounces of that will be gold production. 808 is estimated are all in sustaining costs. And we're initially going to be producing around 500 tons per day and near the end of this year. Early next year, ramping it up to 1,000 tons a day when we bring the second ball mill online. This shows the revenue portions of revenue. So 69% will be gold, 12% from silver, 13 zinc, and 6% lead. And then we go into a few pictures of the construction. This is several months ago. This is where it's looking fairly recently. Inside the mill, there's their filters here. Carry on. Quickly talk about the ultimate potential of this project. So this is a district scale project. It's about 12 kilometers long by 8 kilometers wide. Our main structure is this red structure. It's the only structure we've really had any significant drilling on. It goes from Cinco de Mayo up to this Perdido zone. We couldn't drill it here because of overlying cover, too deep, but we pick it up on the other side. It actually goes all the way down into this arroyo here. So from here to Cinco de Mayo is 3.5 kilometers. And I believe it will continue under this younger capping rock. We'll be able to explore it from underground and likely goes as far as this river. The ultimate potential of this district is over 7.5 kilometers, our most northerly vein up here, down to this area in here is about 7.5 kilometers. And this area is a window, erosional window, exposing the lower productive rock. The younger rock is covering all of this area over in here. And I believe that these structures will continue underground over here for future exploration potential. Our only competitor in this district is Fresnillo. They have this sliver of ground around us. And so this is ultimately a large epithermal system with multiple targets. These are all veins we know of. They need to be followed up. We have drilled 6 holes on Texcalama, and it's very similar mineralization as we see on our main structure. This is what the ore bodies look like from underground. So a longitudinal section through that area, through that red line on the previous slide. Where it is outlined in blue, it is a reserve. Where it's not, it's a resource. Quickly, just because time is short, this area in here is open for exploration. We've drifted in 150 meters past the last known drill hole in mineralization all the way. We expect to be able to explore this from underground and add another third to our resource base, our resources on the project. Let's talk quickly about Campo Morado. This is our zinc mine in production at this point in time. This is a tailings facility, which we hope to reprocess. There's a lot of metal in there that was not recovered. M&I resources, 16.6 million tons, 1.7 grams per ton gold, 123 silver, 0.8 copper, and 4% zinc, 0.9 lead. This is a high-grade volcanogenic massive sulfide deposit. Unfortunately, we're only recovering about 15 to 20% of the gold, and we're recovering 30 to 40% of the silver. We have a 20-year mine life on M&I resources, 77 cents per pound of zinc produced, all in sustaining cost, 48 cents per pound for C1 cash cost. And we're earning about $2.2 million EBITDA monthly. A few pictures, tailings facility, crusher. This flotation circuit is the circuit I mentioned before that is available to finish completion of the construction, add 1,000 tons per day to the operation. We hope to do that early next year unless we have a different pathway, which I'll show you in a minute. Over the last year, we've really increased our net revenues up to about 18 million in the Q2 2021, and concentrate production has slowly and steadily increased. So we've really brought this project in line and making decent money right now. Where are we going with Campo Morado? That flotation circuit, if we bring that online, we can increase by 1,000 tons per day, get the engineering study done later this year, and we can potentially bring that online. However, we're doing some optimizing and a lot of metallurgical work right now. Some of the metallurgical work in the past, gone through first phase testing, has shown a leach ox process that's been able to increase production of gold up to 65%. That's around a 400% increase to what we're currently obtaining. And 81% recoveries for silver. That's a 200% increase to what we're currently getting. So this is a pathway that we see of being able to really improve this project. We've brought on a pilot plant, an Imaflot pneumatic flotation pilot plant that should give us better recoveries of base metals. We hope to produce a pyrite concentrate that we might be able to sell that would be gold rich, because a lot of the gold is tied up in the pyrite. 40% of this deposits in Campo Morado are iron, so a lot of pyrite. And we can take the tailings or the pyrite concentrate through the leach-ox process or the Albion process, which are forced oxidation and leaching of metals. And thereby, we feel we can really increase the revenue at the project. So we're currently sampling the historic tailings. We're going to be running those through the Imaflot flotation as well as testing leach-ox and Albion. We hope that sometime late this year or next year, that will give us a pathway forward to implement this technology and really ramp up the revenue at the project. We have a lot of growth potential from exploration on the project. We expect that once we get the drills turning again, we could increase our resources and maybe double the size of this mine on a long-term basis. This is what the ore bodies look like, a long section, known ore bodies so far. This G9 Southwest area is the most production from the previous owners, best grades, best recoveries. We've been mining this Al Largo right now. We're currently dewatering down to G9 Southwest to expose some mineralization that has been left down there. That plus the remaining ore on El Largo will give us about 2 years ahead. And then we're going to be moving towards this copper gold rich zone in the future, and once we perfect the metallurgy on that. This image up here shows you geophysical, borehole geophysical anomalies below the existing ore bodies. This red area is El Largo, so that's there. You can see that all of these ore bodies will occur underneath this existing known ore bodies. So these are future exploration targets. The previous owner did drill some holes here, intersected very good intersections of massive sulfides that need to be followed up. We hope to bring some of these into our mine plan in the future, get the drills turning for these areas underneath, and bring in new resources and reserves. And on a property scale basis, that previous slide I just showed, all of the ore bodies are within this blue ellipse. These are all property scale, high level geophysical, geochemical anomalies that were developed by the previous owners near Star. And these are ready to drill. We just have to locate them, set up a drill and test them. Any one of these could bring in new ore bodies into the mine plan and give this project a long, long life. Our market capital, share capital, we're trading around 51 cents, highs and lows 15 to 80 cents. We have 254 million shares issued. Options and warrants will bring us up to 333 million. Current market capitalization about $102 million US, with loan debt and cash on hand about $11 million, loan debt 38. That gives us an enterprise value of about 160 million US. We've had a pretty good chart over the last little while, building up, getting Campo Morado production going and moving forward on our construction at Talahueto. A compelling evaluation and a re-rating opportunity ahead of us. Here we are at 2.2 times enterprise value over EBITDA. This is polymetallic producers in Mexico, around 8. These are gold producers here in the neighborhood of 4. So we have a lot of room to grow as both a polymetallic producer and a junior gold producer. ESG is strong. I'm running out of time, but I would say that we have very strong ESG in all aspects, and happy to give you more information on it. Please look through the presentation on our website that explains in a lot more detail. And my timer says I'm out of time. So I'll just flip to the last slide and say thank you very much for listening, and I hope you follow Altaley Mining Corporation.
Thanks very much, Ralph. I think this is a very compelling story. When I looked at the growth just from essentially getting Campo Morado back to where it should be operating properly, or really better than it did historically, which these guys have been doing, plus Talahueto, you've got a pretty compelling growth story. But I would suggest people that don't know this story, if you don't own the stock, you don't know it, take a look at it, and particularly take a look at that network. It seems like a side issue, but it's not. If they can get that to work and add that capex, which wouldn't be large, to the milling operation, bring those recoveries up to, I've run the numbers and they're pretty crazy numbers. I mean, the revenue and the bottom line goes up a lot if that stuff works. That's on top of everything else. So again, it's a great window to look at it. Another company where it's a great time to look at it is my next presenter. Mike has shaved his beard and bought a toupee. Oh, no, that's the other Mike, sorry. This is Mike Pettigall. He's with Vizsla Silver, and Vizsla has had a great year for the right reasons. I mean, they now own 100% of their Panuco, which is essentially a silver camp. They've delivered tons of great drill holes. They're scheduled to have a initial resource out early next year. Importantly, in my opinion, this project is one that, because there's a small existing mine on it, it's essentially a permanent project. Getting it going again wouldn't involve huge timelines, which of course is a misery for miners everywhere. These guys don't really have that issue. Lots of cash, 10 drills. This is a great story that I think is just going to keep getting better. And Mike is going to tell me why that's a smart thing for me to say.
Excellent. Thank you, Eric. So everyone, nice to be here. My name is Mike Pettengell. I'm VP of Business Development and Strategy for Vizsla Silver. I'm going to talk about Panuco, our flagship silver gold asset in Sinaloa, Mexico. And as Eric mentioned, we're actively advancing toward the maiden project resource in Q1 of 2022. So again, flipping over the forward-looking statements, everyone can read these at your own time. Company snapshot, just a couple key things to note here. 129 million shares outstanding. We've got about 57 million cash in the bank, zero debt. Between our warrants and options, we should bring in around 100 million. That's average price at 276, and that's around July of 2022. If you look at our shareholder, important thing to note up there is management directors and advisors hold roughly 16% of the outstanding shares of the company. And we now have analyst coverage from Canaccord Genuity and PI Financial. Strong management and board with a combined 185 years of experience in exploration, development, capital markets. A few key names to note here. Craig Perry, most of you know, he's executive chairman of Skeena Resources, former CEO and founder of ISO Energy, and founding director of NextGen Energy. Also on our board is Simon Schmerlich. He's the current COO of Ausenco Engineering, 20 plus years of experience, mine development and commissioning, primarily in Latin America. To note, Ausenco is currently building Silvercrest Las Chispas asset just up the road. So the project itself, we're located in Western Mexico, just off the border, or just about 45-minute drive from the coastal town of Mazatlan. Situated along a prolific silver trend that hosts the majority of the country's epithermal deposits. Notably is First Majestic's San Dimas mine, it's located just 80 kilometers to the north. Panuco is a 100% owned past producing district that has never been systematically explored on a consolidated basis. The property hosts a plethora of operating infrastructure, including power, access to power and water and road network, and also includes this permitted 500 ton per day El Coco mill. We are actively advancing two high-grade veins at Napoleon and Tajitos, and this is going to form the basis of our maiden resource in Q1 of next year. And we are targeting it with 10 drill rigs, 6 focused on definition and 4 on exploration. So Panuco, it's a multi-episodal epithermal vein field. And we kind of break out the vein field into several corridors, 4 active corridors we've got highlighted here. And you can see in the lower left corner, the Western District is really where we're focused for our resource drilling on the Napoleon corridor and the Cinco Señores corridor. At Napoleon, we've now traced mineralization over 1,000 meters of strike and down to a depth of roughly 370 meters. Through 105 holes, we've got a weighted average grade width profile of 482 grams per ton over roughly 3.5 meters. Initially, our interpretation was a high-grade control on a northern plunge, a steep northern plunge. But as we continue to drill, the new interpretation has suggested that we've got a gentle southerly plunge to our high-grade mineralization. And more importantly, what we're really seeing is that we've got increased grades and widths as we move in this direction. So this has really led to kind of our new revised exploration model. And right in the center here is where the bulk of the main resource drilling has occurred. We've now tested the flanks of the Napoleon corridor, and based on metal zonation, alteration and geology, we've now been able to situate ourselves within the epithermal profile. We've got a gold-rich zone, which would be shallow to the south, and more base metals rich we're identifying to the north. So moving forward in the near term, our focus for continued incremental step-out drilling for our resource area will be in this section here, along strike and down plunge to the south, as well as up section in this area. We're doing 100-meter step-outs with 50-meter fans. This is just showing the progression of Napoleon over the past 11 months. We've had tremendous success. You can see the discovery hole there, MP 2007, and how it's kind of tracked. I think the key thing here is that you can really identify that this is a true panel of mineralization. And that's important from a mining point of view, as it can support many open faces that in turn could feed a larger scoped processing facility. In addition to Napoleon, we've got the Tajitos vein that we're targeting for resource delineation. It's about 500 meters to the east of Napoleon on the Cinco Señores corridor. We've got a lot less drilling here, but comparable grade width average at 500 grams per ton over just above 3 meters. The difference really in Tajitos and Napoleon, aside from a slight change in orientation, Tajitos does not have the base metal component that Napoleon does. Napoleon's roughly 85% precious metals, and of that, around 56% is silver, while Tajitos is solely precious. For those doing the calculation at home, you can use 2.72 as your specific gravity for both Tajitos and Napoleon at this time. So aside from our resource drilling, we've got significant exploration upside in the district. Again, just these 4 main vein corridors that we're targeting. The bulk of past production in this district was focused on the Animas corridor, where about 100 million ounces silver equivalent was produced from 7 high-grade ore shoots. That's why you see the El Coco mill is located in that area. We still are targeting historic mineralization to use as a vectoring tool to find new mineralization or historic workings. And that's really the bulk of our exploration work on that eastern part of the property. And we continue to have success, highlighted by recent results from Cordon del Oro, 1.3 kilos over 2 meters. Additionally, we've had tremendous success with EM that's directly detected massive sulfide mineralization in the Napoleon corridor. This has led to the discovery of the recent high-grade Josephine vein. So we did a fixed loop trial EM in the spring and laid it over the Napoleon corridor, correlated to this known massive sulfide mineralization at Napoleon, lit up with lots of other indicator plates that we then drill tested. One, the Josephine vein, we hit, but as you can see here, there's a whole litany of other targets that are just ready to be tested. Even one just 200 meters to the west of Josephine, you can see on that section A to A prime. EM has only really been tested on this one specific postage stamp. So plans to fly the entire property with EM and MAG will come later on in this year once the rainy season ends. So as we said, we're actively advancing towards maiden resource in Q1 2022. We're very happy that we now control 100% of the district, including the fully permitted El Coco mill. We've now completed over 75,000 meters of drilling, leading to the discovery of multiple high-grade veins, 2 of those which we're now actively delineating resources on, while in parallel exploring several other high-priority targets, some of those EM ones we just mentioned. We've got preliminary MET testing ongoing. We're using ALS and CAM loops. We've got about 4 kilos of representative composite material from Napoleon in the lab currently, and expecting those results Q4 21 ahead of maiden resource. In addition, we've got initial geotech and hydro studies, as well as baseline environmental work ongoing in the background to support any future development scenario. So again, the next steps, we're going to conduct property-wide EM and airborne MAG in late 2021 and publish our maiden 43-101 resource at the end of Q1 2022. So to summarize here, We've got multiple near-term catalysts. We're drilling over 100,000 meters, fully funded, resource discovery-based program with 10 active drill rigs. Again, primary goal is to establish this maiden resource. And I will note this is an interim maiden starter resource. We have so much potential here. And that's shown by all of these underexplored targets. 33 out of 117 have been drilled to date. The EM correlating to known mineralization continues to support this significant exploration upside. We also have this optionality advantage with the production infrastructure existing on site, where we can potentially amend current permits to suit an expanded operating scope and really accelerate that pathway to production. And finally, we're well financed. We're fully funded for up to 2 years of ongoing exploration and development without having to go to the market and potentially dilute. On a burn basis, you can think that we'll look to likely spend around 15 million by the time we put out our resource at the end of Q1 2022. So yeah, we're continue to be encouraged by the results that are coming from the drill bit, not just at Napoleon and Tajitos, but elsewhere across the property. Again, active drilling, so stay tuned for more very intriguing results. Back to you, Eric.
Thanks very much. Great job, Mike. You know, this is another great story. I'm really happy to have in the newsletter. I'm really happy that I own a bunch of it. It does remind me, and you know, and I know people don't like to make comparisons like this, and I tend to shy away from it myself, but it does remind me a lot of Silvercrest, and that's, you know, I've known Eric and Scott and Barney for over 20 years and followed Silvercrest. The previous Silvercrest pretty much from day one, and then the current Silvercrest literally from day one. And there's a lot of similarities here. It's one of those great projects that you find in Mexico sometimes that have got the great thickness combination where you can see the potential for it to be a very, very high margin project. And again, not to sound like a broken record or say I'm foretelling anything, because I'm not. That's the kind of project that large companies look for. I mean, that's what they buy. So it's really that simple. My next presenter, Tim Moody of Pan Global Resources. We're jumping continents to Spain here. Certainly, Tim has more than his share of experience being on the other side of the M&A business. He certainly knows what large companies buy, because that's what he did for 15 or 20 years. He was the guy writing the check, not the guy getting the check. He's latched onto a great project in the Iberian Pyrite Belt. If you're not familiar with it, it's arguably, I think, the world's premier VMS camp in the world. I mean, there's great VMS mines there, high grade, highly profitable. Tim and Pan Global have discovered a new one at La Romana. They've been drilling there for a little over, I think, a year and a half now, but he's really started to ramp things up, build up the treasury. He keeps hitting on pretty much every drill hole, and there's a lot of target here. And the targets he's got in front of him, in addition to what he's drilling, are targets that have been gravity targets, which have been highly successful in the Pyrite Belt. When you have a really good gravity target, you tend to find mineralization. He's got a lot of gravity targets. He's definitely got his work cut out for him. So tell us what you're doing to keep yourself busy these days.
Yeah, thanks very much, Eric, and good to be talking again at the Metals Investor Forum, even if it is online, and to update everyone on our copper and tin discovery in Spain. If I can, forward-looking statement. All right, I'll just give a bit of a preamble. I think Pan Global represents a sort of great investment opportunity, and there's some very good reasons for that. I think, yeah, firstly, what we've got is near surface high-grade mineralisation in a established mining district where mines can be built fairly quickly. So, and that's at a time when making new discoveries, particularly copper discoveries close to surface, is becoming more difficult, and building new mines is becoming more challenging. So I think we're in a great position where we're located to potentially jump the queue when it comes to putting a new copper mine into production, should we be so fortunate. at our projects in Spain. So just to recap on some of the highlights, as you sort of alluded to, Eric, we've only drilled one target so far, and our first drill holes in that target were discovery holes, and that was testing a large gravity anomaly. So you can see the results there. Hole 2, 20 odd metres at 1.5% copper equivalent. It was from near surface, included a nice high grade section there of over 7 metres of over 3%. Importantly, that included some high tin grades, and tins, apart from its obvious commercial value, it's what it means from an exploration point of view. High tin tends to only be associated with the very large copper-rich VMS systems. So it's a very good positive indicator from an exploration point of view in terms of size potential. And yes, just about every hole really is hitting copper mineralisation. We're continuing to do that. We're up to hole number 90 now. The geophysics works very well, particularly the EM and the IP at directly targeting mineralisation. As I said, we're surrounded by mines held by major mining companies. Permitting here it can be very quick. It's got excellent infrastructure, and the size potential where we're drilling at La Romana looks very good, and there's excellent exploration potential in the surrounding ground, as I'll try and show you. So the Escacena project is at the eastern end of the Iberian Pirate Belt. It's I think, like you, Eric, it's probably the premier volcanogenic massive sulfide district in the world. It certainly has its large share of the very largest VMS deposits. There's 7 operating mines in the belt. It's got excellent infrastructure. Every inch of it is covered by mineral rights with major players. And those who are following the news in this part of the world, there's also some big company M&A activity at the moment with people looking at buying Matz's operation. So that's all positive, I think, for what we're doing in this part of the world. So this slide just shows the yellow outline is our mineral rights, and the La Romana project down here in the south. And I'll just point out the sort of large area surrounding it called El Andalus, which is an application which we're hoping will be granted very soon. We're certainly getting close, but you can see here the proximity. That area has some excellent exploration potential. And anyway, you can see the proximity to some of the other mines in the area. ATLY is mining at the old Rio Tinto mine. It's probably the world's largest volcanogenic massive sulfide deposit anywhere. Then off to the east, you've got First Quantum mining Las Cruces, which was one of the highest grade open pit copper mines in the world. And then right next door to us, Grupo Mexico looking to restart Boliden's old open pit mines. Just 600 with one of those mines, just 600 metres from the edge of our property. So we've got a bunch of targets in here and a lot of work to do. So a bit of an update. We're continuing to expand the area of mineralisation at La Romana. We've got 2 drill rigs still operating. They've been going full speed since January. We've drilled over 60 holes since January in what we're calling our Phase 4 program, and we're waiting for results for more than a third of those holes. So there's been quite a backlog in results, like many companies have been facing. In fact, we've just had the dam seemed to have burst in the last couple of weeks, and we got a whole bunch in, managed to get some news out today. So, but the grades and thicknesses, geometry all look very suitable for open pit mining. And we've got results pending for a number of holes with strong visible copper mineralisation. But as I said before, there's lots of size potential here. It's open in most directions. You can see a small picture here down the bottom on the right. We've tested less than half the strike potential, and we've got at least another 10 targets that look just like La Romana that we haven't even got to yet. So the latest results just from the Phase 4 drill program, we've continued to hit copper in just about every hole. We've got near surface copper mineralisation now, sort of continuous over about 1 kilometre of strike and at least 300 metres dip extent as well. It's open along strike and down dip in various locations. You can see some of the results from the phase 4 program, hole 40, 50 odd metres, the percent copper equivalent, and a good high grade section there, over 25 metres at nearly 1.4% copper. You can see the results of some of these others. Hole 74, which was in the news release we put out today, which included some more good results. So 6.5 metres at 2.5% copper equivalent, again, including 3 metres of over 5% copper. And underneath that intersection was another 20 odd metres of footwall, lower grade footwall mineralisation in the footwall. As I said, we're waiting for results for a number of other holes with strong mineralisation. You can see hole 77 and 85, bit of drill core. That's pretty good looking stuff. So, all right. So just a quick look at the drilling area shown here. The drill area spans now over 1 kilometre east-west by more than 300 metres north-south. The holes in red are those that we've reported, and the ones in yellow are those we're waiting on results for. And we've got, as I say, two drill rigs operating there at the moment. We are starting to see some zonation with copper and tin over in the west, progressing to a copper only, no tin, and then a little bit of zinc as we go further east. But it's completely open to the west, completely open to the east. You can see the mineralisations coincide very well with these conductor plate anomalies shown here in pink and yellow. But yeah, completely open in various directions. Some of the latest results highlighted in orange here that were put out in today's news release. Just draw your attention to hole 74, 6.5 metres at 2.5% copper equivalent here. Hole 62, another 7, nearly 8 metres at 1.4%. Just shows the mineralisation is still completely open and alive and well down dip. And off to the west here, hole 48, and the westernmost hole with another 20 metre intersection showing it's still alive in that direction as well. So just another view looking down towards the southwest with all the drill holes so far. And you see a strong coincidence of the copper mineralisation with the geophysics. There's just 3 IP chargeability anomalies and some the EM conductors. And much of this conductor here is still untested. You can see the geophysics is indicating potential for mineralisation to extend quite a way down dip. So there's plenty of room for this thing to grow in several directions. And you can see another target off to the north here, large IP anomaly, which we're looking to test as part of this program as well. So yeah, this story is not over yet. Few cross sections, just again, very simple geometry, 20 to 30 metre thickness, very consistent with, importantly, with high grade close to surface. You can see that again in both these two sections, 30 metres at the percent copper equivalent here. And then the next section over another 26 metres at 1.3% with, again, high grade sections. Step over further, there's a couple of the original discovery holes. Again, very good grades, close to surface, simple geometry, open at depth. And stepping over further, some really much wider intersections. Hole 40 that we drilled earlier this year, 50 odd metres at the percent copper equivalent. Bit of supergene mineralisation as well up dip. We're waiting for hole 64, which has supergene chalcocite visible over quite a thickness. Again, open down dip. We've also hit some very high-grade massive chalcopyrite, coincident with one of the downhole EM conductor anomalies. Very dense mineralisation, so specific gravities of well over 4, and just massive chalcopyrite. So very rich-looking mineralisation. Again, it's open down dip, open in various places. And then again, further east, one of our easternmost drill holes, some of the supergene mineralisation. So as I said, we're seeing some of this very well-developed supergene enrichment. This is what they've been mining at the Las Cruces mine just down the road. But yeah, again, very, very high grades here and some massive chalcocite close to surface. All right, so just stepping back a bit, you can see the drill area, there's some old geophysics showing the potential here for another 0.5 kilometre to extend the mineralisation half a kilometre to the west towards the old Laramana mine workings, perhaps another kilometre further to the east, and then some satellite targets up to the north that we're looking to drill. So, as I said, less than half the strike potential tested so far. Plenty of room for this to grow quite a bit. Now, stepping back a bit further, there's Laramana, where we've been drilling. This is the yellow area is the yellow Andalus property that we're expecting to be granted very soon, where we've got a bunch of large gravity targets. As I said, Laramana was a gravity anomaly to begin with. The Los Frailes deposit right near us was discovered by gravity. So was Las Cruces. So gravity anomalies in this part of the world is very good news. We have at least what looks to be 2 clusters of large gravity anomalies in this, mostly in this Al-Andalus area. You can see the Neves Corvo deposit, which is again a cluster of large massive sulfides at the same scale. So you can see the potential here. In fact, we've got a bit of a head start. Exxon drilled a hole. It was their last drill hole in the area back in the mid-1980s, 9.5 metres at 1.4% copper that's never been followed up, 4 kilometres away from where we're drilling at the moment. So, I think we've got very good potential here to make further discoveries in this property. So next steps, we're continuing to expand the area of drilling, push the boundaries in all directions. We've got sort of potential here to convert it to resource pretty quickly when the time's right. The focus is really on how big is it going to be. We're also waiting on some geophysics. We've got some metallurgical test work started with 5 sort of 40 to 50 kilo samples, looking primarily at the copper and the tin mineralisation. But as I said, the big thing is getting the Al-Andalus property granted. We've planned a large high-resolution electromagnetic and magnetic survey that will be used to directly detect mineralisation and help prioritise which of those gravity targets we go after. We'll also look to be drilling the La Jarosa target that I just mentioned, pretty much just as soon as we get access to the ground. We've got plenty of money in the bank to really step up the drilling, and we're looking to really have a number of drill rigs turning, hopefully by the end of this year and well into next year on a number of new targets. So plenty of money in the bank. We completed a financing back in June, oversubscribed, raised nearly 15 million, got another 10 million from warrants that were exercised. All the warrants were exercised in August. So we're sitting on over 15 million in the bank today. We've got potentially another 2 million to come in December from the exercise of warrants. So we've got plenty of money here to fund all the exploration we need well into next year. And hopefully we've just sort of opened the chest a little bit. And with Laramana, and as we sort of lift the lid a bit further, we're going to make some more discoveries going forward. All right, so check us out. I think Pan Global's got lots of potential here. Thanks, Eric.
Thank you, Tim. Another great story. I mean, all 4 of the companies that presented today, they're all companies I'm not insignificant shareholder in, and they're all pretty high conviction, because of the kind of success you've seen that in all 4 of these presentations. Management groups that deliver, you got to have great projects. I'm not one of these management only guys. You got to have great projects. At the end of the day, it is an explorer. It is a development company. There's got to be something to develop it. All 4 of these companies have got great projects. That one of them's got a mine already. It's going to have 2, and the other 3 projects all, to me, look like projects that are going to be mines. I'm very comfortable saying that. I don't know when or who's going to build them, but I think that's what's going to happen. We don't have a lot of Q&A time, as it turns out. And again, feel free to send questions in, because I can deal with questions. I'm going to be doing one-on-one interviews with all 4 of these gentlemen over the next few days. So, feel free to send questions, and I can just try to deal with them then. The first question I got is for Brandon. Basically, the questioner asked if you could describe the level of interest among senior and mid-sized base metal producers. Essentially, is anybody knocking on the door or looking to get access to data realm? I realize you're probably constrained in what you can say, but do you want to make any comments about that, Brandon?
Yeah, funny, we did an audit of our CAs that we had signed to see how many of them actually forbid the disclosing of the fact the CA was signed. It's not as many as you think.
Okay.
Nonetheless, it would be vulgar to say who we had signed CAs with. But look, this sort of stuff gets the attentions of those names, and I've said this before, that when we had the town hall last year following the discovery of Boundary West, there's 120 investors on it, and there was 4 people representatives from 4 different majors. Right. During the deadest time of 2020, I think it was, or maybe it's 2019. I got, we put out some results, and I didn't get great results. I didn't get a single email from an investor, but I got an email from someone in a major. Right. Like this, projects like this don't like, they're on their radar, right? So, it's we're pretty happy with that, and I think the key thing for us is firm it up and de-risk it, and show them that they want it and can build it.
Okay. The other question is actually for me, and it's a good question. I completely understand the logic of the person that asked the question, and essentially it was that I said that bond traders don't appear to be concerned about inflation. They're certainly trading bonds in the treasury market in particular, like they think inflation is going to be transitory. And the questioner asked, how does the Fed's being such a big player in the market affect things? It does. And I probably should have mentioned it. I mean, the Fed is, when the Fed talks about their QE program, essentially is what it is. They're buying 120 billion in bonds a month. It's not all treasury bonds, though. Keep in mind, a significant portion of what they're buying is actually MBS. They're in the mortgage markets. That not that they look to me like they need any help whatsoever, but that is where a lot of the buying seems focused. And yes, they are a big buyer. And yes, as they taper off and stop buying, that might have some upward pressure on bond yields. I wish I could tell you the specific title of it, but there was an article, and it wasn't long, it was in the last week or two, out of Bloomberg, actually, talking about the treasury market. And part of the discussion was, to the surprise of a lot of people, including me, at interest rates that seem absurdly low. When the treasury does these auctions, the way the auctions work is there's a certain set of large, they're basically investment banks, stuff like that. The primary dealers is what they're called, and the primary dealers are the ones who can actually bid on treasuries and at treasury auctions, which happen several times a week, for themselves and or their clients, usually both. And one of the interesting things that Bloomberg noted was, even at recent yields, the primary dealer demand is actually quite high. A lot of the recent ones, there's been very very high percentage of the demand coming through was actually coming from property dealers, and that surprises me. I got to be honest. I was somebody that thought the 30-year bond bull market was over, 2-3 years ago. How much of the change is COVID, and how much of it's just that I was wrong about it being over, I don't know. But yields just keep dropping. I do think we're probably at the end of it now. I do think as the taper comes off, I think we've probably seen the lows for bond yields, but that's not the same thing as saying I think they're going to go to 20%. Well, it's all going to go to hell in a handbasket, and Wall Street's going to blow up. I don't think that's going to happen. I think we'll see some increase, but I'm not sure it's going to be that large. There continues to be very strong demand for treasuries. Okay, I don't want to take any more questions now, because we've used up our time, and we do have we've got John coming up next after a little break, and he's got a very full plate, so I don't want to be cutting into his time. So I'm going to call it here. Thank you very much for coming. I know there are a few hundred of you listening. That was great. I think it was a smart thing to do. I mainly just blathered about nonsense, but you saw 4 great presentations from 4 great CEOs, and they're all stories you definitely should be looking at. They're all stories I've got a great deal of comfort with. That's why I own them. And there's going to be more stories like that coming up, and more great advice on the market from John and Gwen. So stick around, grab yourself a coffee, stretch your legs, and be back here in half an hour for the next piece. Thanks very much again, as always, for attending the Metals Investor Forum in its virtual form. That's it for me. Thanks very much.
Welcome to session 3 of the virtual September Metals Investor Forum. Thank you all for joining us today, September 16th, 2021. I am John Kaiser, publisher of Kaiser Research Online. The 4 companies presenting in our session are all current KRO favorites. They are Sonoro Gold Corp, Consolidated Woodjam Copper, Vanstar Mining Resources, and Nevada Exploration Inc. But before I introduce the speakers, I will run through my presentation, whose topic is why the resource junior hesitancy. We went through a 10-year bear market that started in 2011, and last year, after the initial wallop in March, we had a tremendous awakening that carried on right into this year until about the second quarter. But since then, it seems like the audience for the resource juniors has evaporated. And I'm looking at the copper price, I'm looking at the gold price. What is wrong with these levels? Why has the audience vanished? We're dealing with a potential roaring 20s type pandemic recovery. We've got infrastructure renewal in the works, make America great again, repair all its failing infrastructure. And we've got infrastructure transformation also in the works, preparing for a clean energy future. And we have ESG as a factor that has never really been part of the whole junior resource game. And it's an important one because it gets rid of this idea that the biggest and best is all that mining will ever be about. And we also have this great power competition between China and the United States, which is not lessening at any point. So why this hesitancy? We look at the projections that the IMF has made for the global economy, and you can see the dip that we experienced last year as a result of the COVID response. But they're talking about the economy growing $28 trillion over the next 5 years. That's 30% growth. Now that means a lot more metal than what is currently being supplied. And here I've got sort of four charts showing the evolution of supply. Up here in the left corner, we have copper. And copper has actually been sort of flat going down for the last 5 years. It is both going to track the macroeconomic growth of the economy, plus there is going to be additional demand from the electric vehicle rollout as this keeps growing and growing. Nickel production has also been sort of flat with a big dip when Indonesia shut down. That's going to track the macroeconomy because we're never going to need to use stainless steel. And it may even be part of the electric vehicle future. Right now, there is an incredible battery innovation arms race underway. We do not know in 2030 what will be the battery that it becomes the winner take all, what its configuration will be. But nickel might be part of that future battery that becomes part of every future electric vehicle. And then we've got lithium, which had a tremendous growth spike 4 or 5 years ago. It's subsided in the past couple of years, but lithium is going to be part of the electric vehicle future. And then look at rare earths. It's still dominated by China. And while there has been new supply going forward, it's a serious geopolitical problem. And it is also part of the electrical vehicle rollout that's underway. So in all these areas, you can expect demand for raw materials to keep growing and growing. And the prices that we have now, they are all elevated from what they were a few years ago. And of course, the decade of bear market that we had was partly due to the oversupply that created during the China super cycle during the 2003 to 2010 period. But that has now been absorbed by the growing economy. So there is now plenty of room for prices to not just stay where they are, but go higher. So the ESG factor is a relatively new thing, and everybody's familiar with the environmental aspect, the emission controls. We want everything to not be polluting. The social, it's also local stakeholders, worker health and safety, and so on, and the push for less inequality. But though it's the G in for governance, that's become a very important deal for the juniors. Now, normally this deals with corporate transparency, but increasingly it is about the shock that has happened from the COVID pandemic to the global supply chains. And there was also, with the emergence of the great competition between China and the United States, this idea of a globalized economy is not such a sure thing. And what the various shareholders of companies are starting to say, you're doing everything in hyper efficient manner, just in time supply chains. But when there are disruptions that are unpredictable, such as the COVID pandemic or possible geopolitical conflict, you're screwed because you're depending on everything coming at the cheapest price from the best producer. So now we want you to reverse some of that efficiency and build in redundancy and resiliency. And also, by the way, we are concerned about the other issues, environmental and social. We don't want you to be using metals that come from the dirtiest, nastiest jurisdiction, because there's a new problem coming. Because with the media, the way the media has evolved and blockchain systems have evolved, the future will allow end users to be able to establish where their metals come from, and the public will ask to see the source certification, and they'll want to see it verified. So there is a potential public relations nightmare coming for big companies that do not consider the ESG nature of their raw inputs. And this is important for the resource juniors because the best jurisdictions are United States, Australia, Canada, a few other places. It's becoming more difficult in a lot of these other regions, these frontiers that exploded in the past 20 years. But these regions have already been picked through well. The deposits are harder to find, and they may not be as high grade as they are in some of these woollier jurisdictions. But there may be now a future for a discovery or an existing deposit that may not be as great as something in the Congo, but it still will be developed because it can deliver ESG credentials. And this old idea that the corporations have only one duty, and that is to the shareholders that Milton Friedman talked about, that's going out the window. So there should be a future for resource juniors finding stuff that doesn't have to be the absolute biggest and best discovery in the last 50 years. So speaking of great power competition, here we have the green is the global GDP and the projections by the IMF, and the blue is the percent that US GDP represents, and the pink is China. And you can see this convergence is continuing, and that is the foundation of this great power competition, because by 2030, these two economies will theoretically be equal sized. And in terms of the military, the United States is still way above the Chinese in military spending, but China clearly has ambitions to rival the United States. And the problem is the hope that we had 10, 15 years ago that China would become a democracy. Well, it is now clear that Xi Jinping is pushing for Mao Zedong 2.0, and this is a trend that is not going to go away. And it's not the old central command economy of traditional communism, which is always going to implode. It is more a government-controlled private sector. It's a different type of economy, but it is run by the Communist Party, and there is no other competition within China to run that country. So geopolitical tensions, the business with Taiwan and that's going to be a big problem. So it isn't just the building in resiliency for your supply chain, but there may be some substantial disruptions coming, which may prevent metals that either will get routed through China or originate China from being available to many other parts of the world. So that's all bullish for the main metals, but it's also bullish for gold because gold is the ultimate uncertainty hedge. And you know, back when the communism collapsed in 1991, Francis Fukuyama wrote a book about the end of history, everything's going to be great. Well, we've reached a point now where the history is wide open. Even within democracy, there's a push for autocracy, to have a Mussolini be in charge, to lick the boots of these masters, to be slaves. It's this insane craziness out there. And that really should be good for gold because we have no idea what's going to happen down the road. Now, this graphic up here, I've used this many times in the past. It basically shows the price of gold and it's overlaid on the GDP and the gold stock growth. And they're not really linked in any way, but what if you take it down here and take the value of the gold stock and take it as a percentage of the GDP in each year, and then just plot it. And what you'll see is that the value of gold tends to rise in periods of substantial turmoil. And we saw that in the late 70s. We saw it again after the financial crisis. And then we seem to enter a period of calm, but COVID sent us to a new high. Gold actually managed to make it through $2,000, and it's sort of settled back in a range where the gold stock, which is about 200,000 tons, it's somewhere between 12 and 14%. And if we take the extremes from the past of 1980 and in 2000, when it looked like the United States was the eternal winner of the whole global power game, and we convert this over here into percentages of future GDP, well, we can see gold dumping back down into $500, $600 range, or we can see it go up to as high as $4,000. So when people talk about gold potentially going to 2,000, 3,000, 3,000, 4,000, it doesn't have to be about inflation. It can be about stress in the global economy. And this here, what I've got pointing forward, sure, it says in 5-year gold it's going to be $2,000. That's based on the idea that 12% is now the stress level that gold is going to maintain. But it is the idea that this $1,800 gold that we have now, never mind the $50 wobbles such as today, this is the new reality going forward. But the market doesn't seem to believe it. It seems to think that gold is going back to 1,300, that copper's going back to 250. And that is the key, is when does this market out there decide that the current prices are at a minimum the base for future higher prices? So this is the history of resource sector, TSX listed resource junior financing. Tremendous boom during that 2010 to 2011 period when gold almost hit 2,000. We had a bit of a burst in 2016 when we thought gold was rising again, but then we had this 5-year slump, and things took off in May of last year, and it was driven by gold. The market was addicted to the uptrend in gold. This portion of the financing activity was mainly gold related, and that subsided when gold pulled back. But then we had another tremendous boost in the early part of this year, and this was more than the non-gold related metals that caught the whole energy clean energy transformation and infrastructure renewal expectations with the Biden victory, the possibility that they might actually have fiscal stimulus. So in this just over 15-month period, 7.7 billion was raised by the TSX resource listings, compared to 7.4 billion during this 4-year period prior to May of 2020. And it is in much better shape. This used to be over 50% companies with negative working capital. Now we have over half the companies with more than $500,000 in the treasury. The resource juniors are in great shape, and yet they're behaving almost as if it was 2 years ago in 2019, early 2019, when this was over 50. It was almost 60% of companies in the money, and this was just a very small group, several hundred companies that had a meaningful amount of money to get something done. So this graphic here tracks the value traded relationship between TSX Venture resource and non-resource listings. And you can see that there was a tremendous boom back again when gold was running towards $2,000. And the split between resource and non-resource was pretty much even. But then as our bear market began, the non-resource listings became ascendant, and we had a small burst in 2016 again when gold rallied towards 2014 before falling back again. And then the themes of cannabis and blockchain, crypto, and all that came in and pretty much dominated this period. But when gold took off last year, the resource juniors were more than 50% of traded value. But again, as soon as gold reversed its uptrend, back down we went. And even though there was a big trading activity during the first quarter of this year, the non-resource listings dominated the scene in terms of trading activity. But now, curiously, we almost see maybe possibly a crossover happening that's come back from being low 30% to being almost 50%. So we'll see going forward if there is an inflection in the works. Now, here's part of the problem. This is where American households have their capital parked. And household deposits, that tends to be the 99 percenters. Stocks all gone up. Mutual funds, which are the same as stocks but are separate. These are directly owned stocks. This shows that in the past year and a half, tremendous increase in net worth has taken place amongst the Americans. But at the same time, you see that T-bills and bonds have gone down, which makes sense because the pandemic response of buying $120 billion worth of T-bills and stuff has driven the price of them way up, which means the yields are way down. And everybody's pretty concerned that at some point, this has to reverse. But where is all this capital parked? Why is none of this really moving into the junior resource sector? Now, here we see how the inflation has had a significant bounce back. It's 5.3%, which is really kind of a catch up to what was happening before. It's a question whether this is transitory or part of the long-term future, whether it's going to be structural. But real rates at the moment are very negative. So there is reason to believe that yields will begin to rise, and people who have exposure to bonds, they're going to suffer principal loss. And so a lot of this money has been going on into stocks because there really is no alternative. And as long as it keeps going up, or at least stays where it is, everybody's reasonably happy. But the audiences that traditionally watch the resource juniors, they are nervous about that. And here's what I started doing last year when we had that March meltdown. I took the 20s period and the 10 years prior to that and normalized it all to 100. And I've been tracking it daily. And it had a very similar rebound, but it has bifurcated. Whereas in the 30s, everything after a short recovery just got worse, worse, and worse over the next several years, and then didn't do pretty much going forward. Here we are at almost like it's ready to tip back into the garbage can. And this is the nervousness happening in the market right now. Some of the hesitancy with regard to the resource juniors is that there is fear that there's going to be a crash which makes everything come apart and drags down the global economy and makes those IMF predictions of $28 trillion growth over the next 5 years just pure fantasy. So here's the elephant in the room, though. These are the pension entitlements of American households. That's 30%. Between these three groups, net equity, pension entitlements, and stocks, that's over half of the net worth of US households. And these pensions are held by all these different pension plans. They can't afford for this stock market to go down. So maybe this big crash that we're expecting just won't happen. But another interesting thing is this is largely owned by the boomers, people who will be, all of whom will be 65 and over by the end of this decade. And there's this end-timer psychology in this boomer generation that seems to be not sharing the same sort of perspective as the younger generations, the millennials, Generation Z. And what happened last year is a bit of a shakeup in the way things are going forward. There is a conflict coming between end timers and the younger generation who want a future. And one of the difficulties with the traditional audiences for the resource juniors is there has not been any real replacement among the younger generations in terms of audience. And because every boomer is now 55 or older, the regulators are not very keen on seeing their clients that aren't the discount brokerage self-service type clients dabbling in the speculative junior resource sector. So this traditional audience is disappearing on us, and a younger audience is not coming in to replace them. And even worse, your typical person who used to be keen about the resource sector, they tended to be free market libertarians, that sort of right-wing type person. But something strange has happened in the last 4 years. They seem to have forgotten all this stuff about libertarianism and free markets, and they've become these insane autocrats supporting a failed president. And here we are coming out of this horrible period of lockdown and disruption of our freedom, deliberately rejecting the vaccine. And what is it but an act of economic sabotage that hopes to make the whole economy fail so that they can put their hero back in power. And this is creating a conflict too between the younger generations who really want us to get on from this COVID lockdown, masking and so on, and those who really don't seem to care about the future at all. And so what are young people doing? Well, maybe they're giving up. Maybe they are also becoming end timers. Momentum gambling is what they do. They believe the trend is your friend. Fundamental valuations are irrelevant. In this type of market like Tesla and cannabis and so on, every company is a potential winner that takes all. So they all can have insane valuations because you won't know who's a winner until the whole thing is over. And in this thing, it's okay to not know anything about these companies other than that it's going up and pumpers are talking it up. And really, there's this sense that time is on nobody's side. There is no time left, which is the whole psychology of the end timers. The time is running out. And that's why you have Bitcoin, which really serves no purpose at all, fascinating all these people just trading it, gambling in it. And it's just momentum gambling. It serves no purpose. Same thing with GameStop. It's just the social media short squeeze that was done, which simply hasn't gone away yet. So fundamental outcome gambling is what the resource juniors are all about. And that is what is part of the problem. The resource juniors, they're not very good for momentum gambling. In mining, there is no winner who takes all, but mining does create wealth. Now, any outcome in an exploration development play, it has a finite value grounded in physical reality, tonnage, grade, and cost. But it's not easy to quantify the size of the prize. Even some geologists don't understand the discounted cash flow model for valuing a deposit, a future mine. And of course, exploration, the outcome reveals itself over time. It takes time. You don't day trade these resource stocks except when there's some big pump going on and there's a war going on between the shorts and the bulls. And even worse, most people really don't know how to price the value of an uncertain outcome, such as the value of a coin toss. So we're losing the traditional boomer audience to simply momentum type gambling. People are used to love gold. Well, yeah, Bitcoin's the new gold, so we're going to gamble in that. And the younger audiences, well, the juniors are not really providing a gateway to allow them to find their way into this space so that they place longer term bets on fundamental outcomes that take time to unfold. And the key to all this is this simple equation where a coin toss, if you have a dollar coin and somebody says heads, if it comes up heads, you win. How much would you bet, put on the table to win that coin toss? Well, the basic formula is that it's the future value multiplied by the certainty of that value becoming reality. And so it's quite simple. 50 cents is the value of participating in a coin toss, that placing a bet that heads will come up. If you're being asked to pay more than 50 cents, that's poor value. And if somebody's dumb enough to let you pay only 25% to bet on a dollar coin toss, well, that's good value. And in the resource sector, it's the same thing. And the key here is the staged exploration development cycle, which has very low certainties in the early stages that become much bigger certainties. And you can use these certainties to figure out what the current value for different prizes down the road will be. And this is, I put it all together. This is the basic formula that most people don't know, but it's the key to valuing a fundamental outcome. And I've put it together into a graphical form where this blue channel is actually this channel here. And because the market doesn't really behave rationally, I've also observed something called the S-curve, which is especially during discovery delineation where you don't know what the limit of the prize will be. You will often see the market pricing the company now at what it ends up being worth after $20–40 million have been spent and it's marched through this whole thing. And in fact, with the Arizona mining pick that I did in 2016, it worked perfectly according to this system. So the first company in my group is Sonoro Gold Corp. And its problem until yesterday was that it was developing a resource, but people did not understand the economics. They published a PEA. So what I've done is I've taken the numbers, put them into the discounted cash flow model, done a life of mine visualization, and you can see that now at the stage post PEA where they want to go into permitting this thing, the fair value is 45 to 68 cents. But I've done something different. I've put in 75 million tons instead of the 32 million tons that they reported, and I ran it at the same grade. And that comes up with a bigger NPV than the company's nameplate PEA does. But also what this interests me about this company is if you run different prices, such as $2,300 or $3,000 gold, you can see much higher potential outcomes. So this company is one of my favorites because it can be, if gold just stays where it is, this stock could be a 90-cent target over the next 12 months from its current 22 cent level. But it can also serve as a proxy. If gold starts to run on the upside, this will be a go-to stock for the market. Now, Woodjam is in a kind of a similar situation, except they have not done a PEA yet. over $30 million was spent delineating 3 deposits, one of which is the 227 million ton Southeast Zone deposit. It's basically a copper deposit, and the market has been treating it as if copper is still $2.50, and Gold Fields eventually gave it back to the company on fairly good terms because at $2.50, that asset is not worth anything. But what I've done is an outcome visualization where I got the numbers for what it would cost to build and operate a 30,000 ton per day open pit mine using the existing resource and likely recoveries and so, and I've run it at $4.30 a pound, and I come up with a future price target of $3.56, and yet the stock is at 12 cents. The company at the moment is focused on expansion, but it has the potential to just go back if it can't find more, to just develop this. And this would be an example of what I was talking about earlier. It's in a region where there's infrastructure. It will be developed in a way that meets all the ESG requirements. And while it's not a world-class grade deposit, this could be part of what feeds the future, especially if end users become more concerned about diversity of supply rather than just-in-time supply from the biggest and best. And the third company, Vanstar, is in a different situation. They have a carried to production deal with IAMGOLD, which has delivered a resource estimate for just about over 3 million ounces. It's an open pitable situation. And again, the problem the market has with this is how do we price this? So I noticed that the Springpole project that First Mining Gold just did a PFS on is very similar to this. So I borrowed some of these numbers and modeled this and visualized what this would be worth. And again, we come up with a 345 target down the road if this thing gets to a production decision. And you can also see the optionality down here at $2,300 and $3,000 gold. Now the stock is cheap now because IAMGOLD controls the timeline. IAMGOLD is still doing expansion drilling. It has not yet shifted to economic studies, to a PEA, and we don't know when it will. So the market is punishing this company because it thinks the timeline is very, very long, and the company cannot control its destiny. The other two, Woodjam and the Sonoro, they control their timeline. So this is a case where you are paying on making a bet that the timeline will shorten considerably less than it was than the market's expecting. And then the final company in our group, well, I've imagined that they find a couple of deep post deposits at their Southgrass Valley project. I visualized what the outcome is. This is still target testing. They don't have a discovery yet. They have clues that a discovery might be made. But if they were to deliver something like 16 million tons of 20 gram per ton, well, that, if you do the math on a 3,500 ton per day underground mine, that's a $23 price tag. And here you can see the stock, it's actually below that channel. So in my view, if you believe that Southgrass Valley is the type of system that can deliver another North Carlin district, well, then you're talking very good speculative value. And of course, if they started delivering it, it wouldn't just hop into like this price range up here, 57 to $1.14. It would go into the S-curve territory. And that's why, in general, I am a fan of discovery exploration plays, because the market punishes them because of the low certainty that they'll actually deliver anything. But the instant they do, that's when all hell breaks loose. And that's also where you will see momentum gambling come into the juniors. It's generally not in the resource juniors, except when a metal is rising very rapidly for reasons that suggest it's sustainable. But it's in discovery exploration where you can get enormous changes overnight in the value potential of the company. That's where you can also get momentum gambling. But we can't wait for that. We have to teach the public, the younger audiences, how to think about these plays and adopt a patient strategy to be able to place the bet put some work into understanding the play, monitor the data flow, and adjust positions accordingly, and always be on the lookout for other interesting opportunities in this junior resource sector. And that wraps up my session. It's 1 year memberships available for $450 until the end of the year. After that, I'm going to increase it substantially and change in how the whole Kaiser research platform works. It's going to become more of a research platform rather than a stock picking system. Thank you for watching my presentation. So our first company today is Sonoro Gold Corp, and it will be presented by its CEO, Ken McLeod. Ken, welcome to the Metals Investor Forum.
Thank you, John, and thank you for the very informative update on your views on the market, to the gold market going forward. Truly appreciate that. And thank you, Matt, for putting on this very, very important forum for Sonoro and the other companies. So going forward here, this project that we're going to focus on is called the Cerro Caliche project in northern Mexico. And the picture you're seeing on the screen at this time is the central part of the concession. We're looking at the parts of the concession that are called the Japonesa zone, the Buena Suerte zone, and the Cabeza Blanca zone. And 85% of the drilling that we've done, and the drilling accounts for 47,500 meters of drilling, mostly over the past 3 years, 85% of it is within the zone here. And the majority of the resource that we're going to be discussing in the slides going forward are focused in this zone here. So you can envisage that this is the central area of a potential open pit mine in the future. Going forward, the forward-looking statements, I have to illustrate those for you and caution you that we are going to be talking mainly on the basis of forward-looking statements and the historical data that we've amassed over the past 3 years. We have a technical team in Mexico that I believe is second to none. I'll just focus on the two key guys, Melvin Herdrick, VP Exploration. He's got over 40 years experience in the development and exploration of gold mines in Mexico and in the United States. And he's been a contributor to over 5 million ounces of gold discovery over that 40-year period. Jorge Diaz, our mining operations manager, he has over 40 years experience in developing mines in Mexico as well. And he is well known to the likes of Alamos Gold. He was the #1 employee of Alamos Gold when they started developing the Mulatos mine. The location is about a 3-hour drive south of Tucson, Arizona, and a 3-hour drive from the Cerro Caliche project to Hermosillo, the main center of commerce in northwestern Mexico. We are surrounded by producing mines, and I'll highlight some of those. Agnico Eagle's Santa Gertrudis project, which I anticipate will be going into production in the near future, is 14 kilometers to the north of us. We have Mercedes Mine, now owned by Equinox Gold, 8 kilometers to our southeast on strike on the same structure. And adjacent to us on the west is the Cerro Prieto mine, and a little further to the west, about 60 kilometers, is the San Francisco mine. And I'm sure many of you are familiar with that. The PEA that was announced yesterday came with highlights based upon $1,750 gold with an NPV after tax of 41.5 million US, which is about $53 million Canadian. I want to emphasize that contrasts with today's market cap for Sonoro, which is about $21 million. So there's a bit of a disconnect there. The after-tax IRR currently is 32.5%, and the initial capital costs are rated at $32.2 million. I want to emphasize with these capital costs that this is based upon brand new equipment. The initial plan was to go into production with a leased or a rented crusher. But the fact that we couldn't find a 3-stage crusher in Mexico forced us into going out for quotes for brand new crushers, and which we have, and that added an extra 12, actually, or more like $13 million to the capital costs. And so when you strip the crusher out, if we are still able to lease a crusher or rent a crusher, the capital costs would diminish quite substantially down to the less than $20 million figure. However, even taking into account with the brand new crusher, new grasshoppers, new conveying systems, the leach pad expansion, and after 2 years, the payback for the $32 million capex is just over 2 years. The life of mine currently is 7 years, and I want to emphasize that this is a single moment in time for the project. The intention of Sonoro is to continue with the drilling program. And the drilling program is anticipated to start in the next 30 to 45 days in order for us to continue to upgrade the size of the resource. And over the past 7 months of drilling, we added about 25,000 meters of drilling. So if you can envisage over the coming 7 to 10 months, we should add another 25 to 30,000 meters of drilling. I think the likelihood is very strong that we will be able to substantially increase the size of the resource based upon our track record over the past 3 years. Now, the all-in sustaining cost that we're showing here right now, $1,351, incorporates all of the costs, including the reclamation at the end of the mine life. It includes the expansion of the leach pad. And so if we are able to successfully acquire a leased crusher or a used crusher, these sustaining costs will come down substantially, and so will the cash costs. The recovery rate has been very, very attractive for us in that McClelland Laboratories out of Reno came up with a 74% recovery rate, and that is fairly consistent across the entire area that we envisage will be mineable over the coming years. The average annual production in the first 3 years will be in the order of about 56,000 ounces. And over the following 4 years, which takes us up to the 7-year mine life, it should be just about 45 to 50,000 ounces per year. That is without any additional drilling to add to the resource. And our focus will be to add to that resource. The capital costs, as you show here, are mainly, once again, the cost for the crusher is almost $13 million. And that is the total direct cost of $19 million, infrastructure of $4 million. EPC, we've allocated 13%, 12.5% for EPC cost. And then the indirect costs are shown there. So the total capital costs amount to $32 million. The operating costs, let's go for the life of mine first with utilizing the $1,750 gold price. The cash costs are $1,227 and the all-in sustaining $1,351. But in the initial 3 years, because we have a higher grade in the first 3 years, that higher grade is over 0.5 gram, it gives us a lower cash cost of $1,159 and an all-in sustaining cost of under $1,300. This gives you a snapshot of the mineral resource as calculated by Micon. And the measured and indicated is 349,000 at a grade of 0.41 grams of gold. And when you add the gold equivalent in there, the grade is 0.43. The inferred at 71,000 ounces is in the order of about 4.4 grams. And then potential outside of the resource pit shells. And I want to show you, I'm going to see if I can demonstrate a bit. Oh no, I can't. It seems to be wavering on me. The pit shells are shown in a dotted line in the map to the side here. The area outside of the pit shell that has been partially drilled, but which is not drilled to a standard that Micron can classify as inferred or measured and indicated, that gives us an extra 204,000 to 365,000 ounces of gold, as you can see on the side of the slide here. So obviously, that's going to be a major focus for us going forward to take that potential and turn it into a resource over the coming year. And then going forward, this snapshot here is of the drilling that's been done to date. The 47,500 meters of drilling are in these areas that mostly 85% of it would be in this central area of the Japonesa zone, Buena Suerte, and the Guadalupe zone, and the Cabeza Blanca zone. So the area off to the north here to El Rincon is a brand new zone we discovered last year. And the expectation is that we will continue to do some additional drilling here so that entire area will become a productive mineralized zone over the coming year. Now, we have identified an area to the south of El Colorado and Buena Suerte, which I will show in a future slide. This area has never been drilled before. In fact, it has not been explored until recently because it was a steep canyon, no roads into there, and there was a bit of overburden. So we've been building roads into this area now over the past few months, and the road cuts are giving us some very significant intercepts. We're getting, with channel sampling, we're getting 1 to 1.2 meters of up to 10 grams in places. And so it stands to reason that the area to the south of Buena Suerte into the San Quintin area, and from Colorado into the La Ventana area, which is just slightly off the map, may become mineralized as well, and we will be drilling there over the coming months as well. The extension for Buena Suerte is another 750 meters that's of potential mineralization, and for Colorado, 650 meters. And an area off to the east here from La Española to the north towards La Magdalena has now been identified with some significant structure being exposed through our trenching and with sampling and trenching and the various road building we've been doing in that particular area. And off to the northeast, there is tremendous potential for mineralization there, because as we're building roads into the area, and this is Cerro Caliche Peak itself, we're finding that the mineralization is fairly consistent all the way up to Cerro Caliche Peak. The area in green is shown as where we have the mineralization present at this point in time, where we've done enough drilling to show the mineralization. Some of the cross sections to show you how easy it is to mine. We're showing mineralization essentially from surface. This one here, the Buena Suerte zone, you can see very, very high grades of 24 meters of over a gram, 27 meters of over a gram, and essentially at or near surface. Same with the Japonesa zone. A cross section across the various zones is we're finding that there's stock work in between the vein breccia zones. So it is essentially potentially mineable right across the structure. The next phase of exploration will be, and I can't show it to you very clearly in this map here, but it's south of the Colorado zone and south of the Buena Suerte zone. And we are highly encouraged by the sampling we've done at surface with the road building. Going forward, I'll summarize the activities going forward. We intend to restart the drilling in the next 30 to 45 days. The idea being we start off with an RC, and then we'll bring in a core rig to get definition on structure in the new zones. We've now effectively completed the PEA, except for the completion of the actual language within the PEA itself, and that should be completed early in October. We've been conducting studies and engineering, pre-engineering on the potential mine. over the past few months, and that will continue into the future. We're talking to EPC contractors with a view to obtaining a potential contract to eventually build the mine. Project financing will be done in conjunction with the EPC contractors, and there are other potential sources of financing that could be brought to bear as well. The environmental permit is anticipated by early in the new year. And so potentially, if all of these elements are brought to bear in the coming months, we should be in a construction phase in 2022. Summary on the structure of the company: 100 million shares issued and outstanding, just 102 actually. And as of yesterday, 2 days ago, we were trading at 30-35 cent range. We got hammered when we put out the news release on the PEA. We feel very confident that the PEA is very, very complementary to our future plans, and that it is eventually going to be supporting a future mine. But excuse me a second. The future mine is anticipate to actually be constructed sometime in 2022. We still have more drilling to do to realize a potential longer mine life than 7 years. But some of the shareholders in the company over the past 24 hours decided that for one reason or another, that the PEA was not to their satisfaction. But we feel very strongly in the opposite direction, because the value is very, very significant. And if you look at the potential for producing over 55,000 ounces a year for the first 3 years, with if you use a $1,750 strike price or spot price, and the potential for the all-in cash cost to be in the $1,300 range, I think there's a potential there for a significant increase in the value of the company, and over time an increase in the share price. So that summarizes it now, and I thank you, John, for the introduction and for the good words about the company.
Thank you, Ken, for that presentation. Our second company is Consolidated Woodjam Copper Corp, which will be presented by CEO Bill Morton. Bill, welcome to the Metals Investor Forum.
Thank you very much, John. Thank everybody who's listening. And thanks to the Metals Investment Forum team for putting this together and coaching us nicely yesterday so we don't mess it up too badly. What I'm going to do today is give a summary on the Woodjam Copper Gold Moly Porphyry project in south central British Columbia, and a status quo. We've been drilling there since June, and we have some new developments and things which we're very excited about. So I will start off. I'll quickly blast through the cautionary statement. This presentation will be available post today, and anybody who wants to read it in detail is more than welcome to. So I'm going to start off with a few shots just to get everybody's attention. Here we are drilling in the end of, actually this would be sort of mid-July. This was very close to the very hot wave that hit British Columbia at that period of time. On this particular day, it was well over 40 degrees centigrade or 100 degrees, which is kind of unusual for this part of the world. You can see we're drilling a vertical hole. This is a hole that I'll get to later on, and essentially I might just sort of comment on what were the intentions of this year's program were. They were basically threefold. Still trying to put the project back on the map. It was kind of forgotten by the audience for a number of years. We are demonstrating that we can expand the current resources. We're also embarking on what we'll call the exploration opportunities. And so there's at least 3 objectives that we were working with this year. Additional things happen. This is a BC Geological Survey about a week ago who arrived. They want to help us by mapping some of the glacial till. So any assistance like this that comes for free, obviously we're into it. You can see the drone sitting on the table. So a little bit about, you know, this landscape. This is very much banana belt relative to a lot of projects in British Columbia. We share the land base with other resource extractive entities, including cattle ranching and forestry. And it's amenable to year-round exploration. Let's touch on this for a second. It is a good jurisdiction. Obviously, we're not far from Taseko's Gibraltar mine, and the currently shut down Mount Poly mine, although apparently it's expected to be back up running fairly soon. It was not shut down for reasons other than the price of copper was such for a period of time that Imperial Metals didn't want to mine it on a spinning your wheels type of proposition. Our major partner in this thing for many years was Goldfields. They were responsible for determining the resources that we currently have published. And essentially, we have the equivalent of 2.5 billion pounds of copper at a 0.41 copper equivalent grade. It's in a few zones. That's based on a lot of drilling. We're actually now at 133,000 meters, 434 holes, and we're the hole that we're currently on. I'm going to keep going fairly fast through this presentation. Essentially, I'm not sure what's happened here. This one should say 12 cents. I corrected it yesterday. Yeah, well, we have been trading it at kind of holding it around 16 cents for the last few weeks. It's dropped off in the last number of days. Share that with some of the other groups. Here we are. You know, I'm going to skip through the team a little bit. I mean, basically, myself, we have lots of professional accreditation, and we have some very strong supporting participants to the team. So we're in central BC, U.S. border down here on my cursor here, Williams Lake, which is a community of plus or minus 20,000. Basically, the economy dominated by forestry, cattle ranching, and mining. It's a service center for the Gibraltar mine and the Mount Poly mine currently. We own the project outright, subject to a royalty with Goldfields. That was a consequence of what happened with Goldfields. They came into this project with us in 2009, and they were with us until 2015. But through that period, they went through a restructuring of their own. They were having tougher times, and Goldfields became Goldfields and Sabania. Money supply dried up, and in the end, they earned a 51% interest, but elected to close their operations in North America, both Denver and Vancouver. And ultimately, we were capable of negotiating a deal with them where for stock, we bought their 51% back and regained 100% interest in it. We've got good working relations with the locals, including the local First Nations. And I put this slide up just to make a point that we fit very favorably with a number of mines that are currently operating and are doing quite well. Copper Mountain is a whole new world for them, same as Gibraltar. Mount Poly, talking to Imperial Metals, I expect that they'll be back up running soon. Milligan's doing well, even with the fairly onerous stripping agreement. Down here, I've put on that this project shares similarities with other world-class high-K calc-alkalic ancient porphyry clusters. Direct quote from Goldfields. The deposits that they're most interested in, which were driving some of their concepts and what they were doing, are the Cadia deposits of Newcrest and in Australia, New South Wales. So again, I touched on this a minute ago, that at the end of July, we were at 431 holes. 131,000 meters. We're past that now. And I'm looking for a slide particularly. I'll find it. What have we got? I'll just momentarily, I'm making sure that I don't run out of time. What do we have? Well, we have 3 compliant 43101 resources that were calculated by Goldfields in Johannesburg. And we have one other one that was more a scoping study, also done by them locally here. It wasn't done with all the bells and whistles, so we don't include it as a 43101 compliant resource, so as not to get into trouble with the regulators. But it's very much for real. So in aggregate, the resource adds up to 263 million tons at a grade of 0.3 copper and 0.13 or 0.11 grams gold, roughly a 0.4% copper equivalent. And driving this thing, the good news and the bad news in this part of the world is there's no outcrop. That's the bad news because it makes it difficult to sort of go find things. The good news is if there had been outcrop, we wouldn't be here because it would have been found a long time ago. So we use a lot of geophysics, particularly induced polarization and mag, to chase our targets, and it has been successful. Having said that, there is some variability with respect to how the various deposit types respond. Now on this map, I'm not sure why I don't seem to have everything on this thing that I put on it, but I alluded to the fact that we had more than one objective. In this area, the southeast zone, which is the largest copper resource, and we were riding the copper horse at this point in time, we elected to go into an area where we had some decent holes. This would be slightly off this image. And we elected to drill a hole where there was other holes, but there was a sort of let's say an excessive gap between some good holes. We drilled hole southeast 2189, which is our first hole. It should be on this slide, but it doesn't seem to have made it. Very good intercept. I think it was 400 or 340 meters, 0.4 copper, 0.12 grams gold, within which there was something in 140 meters, 0.56% copper, 0.23 grams per ton gold. That was to get everybody's attention and also to confirm that we have exploration and upside on the southeast zone. One of the other items that we were working on this thing was the fact that one thing that's been missing in the narrative a little bit is that the high grade portion of the southeast zone sits on top. So that when we talk about the 220 some million tons at 0.3, well, there's a substantial tonnage, easily over 100 million tons grading 0.4 copper and at least twice that amount of gold, which sits right at the top. That would have obvious serious implications down the road and at the time we were going to transition to development. But exploration-wise, what we really wanted to do was to step out and in an area that initially didn't belong to the project. The option was made with some third parties in 2013 by Goldfields, which gave rights to earn 100% interest subject to X, Y, and Z, which are all reasonable. They drilled a wildcat hole out there at the as part of the price of doing the deal with the vendors. Got the right rocks, got some good mineralization. So we thought we better do some geophysics. We did that last year. We were going to drill this last fall and we never got to it because of road conditions. It was wet. But you can see it's a 1,400 meter step out. And while these holes that we put in the two in here are not stellar in terms of grade yet, this hole still had 94 meters of 0.15% copper. But really interesting was the molybdenum content. There was 118 meters in that was 0.53% moly. I think the significance of that is the best copper gold porphyries in the world, Bingham Canyon would probably be the best one as an example, all have moly in them. And in fact, the Bingham Canyon, the resource, a little over 500 million tons, 0.44 copper, 0.16 grams gold, and 0.031 moly. So I think that's important to prove that this system is large. We don't know where the edges of it are. We didn't drill the best part of this thing in some respects because there's a creek that cut in the way, and we have to come at it from the backside, which we will. So essentially what this is just showing is and I've got John's picture over here on my screen in the way of my cursor a little bit, because it's sort of what this project looks like if you took a slice 200 meters down. What I want to point out is that the southeast zone, and quite possibly what we call the megaton, they do conform to sort of the bullseye theory in IP. But these smaller satellite deposits, which have far more rich gold in them, such as Deerhorn, where we're currently drilling, they're more subtle. When you have the IP works, it pulls you in, but the bullseye is not important. And what this image is trying to show is that if you've got one of the resources here, then why not here? There are no holes. There are no holes. There is no outcrop. So we feel we have a tremendous opportunity to expand this thing, both these satellite deposits, such as Deerhorn, where we're currently drilling, and these other ones. And I'm not sure if I could. Can anybody talk to me here? No. What I was just wondering is, I thought I had some numbers on these things I don't see on this presentation. I'm not quite sure why, but anyways, I haven't got a lot of time. I've told 90% of what I was hoping to, so I'm going to quickly go through it. Now, we had some spectacular holes last year up in the Deerhorn zone where we're currently drilling. We actually have 3 holes in the lab currently that we have no numbers for, and another one that we're around 350 meters down this morning. It's all going well. The labs are slow to get results, and but anyways, last year's hole 71, I'll just talk of it. 96 meters with 110 meter intercept, 2.57 grams gold, 0.44% copper. This slide has it in a gold equivalent. It should be in a copper equivalent for the copper audience, and it would be about 2.85% copper equivalent. So I'm just going to quickly go through all these things. Okay, where are we at? Right now, this slide was put together when we started the program. Obviously, we've gone through quite a bit of this money. Our guidance, we said we would do 7 to 10 drill holes. Well, we're quite a ways from stopping drilling at this point, and we're on our 7th hole. We have 3 holes in the lab from the Deerhorn zone, and we're on our 4th hole in that area. We'd like to perhaps move to some other areas before we're finished, but we're watching the budgets on a day-by-day basis. So really, the timeline on this thing was such: we staked it, we joint ventured it, we got Goldfields involved, a lot of money was spent, and we're the beneficiaries now of having a tremendous big database put together by a very credible group. Ourselves, we threw into that as well, and it's all good stuff. So I see that I've just hit the 0 mark on the time thing, so I'll just sort of sign off. I'll just say that, again, as opposed to more rugged parts of the world, this is what it looks like. This is our core facility with 133,000 meters of core. This is an area you work year-round, and where the local community, talking ESG sort of considerations, are very, very supportive. Well, thank you very much for listening.
Thank you, Bill, for that presentation. Our third company is Vanstar Mining Resources, which will be presented by its CEO, JC St. Amour. JC, welcome to the Metals Investor Forum.
Thanks, John. I'd like to introduce everyone here to Vanstar Mining Resources. We're a gold exploration company focused entirely in the province of Quebec currently. I think I'd like to show you that we are a low-risk exploration play with our strong flagship asset that more than supports our current value in the market, plus our exploration assets and the fact that we have more than enough cash to do any work that we need to do over the next few years. And don't have to go to market anytime soon. I think will support the fact that we are a relatively low risk exploration play. In terms of our assets, the Nelligan project is our flagship, which is a joint venture with IAMGOLD. It currently has a 3.2 million ounce resource and growing. There's a drill program going on right now. There are other drill programs that were completed after this resource was published. And then beyond that, we have 4 exploration assets that are all 100% owned, and all of which are located in northern Quebec. In terms of the Nelligan project, it's located just south of the town of Chibougamau in northern Quebec, which is about, Chibougamau itself is about 700 kilometers north of Montreal, all accessible on a paved road. Chibougamau itself is a historical mining town. There's been a number of mining operations here in the past. There's all the infrastructure we need to put a mine into production. We have roads, we have an airport, we have workforce, power lines, roads. These roads here that you can see running down towards to the south of the highway are well-maintained lumber roads. They're used every day by heavy equipment. I've seen it myself. There are high-tension power lines. There's one in particular that runs right across our claims. So from an infrastructure perspective, we're ideally located. The project is accessible year-round, and great place to develop a mine, basically. In terms of the history of the project, it was acquired by Vanstar, back in 2010. Over the next couple of years, the company drilled the project and discovered 3 initial zones, gold zones. And at that time in 2014, as with pretty much the entire sector, it was difficult to raise some money. IAMGOLD came along and offered a joint venture, which Vanstar took advantage of. And since then, IAMGOLD has drilled the project, found the Renard zone, which is the main zone right now, has updated or provided an initial resource back in 2019, and has since drilled it and continued to expand upon what's the current resource. In terms of the joint venture with IAMGOLD, they currently have 75% of the project. They can earn another 5% by completing a feasibility study. I want to highlight that we're fully carried on this project. We don't have to put any money up to advance this project into production. And so even the feasibility, which would be a costly item, is out of our hands. So we don't have to dilute our shareholders in any way to advance this project. Vanstar would then retain a 20% interest, again, still carried. And we also have a 1% NSR on the 8 original claims that underlie the initial discoveries. Those would cover about 30% of the deposit currently. If there's gold discovered towards the east, we would add to these. Towards the west, we move away from these claims. Now, just another quick point here on the 20% interest. IAMGOLD could potentially buy that out. If they did, an independent evaluator would determine the value that's paid, and IAMGOLD would pay that, and then on top of that would give us a 1.5% NSR on the entire project. Under that scenario, we become a cashed up royalty company, effectively. If they continue and develop the project, we maintain our 20%, and obviously that's a good outcome as well. And theoretically, they could also take us out. So there's a few outcomes here, all of which are just fine with us and fine for our shareholders. The project was awarded the Discovery of the Year award back in 2019 by the Quebec Mineral Associations, recognized as a world-class discovery. It was, at the time, had 3.2 million ounces at just over a gram. The four main zones, you know, the Renard, Liam, Dan, and 36 zones are all sort of sub-parallel to each other. The Renard zone is a very large zone, can be hundreds of meters, or can say 100 meters thick or so, easily mined. But since the resource was calculated, the IAMGOLD completed a drill program in 2020, which expanded the mineralized zone to the west by at least 700 meters, taking the whole strike length of the deposit to probably about 1.5 kilometers now. And there is currently a drill program underway on the project right now. Just a quick look at the resource as well. It was calculated at a 0.5 cutoff. You know, based on my recent visit to the project, it's quite clear that there's a prominent halo around this, around the deposit. You know, a lower grade halo that, you know, the grade basically just tails off gradually, very slowly actually. And so, you know, dropping the cutoff grade at higher gold prices, for example, would add significant ounces to the deposit. The current drill program is underway at just under 10,000 meters planned. When I visited the project a couple of weeks ago, the infill portion of that program was completed. Obviously, the infill is to tighten up the resource here and upgrade the resource for an update. And then the second phase is to drill the extension. And like I said, it was drilled out to 700 meters in the past. When I was on the site, they had just finished the first hole, which was around that same area. And then the idea was that there will be step outs of 200 meters, large step outs, to try to trace the zone out as far as they can. And then they'll come in and backfill from there. So, you know, program's going well, and I would expect that we'll see a couple news items at least on this in the coming months, with the infill drilling assays coming out first, I think, and then the western extension following that. There's also, just to highlight, I'll show it on a different map, sorry, but to the east here, there's also some potential. It's a little more complicated. The west zone is fairly all intact and easy to follow. In the west, in the east, it sort of diverges and bifurcates a little bit, but there is more work to do here. There are some good results in this area. Just a quick note, there's a shallow lake here that, when I say shallow, I'm talking about a meter or two thick, deep at the most. Drilling it with a barge in the summer, for example, a barge would just get caught up in the mud. It's so shallow. So they need to drill this in the winter, and we'll come back this winter to do that, to basically fill the data that's missing here. And then the idea would be that they will update the resource by the end of, say, Q1 next year. If they did it before drilling this, it would look, you know, the deposit and the western extension would look like they're two different deposits when they're actually continuous. In terms of how we would value this project, obviously we don't have any, you know, feasibility numbers or any economic numbers on it yet. But as John mentioned earlier, the Spring Pole deposit was, you know, PEA, sorry, was completed on that earlier this year. They're similar deposits in the sense that they're both open pittable, they're both similar grades, they'll both be similar sizes. Spring Pole is has some challenges in the sense that, you know, they're more remote than we are, further away from infrastructure. They are, you know, they have some more technical issues with deeper lakes that need to be dammed to be built, and the metallurgy may be a little more complicated. Anyway, the point is that, you know, if their with their numbers, I would imagine that Nelligan would have at least as good as what they have, if not better. And in their case, they came out with an IRR of just over 30%, just under 30% after tax, with a value of just under $1 billion after tax, US. That would, you know, if Nelligan comes up with similar numbers, obviously forward-looking statement, that implies a value for Vanstar that's many multiples of times of where we're trading right now. And that just goes back to my point that, you know, most people bias for this asset, which more than supports our value in the market. And so all of our exploration projects you essentially get for free. And then, you know, so we can drill these assets, and with the cash that we have, if we're successful on them, obviously our shareholders will benefit from that. And if we're not successful, we just move on to the next project, and there shouldn't be any downside since we still, we don't have to access the market anytime soon. Of our projects, the Felix project is the most advanced in the sense that we're actually drilling it as we speak. The first hole here is completed. There's a 2,000 meter program underway. What we're doing here, this project is located in the Shakopee Belt in the Abitibi region. That's the same belt where Amex Exploration, for example, has made their high-grade gold discovery. And what we have here is a number of iron formations that we can see well on this high-resolution mag survey we completed earlier this year. We can see where they're faulted and folded. And what we're interested in for this drill program is this nice S-fold over here, which happens to coincide with a number of geophysical conductors, both megatem and IP anomalies. So we've designed our program to test this, and we hopefully will have some results here in the not too distant future. In terms of our other projects, Amanda is a little more isolated. It's a couple hundred kilometers north of Chibougamau, but it itself has some merit. And, for example, in the previous trench sampling, we have a 7 meter at 5 gram sort of interval. So there's work that needs to be followed up here. It's just a bit expensive exploration. So in the short term, we're focusing on the lower hanging fruit in the Abitibi region. And then our Frida and Ava projects, they're located in the James Bay region, right next to Quebec Precious Metals Hakami deposit, which itself has some fairly high grades. And these are relatively early stage companies. We just completed a high resolution mag survey on both of these, one of which shows a nice iron formation that's folded, which caused us to acquire some additional claims here to make sure that we don't miss anything. We're going to send ground crews here actually this month to do some prospecting, sampling, and to identify some drill targets for us. So in terms of our capital structure, we've got 60 million shares outstanding. We're very well capitalized. We've got over $5 million in the bank. Like I said, we don't have to access the market anytime soon. We're trading at lows like everyone else these days, which gives us a value in the market of just around $20 an ounce US, an enterprise value of $20 an ounce. So I think we demonstrate good value for investors. And of that 5.4, we've got 1.8 that's flow through, which we need to spend on our exploration projects coming up. And then in terms of management, myself, I have a geology degrees, but I don't necessarily call myself a geologist. I spent most of my career working as an investment banker, financing and advising mining companies in particular. And on the board, we've got a number of great technical people who have all been involved or are currently involved in building mines, as well as our geological consultant who was involved in the discovery of Nelligan and knows our other projects very well. And then rounding up the board, we've got experience from everything from investor relations to the legal and corporate governance, as well as equity and mergers and acquisitions and management. So I've got a great board. They're very supportive, and I'm happy to have them. So overall, just to summarize, I guess we're a low risk exploration play. We've got a flagship asset that is largely de-risked, and which gives us, basically a cornerstone for our value. And then we've got exploration assets that can provide potential additional upside from there. I guess that's it. Thanks for your time, and thanks for having me here, John.
Thank you, JC, for that presentation. Our fourth company is Nevada Exploration, Inc., which will be presented by its president, James Buskard. James, welcome to the Metals Investor Forum.
Hello, John. Thanks for the intro. Thanks for having us. Thanks, Matt and the team, for putting this all together. Title of my talk today is What You Need to Know About Nevada. And there's a lot of emphasis on companies coming into Nevada right now, There's been a huge amount of money raised so far this year for Nevada projects, but it's really important that we pay attention to where the value is in Nevada so that we know where to allocate the capital in Nevada. So for those that are new to the story, we're going to spend a little bit of time today looking at where the opportunities lie. We're going to take a little bit of time and look at how what we're doing is so different relative to the rest of our peers in the industry. And then we're going to focus on our flagship project, Southgrass Valley. Yesterday, we released an update of the project with some drill assays for our very first drill hole, testing our primary target called East Golden Gorge. So I really want to take some time to put those results into context, understand how they relate to what we're looking to see, and how they relate to what we'd like to do for the rest of the project. As we cover these things, I will be making some forward-looking statements, so caution there. Yeah, I'm not going to go through our bios. Everything you want to know about us is available on our website. But in summary, we're a global team of explorers that have been very successful in Nevada. Having been involved in more than 40 million ounces of gold discovered in Nevada, collectively, we've been involved in the discovery of a very large portion of the gold that's been discovered so far. And what we're doing that's so different is we're applying a whole range of new exploration technologies and approaches that are really targeted to exploring undercover. And what we have in Nevada is more than half of Nevada's bedrock sits undercover. We can't see it. It's hidden beneath sand and gravel. And so what we're doing is we're really a first mover in applying these new tools to look into half of Nevada that hasn't really been looked at yet. And again, as I mentioned, certainly the most exciting thing going on for us right now is our current drilling at our Southgrass Valley project. We trade for about a $20 million Canadian valuation, and we as management and directors represent the largest block of shareholders. We're all here to make a discovery. We've been at this for a long time, and we really believe in what we're doing. Yeah, the photo at the bottom there is our exploration office in Reno. Right from what we do in the field to what we do in the office, everything is best practices, latest tools. We're members of all the research organizations. And so really we're focused on applying the best research, the best tools at every scale of investigation. So like I said, there's been a lot of emphasis on Nevada right now, and certainly it's an absolutely fantastic part of the planet. With 100,000 map prospects, more than 600 current and past producing gold mines, it really boasts an incredible endowment, especially if you start looking at it on a per area basis. I mean, on a kilometer, ounces per kilometer per year, just off the charts. Great place to be. But what not enough people emphasize when they're talking about the Nevada projects is that the vast majority of Nevada's gold endowment comes from one type of deposit. They're now famous. They're Nevada's Carlin type gold deposits. Collectively, they contain 250 million ounces. That's one of 6 gold belts in the world of that size. So yes, Nevada is a great place to be, but the vast majority of this wealth of this gold endowment is really clustered in this one type of deposit. Now, the second thing that people aren't very quick to highlight is that 80% of Nevada's Carlin endowment comes from only 3 camps. And you get a feeling here for just how big they are. 40 million ounces, 50 million ounces down here at Cortez, Carlin, the namesake camp, obviously the biggest. So yes, great place to be, but Carlin ounces are what are important. And other than these 3 camps, everything else has been relatively insignificant. Because these camps are so important, they've been studied very carefully. And when we look at the 3 camps all together here, they're relatively identical in terms of their geologic makeup or their architecture. They're both, all 3 of them are camped out on large regional scale structures, cutting through these reactive lower plate carbonate rocks that we're looking for, up against major intrusives. And what that means is because we know what these things look like, we have a very good idea what it is we need to find when we go to try and find more of them. And as we look at our results at Southgrass Valley and our plans at Southgrass Valley, everything we do is really focused on what we know about these 3 major camps. To put them into context, they've now been combined to form the world's largest gold producing district. But really, despite how much we know about Nevada's geology, despite how big these camps are, the reality is that Nevada is in the midst of what we say a drastic fall in production that began here in the end of the late 90s. So yes, well, fantastic place to be. Yes, some fantastic globally significant camps. But after a major run up in the 80s and 90s that put Nevada on the map, as an industry, despite more money being spent by more people than ever before, we really haven't done a very good job. So what's happening? Well, what's happened is there's been a number of generations of very good explorers that have done such a good job of looking at all the rocks you can see in Nevada. And there's really nothing left to be found in significance sticking out of the ground. And what that means is the places that are left to explore in Nevada are these vast desert basins that make up more than half of the state. And in essence, what it means is we have a bigger area yet to look at than all the areas we've looked at before. But what it requires are new tools that help us to explore in places that look like this, where we can't see the rocks. There's been 200 million ounces produced from where you can see the rocks. Industry experts agree there's an equivalent endowment waiting to be found. Question is, how do we find them? Well, what we have today are much better tools than we had in the past, and they're allowing us to get back to the large regional scale sampling programs that have historically opened up new search spaces. The most important new tool for our industry, we believe, in searching and recovery is something called hydrogeochemistry. It's basically sampling groundwater. And what it allows us to do is take inexpensive drill holes to collect groundwater samples to directly test the bedrock that we can't see for the commodities that we're looking for. It's incredibly powerful. It's being used all around the world, mostly by the base metal, the copper explorers globally. And what we are here in Nevada is the first mover to bring this technology to look at the more than half of the state that's sitting undercover to go after these monster deposits that we know, for every Carlin camp sticking out of the ground here, we know there's another one waiting to be found undercover. So understanding the geologic constraints of where these camps live, we picked a search space of north central Nevada. And what we did was we executed the first regional scale geochem survey across Nevada that's been executed in the last 2 to 3 decades. We collected more than 3,000 groundwater samples, 6,000 groundwater samples, and we oriented them around 30 known gold mines, so we knew exactly what it is we need to find. And the results of this program today allowed us to have a portfolio of brand new projects, each of which we think we have provides the opportunity for major new discovery. So those of you that have been following us for a while know that we have been advancing projects in parallel, but in the last 2 to 3 years, this one project down here, South Grass Valley, has risen to the top in terms of how advanced it is and is now our flagship project. So what we're going to do now is shift gears and look at South Grass Valley. It sits at the south end of the larger Grass Valley here, Cortez District at the north end of the valley. And we found this project really undercover as a direct result of our groundwater sampling program. Having collected hundreds and hundreds of small drill holes through this part of the basin, we identified concentrations of gold in groundwater equivalent to what we've seen at the largest deposits in the state. Then layering in conventional tools, in this case, we're looking at air magnetics, geophysics, along with, we look at some gravity geophysics now. We're able to establish that this target, this concentration of gold that hadn't been discovered before, sat immediately above this north-northwest structural corridor that we've now named the Water Canyon Structural Corridor. So with indications that we had geochemical reasons to like it, structural reasons to like it, geological reasons to like it, in 2020, we began our first drilling program at the project, where we put 10 relatively deep stratigraphic test holes into the district to test, do we indeed have this classic Carlin architecture that we projected under the gravels based on all these other tools that we've seen. It was exciting to share at the end of that program that that's exactly what we found. We found these thick packages of lower plate immediately up against a major intrusive along this major structural corridor that importantly contain cubic kilometers of Carlin-style alteration and geochemistry. And that's important because when we look at the camps that we know about, these are the size of the features that were required to support that level of endowment. So the fact that we were able to find this type of system of this size undercover where the first 10 holes was a very big step for the project. Following up from that first round of drilling, we began a second round of drilling last year in 2020, where we tightened the density of our drill holes to see, okay, within this fog of mineralization that you found, can we begin to figure out what controlled the fluids, the hydrothermal mineralized fluids through the district? Because ultimately it's following those mineral controls that's going to give us a chance to try and find places where these fluids concentrate into potentially economic grades. What we shared at the end of that program was, while all of these colored units here are all classic lower plate Carlin, suitable Carlin host rocks, This one particular unit down here, which we call the CLM, shown in purple, this medium purple here, that is the unit that controlled the fluid flow across the district. And it's that intersection of this one particular stratigraphic unit here, along with the major structural corridor that we've seen here, that together defines that intersection of these potential host rocks, this control for fluids with the major structural feature is what today defines become our primary target, which is called East Golden Gorge. Now there's other groups, there's other projects in Nevada that claim right sort of host rocks, right sort of alteration features, right sort of geologic settings. But what really sets this project apart and this target apart is really how big it is. For scale, I put the Gold Rush footprint here, 8 million ounces, the north end of the valley. And so that's the size of system that we need if we're going to try and find that type of globally significant deposit. But it's important to point out, you can see the irregularity of that deposit. It's not just a perfect shape. And so while we are quite advanced in terms of our understanding of the geology of the system here, we still have to be very careful in how we de-risk this camp scale target. So what we began this year was our third phase of drilling. And what we've done here is we began with 4 relatively deep core holes off to the east of the project that allow us to get down through the system, confirm our geologic interpretations, and really based on what we see, refine the model so we can continue to add drill holes up to our planned 10 drill hole program here that we believe is the density of holes necessary to test this system for a large new Carlin camp. We've just finished our first hole of the program. It was located here at the north end of the project, about 1,000 meters east of a step out from the northern fence of drill holes here. And we put it here because it allowed us not only to test the CLM target unit here, but also step back and angle through the structural corridor here to continue to build our understanding of the exact structural features that are really important for this sort of system. It was good to report that we were able to successfully get down to our target depth here, 1,400 meters, which allowed us to get through the structural corridor and ultimately test the full thickness of our unit. As we announced yesterday, we've got the assays back, and what we've seen is we've intersected a major fluid pathway. Just as we predicted, this unit is what's controlled the fluid pathway, the fluids, almost 100-meter thick interval, intense alteration, screaming trace element values. And when we look at how that relates to our target, you can see how the alteration of geochemistry ties immediately back to our target here. We published the gold numbers as well. Clearly not economic. I mean, we're looking at 80 ppb here. We're nowhere near economic grades in this hole. But what's so important to point out is really how tight the relationship is here. This particular unit, we call it the superhighway, is what controlled the mineral fluids through the district. And what it's done is it's really validated the entire target concept. Now, having de-risked, incrementally de-risked what we've said we wanted to do here, we're going to continue, our plans to continue with these 10 holes, which are really designed, as I mentioned, to test this entire target volume for a large new deposit. I showed you the Gold Rush footprint to begin with. We're now looking at the Cortez Hills footprint. This is 15 million ounces. So you get an idea of how, yes, these systems are large, but the actual deposits are relatively small. And it was based on our understanding of these 2 different camps, these 2 different deposits that we planned the density of drill holes to test our target. So that's exciting. It continues. We believe we have the opportunity here to make, like I said, a large discovery in a brand new camp that's comparable in size to the other 3 big camps. We set this whole project up more than 10 years ago to go after trying to find these sorts of camps undercover. And what we think we found here is the first Carlin type system undercover that's been discovered outside of these major camps in the last couple decades. So what you need to know about Nevada, it's a fantastic place to be. The ounces are not distributed equally. These 3 camps together represent 80% of the state's Carlin endowment. And we think now that we're going into the 50% of the state that hasn't been looked at, that using the best tools, using the best science, we have the opportunity here to potentially find the state's 4th Carlin camp. So thank you very much.
Thank you, James, for that presentation. And I want to thank all 4 speakers for the presentations that they put together for us. And and present it. And we are now going to deal with some question and answer period. We have about 22 minutes. A question a couple of questions that are related to Nevada Exploration Inc. and its Southgrass Valley project. The property there's no meaningful gold mineralization within 40-kilometer radius of that property, and yet Yamana and Origin Royalties have just done a strategic alliance which includes that entire area, including Southgrass Valley, as part of the area that they are exploring. Why, James, is this area a big area of nothingness? Is it because there's just nothing there, or is there another reason?
Yeah, as you move from the northeast part of the state, home to Carlin, and begin to move south into the west, the prospective lower plate units that are hosting these deposits begin to become more and more covered, not just with sand and gravel in the valleys, but also we have upper plate, a sequence of units that have been pushed over the lower plate and hiding them. There's also a lot of more volcanic activity. And so what you have is the lower plate, the prospective units are largely covered. And it's not easy, it's not cheap, but the perspectivity is there. And so it's really the easy stuff's been found, and these are the places that are left to explore. For a while there, the industry was collapsing back to the Walker Lane, back to the last crappy ounce, as everyone calls them. When this middle ground, this sort of no man's land, has the same prospectivity in terms of the same geologic features responsible for the Carlin systems, they're just more difficult to see. And as we have new tools, new approaches, new strategies, it's getting more and more attention.
Now, you made the comment that you're very pleased to see the gold values spike up along with the arsenic. And the arsenic was up there, 500 grams per ton ppm. In these Carlin type systems where you do see gold get to 30, 40, 50 grams per ton, such as Deep Post, how does the arsenic grade behave in those? Is it way, way up there?
Yeah, I mean, we don't have the privilege of what enters the research is only a small fraction of what Barrick and Newmont guys have, and the absolute max grades for arsenic, so to speak, right in the heart of the system, we don't know. But there has been a lot of research published, and once you get in the 1,000 ppm, 0.x% arsenic range, that's what you want to see in and around these deposits. They definitely smear, if you will, or extend. The fog is more distributed, it's further away than just the focused gold. But yeah, that was sort of 0.x% arsenic numbers you'd like to see. And I mean, we just quoted our average 250 ppm over whatever 95 meters. But there's 0.x% values within there, right? And so yeah, those are the values you want to see. But you still could be 300-400 meters off the edge of the deposit, and the arsenic runs and the gold drops, right? So you need to have a strategy for vectoring these systems ahead of beyond just following gold numbers.
And one sort of related question: the market thinks that you perhaps just have a Carlin type hydrothermal system, which with the package of rocks that it hit, had somehow lost its gold payload much deeper. Have you seen anything to make you optimistic that the system was still fertile as it moved through these rocks, and that it is just a matter of time before you find where the gold really did pile up?
Well, we have to remember that all of these systems are the product of what began as parts per trillion level golden fluids that have been concentrated in particular locations. And so we already know that this system had a gold budget. We've seen it. What we're looking to find now is, where did these fluids interact? Was there a chemical reason? Was there a structural reason? Was there a geologic reason to force these fluids to drop their gold budget in one particular place? So no, the gold budget is, we're over that. The question is, was there a place where it had an opportunity to concentrate? And that's not certain. That's why we're drilling these holes, and That's why we need 10 holes to test this target volume.
Thanks, James. JC, I have a question on the Nelligan. To what extent has IAMGOLD tested the depth potential of this system? The resource is basically an open pittable resource. It's a sort of bulk tonnage, low grade, but at a grade where it makes sense to develop. But have they really chased this thing down to its limits? And does it simply peter out? Or is this an open question that maybe things get better at depth with this type of system?
It is an open question. The deposit is drilled out to about 300 meters so far. It is open at depth. And so there is some additional drilling that can be done there to expand the resource at depth. There are signs that there are some higher grades. So there is some work that needs to be done there to add to that. IAMGOLD is focusing on a low-lying fruit with the western extension right now because that's at surface and it seems to continue. And so that's the priority. But at some point in time, they will have to come back and drill at depth. It is not closed off in any way, so there is potential there for sure.
Now, a big question the market has is, when does IAMGOLD switch from expansion drilling to engaging in economic studies to see what it takes to put this into production? And my question, assuming they're going for an open pittable resource, that's their model, how much more drilling do you think is needed to kill off the potential for additional tonnage at the Nelligan deposit?
Well, I think the current drill program is largely designed to test the limits of this deposit. So I would think that we'll have a good sense after this program is completed. As I said, they're drilling 200 meters. They're drilling step outs of 200 meters to the west, which are very large step outs. And they're going to try to trace it out as far as they can. Once this is done, we'll have a sense of whether there's more to do from that perspective. There's also a bit to do on the eastern side, so it can grow both ways along strike. But I think after this drill program, we'll have a good sense of the size or the size potential. And this is my own speculation, and IAMGOLD has not said this, but my own speculation is that after this program and the resource update following that, they will start turning their attention towards economic studies and try to get an idea of the economics around this project.
Now, suppose IAMGOLD finally gets an uptrend going and its stock is starting to reflect the gold price and people are no longer so skeptical about its assets, and they are thinking, well, maybe we don't really want to spend all this money and do a feasibility study and then have to buy you out down the road. What inhibits them from doing a hostile takeover bid of Vanstar so that they don't ever have to issue an NSR or pay the fair value of the underlying asset, which won't be known until it's quantified by an economic study?
Right, yeah. Well, in terms of, it's always possible that IAMGOLD decides to buy Vanstar as a whole. I think it's, hostile bids are rare in the mining industry. And so it's more likely to be a friendly transaction on terms that are acceptable to, obviously, to the board and to shareholders. Shareholders will have to vote on something like this. Hostiles are much more difficult to complete and to be successful at. So, it's possible that we get approached in the future by IAMGOLD, and we would not necessarily not welcome that. It depends on the conditions and what the offer is. So depending on the situation, we may or may not accept that.
Okay. Thanks, JC. Bill, on your Woodjam project, you mentioned that you have 3 holes completed and you're working on the 4th one. Last year, the drilling that you did at Deerhorn was mainly designed to try and see what happens to grade at depth. Does it get better? And you didn't manage to really get into the deeper part of the unit. This program that you're doing right now, what is its objective?
Okay, a couple of things. First off, a little housekeeping. I was sort of fumbling around during my presentation looking for numbers, and what I ended up inadvertently doing was opening up the continuous PDF file that I had created to make the presentation. The correct PowerPoint has been forwarded to Metals Investor Forum, so it's basically 90%, 99% the same, except that there were some numbers and comments, including that on the PowerPoint, which due to some stupidity on my part, I didn't open correctly. Okay, well, the interesting thing about the Deerhorn area is the geology is different than the southwest zone, southeast zone by quite a bit, and in fact, the units which are causing the mineralization are monzonites, not quartz monzonites. They have an alkalic character to them. And Goldfields like to model what they thought was happening on what happens at things like Ridgeway in Australia, where these are pencil porphyry type features. They're steeply plunging. They're not very big in their surface dimensions, but the mineralization extends out of them. And the real opportunity is following them to depth. Now, there's at least 3 structural corridors in the Deerhorn area, and it's quite complicated. And you know, we're be honest, we're trying to resolve it. In fact, most of the time we're happy with some of our concepts seem to work, and then sometimes they don't. But in the end of the day, it takes a fair amount of drilling because these things have such a high metal tenor to them that they do in aggregate add way up. So right now, the hole that we're currently on, touch wood, looks good. It's as I said, I think it's 350 some meters down this morning, and part of its objective is to intersect the zone deeper. And until we've done it and until we get the results back, we can't be utterly assured that we've done it correctly. But really, realistically, the odds are that these features are deep, and you know, they have to be chased at depth as much as marching across the surface of the zone. Does that answer most of your question?
Yeah. And at the megaton, when do you expect to be back to it and drill the holes in the northern part of the anomaly so that you can figure out whether this is something that should continue to hold your attention, or just get back to the southeast zone and start thinking about doing an economic study on that with a possible feed of the higher grade Deerhorn, or to make the whole thing good?
Well, I think right now, as I said, you know, I had a slide that I called it our guidance. And our guidance was just that we had said at the beginning of the year we programmed that we hope to complete 7 to 10 holes, sort of 400 to 500 meters in depth each. Well, we're on our 7th hole now, and we're going to be drilling. We may have room for a few more. I have to sort of add up the bank accounts right now, but one of the things that we would have to do to get at the northern portion of the megaton that we didn't drill yet would be approach it from the north side, and it's a bit of a haul up there. There is a road there, but it's in not in good shape. It's about 8 or 9 kilometers. So that we've actually gone in with the drill contractor to see what they need to do to drag the drill out there, and how much work we need to do preparatory to that. Final decision on when we do that we haven't yet made, but it's on our list of what we do need to do for sure. As I said earlier, like the 3 objectives this year were prove that get everybody's attention to some degree on the southeast zone, drill an infill hole that needed to be drilled, be in a situation where we even had fresh material. Well, you never know at what point some group walks in and they want to do some more metallurgy, and right at this point in time we realized that we really had nothing to work with because there had been no holes in southeast zone since 2013. So we have new material if we want it. We got a nice intercept. We realized that might be a program where we simply increase the confidence and move out incrementally the tonnage that we got there. But at the same time, discovery is what drives the market faster than that, and we're kind of still leaning to a more of a discovery approach to what we're doing at this point in time.
Okay,
does that answer?
Yeah, thanks, Bill. Ken, a question for you. In your timeline chart, you suggest that you could have a permit for Cerro Caliche for the scenario in your PEA within five months or so. One of my other companies is in Idaho, and they've been working for 5 years on trying to get a mine permitted there. Why would it be so quick in Mexico? Well, what's different?
Well, it's a much more streamlined process in Mexico, especially in Sonora State. As you know, we're completely surrounded by producing gold mines. And the track record of the regulatory authorities in Semarnat in Mexico has been spotty in areas that are that have social impacts and environmental impacts. And so where we're surrounded by producing mines. There are no showstoppers. There's no water quality issues, no plant or animal issues that would be of any consequence. There is also infrastructure in place surrounding us. So we view the situation for our permitting as being one of the cleanest and hopefully one of the fastest processing files that Semarnat, the environmental agency, will be looking at. So we have been in discussion with Semarnat. We have talked to the people that will be reviewing the file and on a preliminary basis. And so we don't see any issues. They've told us that we could have the change of land use permit in as little as 3 months. And within 1 or 2 months after that, the full environmental permit. So I'm only going by what our discussions with Semarnat have yielded so far. So we have a fair degree of confidence that there will not be any showstoppers. We don't have any ejidos to deal with in this part of Mexico. And so we haven't found a single item yet that would suggest that there will be complications.
I also got the impression from the timeline that you would like to proceed directly from this PEA to permitting and development work on this project. And the question I have is, assuming that you can get financing to get this underway, is the company's goal to present itself as a future takeout for, say, an Argonaut? Or is it to use this as a stepping stone to acquire other similar projects that need some work to be fixed up and put into production? In other words, build a multi-mine company out of Sonoro Gold.
Well, I think they over the past 3 years, John Darch and I have been very diligent in pursuing Sonoro Gold as a standalone new mining enterprise that will build up on the Cerro Caliche project and the nearby San Marcial project and future projects to develop into a multifaceted gold producing company, but mainly focused on Sonora State and maybe throughout northern Mexico. So all of our efforts to date have been working on towards producing a Cerro Caliche project in order to develop revenue flow that would then enable us to continue with expansion of the drilling program to define the future potential. And we feel that the potential for the mineralization at Cerro Caliche is multiples of where we're at today. And if you consider the initial PEA, the initial 43-101 of July 2019 showed 200,000 ounces inferred. And when you take the current situation, when you take the inferred and the measured and indicated, suggestion is that we're in the order of 440,000 of mineable ounces. And that suggests to me that we're in the right track to achieving what our future goal is, which would be, once again, multiples of that. Certainly over the coming few months, we will be drilling the area where the potential has been unearthed by Mycon's research into the drilling data to date. It's not substantiated right now as an inferred resource because there's the drill spacing has not been tight enough for that. But there's a potential for effectively another 250 to 350,000 ounces in these areas, which have been drilled, partially drilled, and we want to convert into a resource over the coming year. So to respond to the gist of the question, is there a potential for Sonoro to become a takeover target? I think the answer is quite likely it will be over time. And management are of the opinion that if the opportunity and the offer is substantial enough, it will be presented to the shareholders. And if that indeed is the wish for the shareholders to be taken over, then we, as management with 20% of Sonoro, will certainly be happy to go along with it. So I think we are capable right now of assessing the benefits of going it alone or being part of an acquisition at some point in the future.
Thanks, Ken. And there's a question here for me. Somebody who's a fan of my rational speculation model asks, have I done any research on the number of companies trading below the blue curve and those in the S curve? Well, for that to be possible, I have to do an outcome visualization, and they actually are quite a lot of hard work. But a few months ago, I did a new innovation where I take the pricing of the company for a project, and in the stage that it's at, and I create an S curve and the fair value blue channel curve, and then extrapolate what sort of price is implied or kind of project is implied by this. And this is a useful new thing where you can see if your company needs a $2 billion home run in order to justify this current price, and you're just at a target testing stage, well, you better watch out. But if it's only something small you need, you can see there's potential for more. That's what you want to look for. And we are running out of time now for our question and answer session. I want to thank everybody for participating in this conference and for our audience to be watching us for the session 3 of the September Metals Investor Forum. Thank you, everybody.
Hello, everyone, and welcome to the 4th, final, and obviously best session of the day at the Metals Investor Forum. I'm Gwen Preston of Resource Maven. Very happy to be joining you here today. Of course, I'm sure others have mentioned, I wish we could be together in person as had been the plan. We are doing our very best to see if that's possible for those who live in the area at our next event in November. But virtual is definitely better than nothing. So I'm glad to be here with you virtually. I have 4 great companies here today to walk you through their stories and what's coming up for each of them in the next little while. But before I let them talk, I will hog the stage for a while and talk about what I see going on out there. You can see the topic of my talk here, metals in a Fed-obsessed world. I mean, we've been living in a Fed-obsessed world for quite some time. When I gave a talk a couple weeks ago or a month ago, I titled it, What Forest? All I See Are Trees, because there's just been this obsession with data points, right? And like any data point that comes out and there's some quite substantial reaction to it, and the reaction doesn't always make a lot of fundamental sense, especially on the metals, for the metals side of things. I wanted to step back from individual data points, talking about, inflation points or jobless claims, things like that, and just sort of look at where I think we're going in this Fed-obsessed world. Where we're sitting right now is that things are pretty darn good, but they're also pretty bad for metals, right? So we have gold near all-time highs, but we do not have a gold equity market. Like it just, maybe that's a slight overstatement from someone who wishes we had one, but really, gold equities can't really catch a bid despite the fact that gold is doing, is at a great price. Copper, the equity side isn't as soft, but the copper market is very strong. The fundamentals are very strong, but the stocks remain pretty cheap. I mean, I just have 2 stocks there, Hudbay and Adventus, so one producer, one developer, and they're both just sort of boring stock charts. Yet, if you look at the last year of that 5-year copper price chart, they shouldn't be boring, right? And these are just examples of the fact that it's all good in terms of metal prices, but it's not good in terms of the market. And why is it good for, well, okay, so while we stay in this sort of big picture look at things, it is all good for gold in that we are in a negative real rate environment. and negative real rates are the thing that matter. They are the most important bull force for gold. If you look back to 2016, the gold bull market started. This is a chart of essentially real rates. Use the 10-year treasury inflation index. So it's sort of to account for inflation. So this is a good proxy for real rates. The gold bull market started in 2016 when, guess what? Real rates started falling. Rebounding real rates sort of hindered the gold market for a few years there. And then in 2019, they had to start cutting rates again. I will get back to that thought at the end of my talk, so remember it. And the gold bull market phase 2 really got going again. And then COVID hit, and bam, real rates were plunged into very negative territory, and they're set to remain there for a long time. That's another conclusion that I'm coming to here. And real rates and gold have incredibly good correlation. That's what the chart on the bottom shows. It's gold inverted with real rates, and they stick together like nobody's business. So that's why the gold price works. The other metals, I'm painting with broad strokes here, but you look at copper, silver, nickel, uranium, platinum group metals, metallurgical coal, they're all doing pretty well. Well, silver isn't doing super well yet, but the point is that supplies will not meet demand in the coming years for all of those commodities. And so that is what's propelling prices upward. So this is just me saying it's all good, right? Look, palladium, metallurgical coal is going nuts. Uranium is really going nuts. I will actually spend my entire talk tomorrow on uranium, so I will not dive into that situation right now. But if you're interested, then tune in for the first session tomorrow, and I'll dive through what's going on there. So if everything's so good, then why is it so bad? Where are the investors? Well, they're investing in other things because the markets keep rising, right? How is that going to change? When is that? What's going to change that? Well, I think it's all about tightening. Getting right back to my first slide, we live in this ridiculous Fed-obsessed world. That is the situation, whether you like it or not. And so it's all about tightening. When I was, during this summer when I gave talks, I was like I said, I was focusing on individual data points and how the market was reacting to individual data points. And the reactions didn't necessarily make sense because the only game out there was trying to get ahead of the Fed, which is really hard to do. So let's assume that the Fed is trying to tighten. I'm not just making that assumption out of thin air. The Fed Chair Powell has certainly made clear that he wants to go in that direction. And so let's assume that is going to happen. We can talk about time frame in a moment. Gold likes tightening, at least initially. Remember that chart that I showed about how the gold bull market correlated with real rates? Well, the gold bull market started when real rates, or when with the initiation of a rate hike cycle. I know that seems backwards, but it's the backwards thing there is that the market seems to like this official validation that inflation is happening. That's when the Fed raises rates. That's the official, okay, we have inflation. It matters not that there have been many signs of inflation already. The point is that the Fed endorses it. And so gold, being the first and best hedge against inflation, gets that sudden influx of interest. So gold performs with tightening, especially at the beginning of a tightening cycle. But these days, nothing is so simple. I know this is a very long quote here, but the essence of this quote is that anytime our current setup, the way that the market and the Fed dance, is that anytime there's a crisis or a scare or a recession, or even just a steep stock market decline, the Fed steps into supportive stance. That's what the Fed now does. And we've seen it for 15 years, and I don't think it's going to change anytime soon. And they step in with the speed and magnitude of their monetization ramping up until equity and consumer prices resume their long-term upwards trends. This is what's been going on for decades and explains why the US stock market's valuation keeps making higher highs and higher lows. Because that's what the Fed does now, is it just supports these things. And it talks about inflation, but certainly the stock market is the other thing that it is blatantly supporting. So when Powell does talk or start tightening, and I think that will happen this fall, whether it's this month, more likely in November, gold should gain as the inflation hedge, the first and foremost inflation hedge. That's the quick reaction that always happens. Base metals should gain too, because inflation is growth and base metals are needed for growth, and that's all good. But the market's going to throw a fit. Like, there's no question that the market is going to throw a fit. We saw this playbook already. Remember when the Fed started tightening? And there was this thing called taper tantrum a couple years ago, right? The Fed was raising rates. They stepped them up a few times through 2018, and then they wanted to also reduce bond buying. And then the market tanked. I mean, tanked in a very relative sense. It declined, I don't know, 15% or something. And the Fed stepped in, backtracked completely, and reversed course. So let's look at what a tantrum would mean today, because that's very much what I expect will happen when the Fed starts to tighten in whichever form that takes. I imagine they will start by tapering bond purchases sometime later this year. I imagine the market will sort of, eat that for a little bit, and then they'll throw a fit. Well, what will that fit mean for gold? I actually think it would be the best possible outcome. If the market throws a fit and the Fed has to back off from tightening, I think that backing off would just underline, once again, but very clearly this time, that negative real rates are here to stay. There's no alternative. That's the only path forward at this point. As for what gold equities would do, I acknowledge that we are in a negative real rate environment already, and yet we don't have a gold equity market. So I get that there's a disconnect. What I think will matter is how strong the gold price is before when this all happens, when this tantrum happens. If the price has gained enough to make a splash, maybe that means getting above sort of 1900 as an important psychological level. I'm not sure what level will be needed, but you combine complete affirmation that we are in a negative real rate environment forever, a long time at least, with gold therefore gaining and gold equities being undervalued relative to the rest of the market. And I really do think that gold equities stand a chance of doing well as the gold market performs in a taper tantrum. I know I'm sort of combining a lot of things here, but this is the way that I have to approach it. I've just charted the gold price here as a reminder, as a graphical representation of the things that I've just been talking about. Back at the beginning of 2016, the initial rate hikes of the cycle kicked off the gold bull market. Then gold was sideways as the market was increasingly like, oh, we don't like this tightening, please. But the market back in 2017, 2018, so long ago, wasn't so forthright in their hatred of rate hikes. They were a little bit more like, oh, I guess we should let the Fed do what the Fed does. These days, they are more blatant in their responses, I think. So gold was sideways as the markets were like, oh, I guess we have to go through this tightening. And then when the Fed decided to throw tapering into the tightening mix, the market threw a fit and gold started to gain. And then as the Fed dropped rates 3 times through 2019, look what happened to the price of gold. Then we get into the COVID world, which was its own thing. And I'm not trying to connect that with sort of this fundamental look. But I think we could be set up for a repeat of this pattern, but with the sideways section shortened. Because like I say, I really think the market won't stand for tightening for very long. They have seen that by getting mad at tightening, by letting stock prices slide, the Fed steps in and reverses course. So why would they put up with it for very long? I think the market will have its fit in fairly short order. And this gain with hikes or tightening, whatever the first tightening looks like, sideways for a little bit as the market is like, ew, tightening, what's going on? And then the market will throw a fit, the Fed will have to back off, and then I think gold will go up the way that it did in 2019. And I've sort of, in a very highly artistic manner, charted that on the right side of the graph here. Okay, what will a tantrum mean for base metals? Well, that's a little bit harder to know. In that 2018-2019 taper tantrum and subsequent rate cut scenario, copper struggled a little, actually. So if we're looking at the PhD of base metals, it didn't do so well in that period. But I think we also have to acknowledge that the market is relates to rate hikes differently now than it did back then. Before, it felt like it had to tolerate them. And there was still some connection between rate hikes and growth, which there should be a connection. Rates should go up because there's inflation. Inflation should happen because there's growth. Those things are not necessarily connected the way that they should be anymore. So that's why I put that question there. Does anybody actually really connect growth with rate hikes anymore? I don't think that that's so much of a connection. Instead, I think supply-demand fundamentals matter more. And in the electrification paradigm shift that we are in, guess what? Most of those metals, like I said at the beginning, are in a deficit. So I don't know exactly. I think that base metals would probably do fine in this taper tantrum scenario that I'm painting, but it's a little bit harder to know precisely. Okay, so what does this all mean that we should do right now? First of all, I think you should pay some attention to Powell, as if people aren't. But okay, so his next press conference, Fed meeting, and then press conference is just next week, actually. If he does not talk about tightening, give some sort of timeline or structure for how he will reduce bond buying, let alone, I don't think he'll talk about raising rates. I think he might talk about reducing bond purchases. But if he doesn't talk about it next week, then I think gold will stay boring until he does talk about it. And the next opportunity for him to do so would be November, which is his next press conference. So that's one thing to watch next week. I don't think it will hurt gold in particular. Gold has been pretty range bound. I think it will stay in this range. It'll just remain boring if tightening is again kicked down the road a little bit. If that's the case, then focus on some other things that are doing just fine in this environment. I think copper is doing fine. Uranium, I'll talk about tomorrow. There are other things to sort of focus on until gold gets its moment. The reason that there are other things to focus on is because the electrification trade is very real. I advocate approaching that trade with more of a medium-term horizon. As I was writing this, I was like, build a position and they will come, right? It's hard to trade a paradigm shift on the short term. There's certainly opportunities based on discovery or based on the specifics of one particular stock. But more generally, I would say build a position in the metals that you believe are key to the electrification paradigm shift, and it will happen because there's just no alternative here. There's also this thing called exploration results. Now, I say that in that way because labs are very, very, very slow again, which is not ideal, but results are starting to come in from the summer field season across the Northern Hemisphere. And there's always lots of fun ways to play exploration results, right? If you really have confidence in particular targets, if you think that the market is going to get excited about a particular set of results, you can buy and even sell before those results come in. There are ways to play the exploration season that can be a lot of fun, risky, but fun. I was just down in Beaver Creek, which is a conference where people like myself, the investor side, sits down across the table from issuers. And, then you spend a lot of time having coffee and bumping into people in the hall and chatting about new deals. What else are you putting together? What do you believe in? What do you think is going to happen next? How are you positioning? And, the market believers, there's a lot of them out there in our sector for the reasons that I've just described. They're very much still creating new deals. So there's interesting opportunity on the new deal front. And then at the end of the day, gold miners are ridiculously cheap. So when the moment comes, and at this point, I don't know when that's going to be. I feel like we've pushed it off somewhat. I think the first quarter of next year is a more likely opportunity for reliable gold gains, unless Powell talks about tightening next week. This I actually haven't updated in the last month, so the numbers are probably not exactly right, but miners really stand out across equities, for balance sheets, for free cash flows, for dividend yields. It's ridiculous, actually. It's annoying because why don't we have a gold equity market? But anyways, we don't, but they're very cheap. And so that means that when interest does rotate back towards the gold space, I really think that it could flood because people will say, whoa, these gold miners are printing cash and they're in net cash positions. That is very unusual in the stock market these days. So they offer fundamental investment sense. It doesn't matter whether you like gold or not. They just make a lot of financial sense. And then they offer upside for those who do believe in the metals market. That's what I have to say. Hopefully that made some sense. I was trying to pull together a lot of ideas. I, of course, write 2 newsletters, the Maven letter, which is my weekly letter on what I'm buying, selling, and thinking in the market. The premium is about financing opportunities for accredited, engaged retail investors who would like to know when I'm putting money in a financing and maybe want to participate alongside. And then the Peter, who has joined me in Resource Maven, publishes 2 newsletters as well, one that's focused on silver and one that is focused on low risk opportunities. If you want to find me, I'm easy to find, but enough about me. Let's move on to hear from these companies who have kindly joined me in my session today. So first up, I would love to ask Stuart Rogers to tell us what's going on with Edgemont. And then I'm excited to hear about this because Edgemont, you know, it was a bit of a wait for drill permits, but now they're drilling, and hopefully Stuart's going to give us all kinds of inside information about what that drill core is showing. Stuart.
Oh, good luck. Good luck with that, Gwen. Thank you for inviting me. It's a pleasure to be here. It's always wonderful to see you, and I appreciate having the opportunity to talk about Edgemont Gold and what we're up to. We are in the middle of a drill program. It was a long time coming with delays on permitting. Well, actually, probably about 2 months later than we thought, which in the scope of mineral exploration is not that long. So we have identified a copper gold porphyry exploration opportunity. Our prime target is copper. We feel we have a high probability of an economic copper gold porphyry discovery. We have an experienced management team. We have low market capitalization, under $5 million. We have high leverage on discovery. We were drilling 6 kilometers north of a high-grade gold-silver discovery announced by Sun Summit recently, earlier this year, actually. But we have same mineralization we feel on our property. Again, gold is a secondary target for us on the way to the large copper target at depth. We feel we are drilling through some copper quartz pyrite breccia zones that have hosted gold for Sun Summit that are on our property, and we're hoping they might have the opportunity to do the same. We have the drill targets have been identified by doing the work. We did soil and outcrop sampling when we initially acquired the property. We did magnetic and IP surveys, and we had access to historic drill logs that indicated some successful drilling at depth. And one drill hole drilled on the property in 1975. The last drilling was in 1976. We're excited to be back there now drilling. It's easy access by road. We're right beside the city. I'm always big on infrastructure, because that makes a world of difference when it comes to cost and ability to work year-round. We are fully funded for a 6-hole drill program currently underway, and we are drilling deep holes. The capitalization of the company is about 26 million shares issued and outstanding, fully diluted 35 million shares approximately. Management holds 17% of that, and we have a treasury of $2.4 million starting the month of September. This is an established porphyry copper gold mining district. There are a number of mines in the area, like Huckleberry Mine to the south. We're 6 kilometers from the town of Houston. It's road access to the center of the property. I was told if I come up for the site visit, I can drive there in my car. I don't know if I'll do that, but that's pretty encouraging. It's open forest and fields. It's not high mountain terrain. It's the ability to work all year round, even with snow. We are on the Equity Silver Mine paved road. That Equity Silver Mine was a fast-producing mine to the south, 26 kilometers. And again, with infrastructure, there's workforce, there's a rail network, and there's hydropower. And you can see from the map in the lower left-hand corner, we're so close to Houston, you can see the streets of Houston in the map. So tremendous access. It's a known copper gold porphyry district. This porphyry was identified in 1975. As usual, when they log an area and they do a road cut, some rock comes out of the ground and they test the mineralization, and then they identified an opportunity to work on something here. We picked this up early going through government records. The individuals that found it are experienced professionals known to myself and Joe Campbell, my partner in this project. And it's an established mining district. It's a known porphyry. We went in there and confirmed that with our soil sampling, our outcrop sampling with some good grades of copper and gold and outcrop. We then did a magnetic survey as we expanded the property and acquired additional ground. There was a magnetic high that corresponded to the map area of the known Dungate intrusive. We also identified another magnetic high undercover to the north, which indicates another possible intrusion. We'll be talking about that in this presentation as well. After the magnetic survey, next step, let's do induced polarization. We did a 16-kilometer line survey in 2020, and that identified a 1.2 kilometer high chargeability IP anomaly coincident with a strong magnetic high on the initial Dungate intrusive, but again, also a hidden intrusive was identified to the north. And importantly for us, a drill log from 1975, there were no assays available, but it did report mineralization of a hole of 142 meters of abundant chalcopyrite at the bottom of the only dig hole ever drilled, with a length of 333 meters. The last drilling was in 1976, and they were only shallow holes. So we're excited to be back here drilling going beyond where the drilling has gone before. This is an outline of the property area and sort of gives a recap of how this came about. We initially acquired an option in 2018, the block in the middle with a little chunk out of the bottom where we fill it in, letting in another important piece of ground from a prospector who held it since the 70s. As we did work and he saw that we were doing work and doing the proper work, we were able to finally get him to come to the table and do an option agreement. And these are reasonable option agreements that are listed in the appendix at the back of this presentation. While we were doing the work, we also, the hidden intrusive, this is outlined in yellow. We saw that went to the north, so we staked as much ground as we could in the area. You'll see we weren't able to go south because unfortunately Sun Summit, who had a discovery just 7 kilometers south of us, we didn't know at the time that they had staked all the ground. So we weren't able to. They announced that in January 2019. And their discovery, copper gold discovery, gold silver discovery at the Buck target is only 7 kilometers to the south of us. So they've expanded their property to the area to the edge of our property. So we found that very encouraging. So the initial Dungate quartz porphyry intrusion, 2FP, so I don't mispronounce it, is outlined in purple here on this map. And the hidden intrusion is again to the north on the map. We did all the work to get to this stage to be comfortable drilling and identifying targets. We did the copper soil sampling and outcrop sampling. The sample for gold in the sampling, we identified outcrops with gold, marked the 1.7 grams of ton gold, and soil sampling as well that correspond with the known intrusive. The magnetic anomaly that was identified, the hidden intrusive to the north in 2019. We followed that up with the IP survey, and the IP chargeability anomaly of 1.2 kilometers corresponded with the magnetic high identified on the magnetic high identified in the magnetic survey. The potential is the initial Dungate intrusive is an intrusive dome, and the IP survey suggests alteration and mineralization halos with the highest high-speed response are related to mineralization surrounding the core intrusion. And that is what our target is on this drill program. The IP survey in this slide, we have 3 cross sections that cover 800 kilometers of strike, line 1400 to line 2200, line 1800 being one in the middle, and that is where the drill hole 75-1, the deep drill hole was drilled, and we'll talk about that in the next slide. This identified a hard, again, this whole survey has identified a high chargeability IP anomaly, 1.2 kilometers in diameter, 56 megavolts, and it is increasing in size and strength with depth. This is line 1800, the line in the middle from the survey. Overlaid on this cross section is hole 75-1 from 1975. The drill logs indicated 142 millimeters of abundant chalcopyrite at the bottom of the hole, and you can see that this really barely scratched the surface of a very large IP anomaly. Strongest IP anomalies have never been tested by drilling, and that's what we're doing now in this drill program. We're targeting for discovery of a copper intrusive copper project, basically, but the benefit here is a secondary target. We will be drilling through a quartz pyrite breccia zone that's shown on the middle of this map. That was identified and drilled the drill log from hole 75-1, and it appears to be the same type of mineralization as reported in the drilling that Sun Summit did, just 7 kilometers to the north. This slide indicates the logging road that we use to access the property, so it's very quick to get to the project area. We've done hole 1. We drilled that first because that was easiest. And once we got the driller there, we didn't want any issues. And we didn't want him to leave. So we wanted to make sure it was easy to get going and get the program underway. That hole has been completed. We've also completed now hole number 2, and we're on to hole number 3, which is the green collar just in the middle of the map. And that is the hole that that corresponds to hole 75-1. And again, in these drill holes, number 1, 4, and 3, we are going to be testing the quartz pyrite breccia zone as well. So it's a secondary target, the gold zone, but our main target is the copper porphyry. That's what we set out to drill here, and we are doing that with approximately 500 meter holes. And the depth of the IP survey only goes down to 250 meters, so we're going beyond that in this drill program. In hole 75, which was 330 meters long, only basically went to that depth as well. There are 4 holes here, holes 1 to 4, that are testing the Dungate intrusive. Holes 5 and 6 are going to be testing the edge of the hidden intrusive to the north. That's basically our program is well underway. We have 2 shifts going. We're probably half the core from the first drill hole sampled and off to the left. So we're trying to get it in works as quick as we can. The drill results will take a while, as everybody knows, but we're just doing the best we can to keep moving forward on this. Joe Campbell, who I mentioned earlier, I think is the key to this project. He identified and brought us the opportunity for this property. He was the project manager, led the discovery team for the Meladine Gold Project that's now owned by Agnico Eagle and been in production since 2019. With me, he was co-founder of TerraX Minerals, which is now Gold Terra Resource Corp, which are developing a project in mining claims around the city of Yellowknife. And Joel was really a key for identifying that opportunity and assembling the land package that they are still working and developing resources on today. And Joe still serves with them as the chief operating officer. Oh, I'm getting ahead of myself. Faster than I thought. Okay, we have a low market cap. I said about $4.5 million as of today, 26 million shares issued. We have a management team that's done this before, raising money for projects as well as discovering opportunities and developing them. Closology is always great. We're 7 kilometers from the Sun Summit project, and their property is just to the south of us, and became that way because of staking they did as they made their discoveries and saw the opportunity in the area. It's an established, safe mining jurisdiction. It's a mining town in Houston. It was there because of the Equity Silver Mine. It's still very active in the area. There's lots of mines throughout the area, and there's maps on our website sort of indicating some of the large mines that you've heard of that are in the neighborhood. Importantly, we're accessible all year round because we're so close to town. We're not on the side of the top of a mountain. This can be drilled all year round, and Sun Summit confirmed that by drilling in January of last year, just 7 kilometers south of us. We have confirmation of mineralization depth in historic drill logs, which gives us encouragement to go deep. We have a 6-hole drill program underway. We are fully funded for that, and we will have cash left after to do subsequent drilling, depending on what results and what our success this year dictates where we go to and move forward as far as to advance the project. And we're fully funded for this program with a multi-year area-based drill permit. This will allow us to do 10 holes next year, and really all we have to do is just advise them where we're going. They'll either object or not, and we should have no problem moving there, provided we do a proper job of reclaiming what we've done already. So we've done work in the area for the last 3 years. We're known to the community. Our drill permits went through without any comments or issues or difficulties. And we've kept everybody in the local community advised. And as we move forward, we recognize that's very important, and we'll continue to do so. That basically summarizes the project. I really appreciate you taking the time to hear our story. The appendix lists the option payments on the properties. Again, there's no hidden skeleton in the closet, no big balloon payment on this wonderful project. By the end of by the December this year, we'll own 100%. We'll have done all the work and made all the payments, which are done. Thank you very much for listening to my story. And thank you again for inviting me, Gwen.
Thank you so much for coming, Stuart. Yeah, excited to see what those holes turn up, as I'm sure is everyone who follows the story. I wrote some questions down for Stuart during that presentation, but I would love to remind the audience that if you guys have questions, please enter them in the platform here, and I will convey those. I will interrogate our speakers with them in the Q&A at the end of the session. So please let me know what is piquing your interest, and I will find out the answers for you. Next up, I'd like to invite Ian Harris of Libero Copper and Gold to take us through the latest there. Ian is part of that latest, I would suppose. He joined the team more recently, and maybe he can tell us why he did that. Ian, please take it away.
It's quite a long story, so hopefully I can fit it into the 15 minutes. And thank you, Gwen, for the introduction. I am Ian Harris, and President and CEO of Libero. As always, there's many forward-looking statements in our presentation today. And a little bit of the story, I am a mining engineer. I have 25 years working in the industry and 15 of those years living and working in South America, and that's a little bit of the story. But as a mining engineer, and thanks for the great backdrop, Gwen, you know, the vision here is looking a little bit into the future, and based on our current valuation, we have lots of legs to grow over that medium term. But the idea is there's obviously going to be a significant gap between supply and demand in the copper side. So that means that our focusing on projects that have legs that can become future mines. That means having the right team, working in the right jurisdictions, having the grade, and having the size. 90% of the world copper comes from porphyry copper deposits, open pit. You know, that's normally 30,000 tons per day or bigger. So that means that you need deposits that are over 200 million tons. So that's kind of our evaluation process when we look at any individual project, is to make sure it has all those components, it has the ability to become a future mine. We have 4 projects. We love the jurisdictions. We love the projects because they're checking those boxes that I was alluding to. Two projects in BC with Big Red and Big Bulk, a project in Colombia called Macoa, and a project in Argentina. Very excited about what's going on in Colombia, hearing all the right things. The president coming out and saying they want us to be the 3rd largest producer of copper in Latin America, recently ranked #1 by the Fraser Institute. And I can let you know that they will fight very hard not to lose that #1 distinction. They are very, very, very proud of what they've done in the first time in history, ranked #1. And then San Juan is the historic mining district in Argentina. So a little bit of that story, I joined in January, and everybody in a copper color here has joined since the beginning of the year, the majority of them in January and February. I wish I had the time to dive in, but we have amassed an incredible team with tons of experience from exploration all the way through to completely de-risking and starting constructions on significant projects within the Golden Triangle area and in South America, and the boots on the ground, the people that are executing on the ground with a tremendous experience in exploration, social communications, government relations, and obviously geology. So quickly on our structure, we're currently trading at about a market cap of 17 million. I think this morning actually it's 20. So Beaver Creek hopefully was a start of something good. We have key investors, key commitment by management participating in all the private placements with 10%, and everybody has been in at the exact same price. Around 50 cents, 47 million shares out. And even over the very quiet summer, we had strong liquidity across 3 exchanges in Canada, US, and Germany. We've raised $9 million this year, 7 in a placement and 2 million in warrants. So diving quickly into the projects, 2 projects in the BC Golden Triangle area, Big Red to the west of Telegraph, and Big Bulk to the south of Stewart. And Big Red is a big part of this, the transition that happened in the company. In December of 2020, so the end of season last year, came out with a copper porphyry discovery. Unfortunately, it was with an RC rig, but it's starting to already paint the picture. You're getting the grades directly from surface, nice dissemination that says, okay, this is interesting. With grades that are very similar to projects that have been put into production or been sold within the area. So this year we came back and did a map. I'm really proud of the execution of the team because we got the soil sampling done, doing real-time readings in field, doing the IP survey, and getting the, adjusting constantly the drill pads and the drill locations. and looking at determining and establishing the size and scale of the deposit, right? So you have the grade from surface, good quality grades that say that this is something that works within the area. The next is the size and scale. You have to have size and scale to have a project. So looking over 1.5 kilometer over 500 meter area to help determine that size, figure out what's the total size of the potential. So we have a 5,000 meter drilling program. We've executed actually up to date. It's over 2,500 meters with 3 holes now have been sent to lab, including the first drill hole, which was a step back behind the old drill pad with the RC and getting down and deep. And at least from a visual basis, we like what we're seeing. The hole ended up going 510 meters and was mineralized throughout. So the expectation is that grades are similar to what we saw last year. Now we've really started to establish. It's got the mineralization from surface, it's got the depth, and now we just have to determine the overall footprint to get down that path of value. But visually, we really like what we see. You know, the mining engineer, I'm more like a fish. I go for the shiny stuff. I love D, but obviously the geologists really love core B because it's showing disseminated chalcopyrite over long intersections. So we're very excited to get these results. You know, we've been told that they should be coming out early in October. So we're waiting with very anxiously. And also, you know, as driving this company forward, I love that you can establish very clear paths of value, following in the footsteps of somebody who's already done it, right? When we look for a comparable in terms of what it looks like on paper, G2 Gold, you know, they had a discovery hole at 0.29 equivalent copper. Ours was 0.41 copper. They ended up drilling 30,000 meters. They established initial resource. And then they were sold this year for $450 million to Newmont. So basically, if we copy or go down to a similar path line, we have a good idea that we can create significant value for our shareholders, right? We're 5,500 in. It means we need to be targeting a large size resource and maintaining similar grades, and we will be able to create significant value for our shareholders. The next project is Big Bulk. Big Bulk is very much a binary test. We got it just 2,000 meters. I'm not going to go too much into it, but it's a reinterpretation of some old drilling that we think we can get better intersections. We'll see by the end of the year if we can enter into our pipeline. Next is Esperanza. Esperanza was what was acquired in January of this year. So we're new team, new projects, very excited. This is really a sad story, happy story, because in 2018, Latin Metals put down a 387 meter hole at a 0.78 equivalent copper, 232 meters at a % equivalent copper, directly from surface. 2018, Argentina copper, and nobody was interested. They also, perhaps they had a prospect generator model, but the truth is that was the last hole put onto this project. That is a company building hole by itself. As the mining engineer, I love seeing the alteration. You can see it from Google Maps. It's 1.5 kilometers long by 700 meters wide. Seeing that it's got the size and scale, it's already got the surface and already got the grades directly from surface. So we've also added additional 3,000 meters to the west of this project and have gone back in, started relogging the hole. Geologists really like what they're seeing. The examples of multiple vein types, multiple pulses of mineralization, everything that's saying, hey, man, we might have a feeder zone. And then when they look at the comparables of all the projects and, you know, some of the elephants that are in the San Juan area, they're in the Cordillera. We're down a little bit lower, meaning we have a year-round drill system, but same age rocks, same age mineralization, same host rocks, same types of evidence of the multiple pulses of mineralization and vein types to Filo del Sol. We look at the core, it looks almost identical, like it came from the same project. So again, a clear pathway of creating value for our shareholders. In 2019, Filo del Sol was testing the top of the system, developing the vectors to search for their feeder zone. And that's what our plan is too. These are actually at the same scale. And then in 2021, they obviously hit it with one of the most spectacular, if not the most spectacular hole of the year of any company. So that only increased our excitement about the possibility of us having a feeder zone. Again, if we do twice as good, we know their current valuation is $2 billion. Half a good, 500, but at least there's a clear path on how to create value for our shareholders. The next the next project is obviously very close to me because it already has an established resource and is already on that path to development is Makoa. Makoa was acquired in 2018 from B2 Gold. It's kind of been sitting, waiting for the environment to prove in the copper space and also in Colombia. We feel that we're now there with the team also included that can advance it. But it's sitting on 636 million tons at a 0.45 equivalent. That's 6.3 equivalent pounds of copper, of which 500 million pounds are moly. World moly production is 600 million tons. So it gives you an idea. If this was produced over 20 years, it's about 5% of world production. And it already has in it spectacular holes. I mean, 779 meters at 0.59, 634 meters at 0.67. So really, it's about establishing a solid base for reactivation of the project so that we can develop it as it deserves. Plenty of room, even if it never gained a single pound. It's a mammoth project, but it's still open to the north, south, east, at depth, and has multiple untested targets. So the initial question is why I came on board. Well, I've been talking to Ian Slater, the chairman and founder, for a long extended period of time. We've crossed paths a few times in our careers, but I was previously senior vice president and country manager of the Mirador project and took that project all the way through feasibility. There was obviously lots of issues in Ecuador. The first project that was reactivated after the new mining law and the new constitution. Sale was on board 1 year after sale. To continue and get that project all the way to the start of the construction. Mirador today is the first large-scale mining operation in the history of Ecuador. It's in the same Jurassic belt. Actually, the first thing I did, hired in January. In February, I was in Makoa to drink coffee, talk to the people to kind of get a feel for the culture, to start developing. And it's like being at home again after 6 years previously in Ecuador. Another one of our directors here, Ernie Mast, was previously the CEO of Cobre Panama, which was Inmet's subsidiary, and did the same thing. Completely de-risked the project all the way to the start of construction. First Quantum came in, built it, and now it's the first large-scale mining operation in the history of Panama. So again, we always talk, and I got to meet Ernie Mast in person at Beaver Creek after so many conversations, and we're applying the exact same strategies. Creating clear values within your organization that work within your local community and working and making sure every single one of the employees are committed to those. In this case, it's about respect, it's about responsibility and being a good neighbor. And then developing strength locally, nationally, and driving that political will. Even though that had to be developed in Ecuador and Panama, it exists in Colombia, which still doesn't mean that we are going to forget about it. We want it to be very easy for the project just to continue forward and forward. And so that's what we did. First 6 months, very much working internally, leadership, empowerment, and understanding clear commitment to those values. I actually moved to Colombia in June. I've been there, left for the first time to go to Beaver Creek. And then we hit the ground in July 1st. We were ready, hit it locally, nationally, and politically. And I'm shocked that it was so fast, the complete change and the way that people are, let's get this going, let's get moving. And we said, now we have the license to operate. So this month we're starting with geophysics. We're negotiating the right of ways to build our new camp. We're starting our soil sampling programs in anticipation of the last permits required to restart drilling in the new year. So, and that's in summary. Today, we're sitting at about a $20 million market cap, but with 3 well-defined and established paths to value and obviously clear paths on how to execute and get there for our shareholders.
Fantastic. Thanks, Ian. Lots going on with Libero. Lots to keep up with, near term, medium term, and down the road. So thanks for taking us through all of that. Let's switch commodities and talk about silver. And I would love to ask Jose Garcia to take us through Silver X, which is, of course, a story that has gone through a lot of transformation in the last 6-8 months. And I will put it on Jose's shoulders to take us through that whole situation.
Hello, Gwen. Hello, everyone. Thank you for having us. Very glad to talk to you about Silver X and what's been happening over the last 4 years. As you just said, especially the last 6 to 8 months. We are a Peruvian-focused company. We are a developer. We are processing. We are producing. But more importantly, we are upgrading our resource. We are having very spectacular drilling. So everything is happening at the moment. Okay. We believe we are the next high-growth silver producer. And let's talk about it. Perhaps I'm going to drive you through our tenements, our projects, and tell you what our plans are. But basically, we have the vision to take or to become a senior mining company by operating this kind of old district that we find in Peru. We're going to transform them. We're going to relook at the resources. We are going to come with a new exploration vision. And that's actually what we've done in Huachocolpa, in Huancavelica, in central Peru, okay? So by consolidating those kind of districts, we have the vision to become, again, one of the most agile developers in Latin America. We are ambitious, we are aggressive on the development, also on the exploration. And see what we have. Now, many people have seen us going public just a bit over 2 months ago. So basically, we were the merger of Latitude Silver, a Peruvian silver company, with AutoX, a Canadian listed company with high-grade gold projects in Peru. So now we have these 2 projects. First, a silver district in Huancavelica is called Nueva Recuperada, and the Coriorco and Las Santas gold project in Ayacucho. But I think we are a good target for investors for a number of reasons. We have all the infrastructure in place. We are processing currently at 600 tons a day, or from our concessions. We are connected to the grid. We have all the infrastructure. We have, obviously, a good relationship with the community. So everything is live at the moment. And more importantly, we see the upscale potential of the district. So within the next 4 to 5 years, we want to see this silver district going above 2,000 tons a day. Why is that? I'm going to show you the facts that support that notion. We are starting with a pretty good resource, more than 7 million tons in inferred categories. That was actually from 2 years ago. You are going to see the drilling. So in other words, we're going to see a very quick re-rating of the company going forward. And we have a team, obviously, that is mostly Peru-based or Lima-based, including myself, okay? And now with the merger, obviously, we are bringing a lot of Canadian expertise. Now we're finally having an exposure to the capital markets. Obviously, those directors are quite well known in this environment, and perhaps I can mention only Paul Matisek. We're going to refer to the X factor later on, hence the Silver X. And these people are bringing a pretty impressive track record, a number of transactions over the last 15 years. So again, Silver X is a target for this kind of investors. We're going to see, as again, a quick re-rating of the company. At the moment, we are trading about 50 million Canadian, okay, which is obviously undervalued in my view. But again, we'll show you the facts on why our valuation is going to increase quite dramatically over the next few years. But let's talk about the district, Nueva Recuperada. And we picked a district back in 2017 from Compañía de Minas Buenaventura, New York listed. And on top of that, we've put a number of tenements, concessions that we acquired from several mining companies. But one thing that we always had clear in mind is our relationship with environment and our relationship with the community. So we've built a district little by little. It's been mostly done on a shoestring and hand in hand with the community, okay? That's important. We believe in being good citizens, but actually we believe in those communities to be our strategic partners. Hence, that now we are a company in growth, in production. And as I said, we started with a pretty good resource. We own a large epithermal system. These epithermal systems with very high grades of silver, some lead, some copper, some silver, some zinc, lead, and copper, and gold occasionally, can be extremely large, okay? In our case, we own more than 100 veins. It's basically almost 20,000 hectares of concessions. And with that inferred resources, we had already the solid foundation to believe that we can create value, okay? We are producing, we are drilling, and the outcome of that drilling is showing much better grades than we actually anticipated. This is a snapshot of the district, okay? We are in Huancavelica, this is central Peru, and it's in an area where mining has been since the times of the colony, okay? There is some big players in the area exploring for bigger assets, namely copper porphyries, and that includes BHP, Teck, Barrick, Buenaventura themselves. And then within the core of that district, we have in Huachocolpa almost 20,000 hectares. When you look at our properties, we've identified 2 large areas. It's called Tangana, which is the north, Esperanza, which is the south, And right in the middle, we have our processing facility. It's a very standard flotation plant, okay? We also have the Maria Luz target, which is a little smaller, but actually very high grade of silver. We're gonna talk about grades in a few minutes. But reality is that we've identified this sort of district concept, district scale. We are again processing, at the moment, we focus on Tangana, which is the north. Once that's fully in production, in development, we're gonna focus in 2022 on Esperanza. In other words, that's how we see the multiplying factor over the next few years, the 4 to 5 times the current capacity. We started to produce a bit longer than a year ago. And initially we were producing on veins that were carbonate hosted. They were actually very productive. We've been operating at a very low cost. However, grades were not that spectacular. Now we finally got to the high grade area, and hence is the exciting part, okay? Just last month, we put a news release for the first 3 drill holes on this new area of Tangana, and 2 of them came with grades in the proximity of 1 kilo of silver per ton, okay? And that's obviously a composition of silver, lead, zinc, and some copper and gold. Our veins go in between 1 and 2 meters, but more importantly, those are veins that are gonna be mechanized. Those are veins that are subvertical, very good geotechnical conditions. And one thing that is critical and quite unique about our company, what we are drilling or intersecting today is going to be mined very, very shortly in the next few months, okay? And this is basically a long section of what we are doing at the moment. There was some very small workings in the past. Buenaventura, back in the early 70s, mined not even 100,000 tons of this project, okay? But now we finally got to this high-grade area, and you can see the first 3 drill holes of that large drill pattern, okay? We have to develop, it's a very hilly area. So basically we couldn't drill from the surface. We have put the underground infrastructure, now having very exciting results. We keep advancing. Just over the last month, we've put some 500 meters of underground development on that property. Oh, went too fast. And also, we finally accessed some of the old stopes, and we've been sampling throughout, okay? Remember, this mine was produced back in 71 to 73, very different condition, prices, technology, right? But we found samples up to 7,000 grams of silver, okay? While that's obviously an anecdote and the overall grade will not be that high, we can now guarantee that Tangana is gonna be a high grade project. So over the next few months, we are gonna see a much increased performance of our company, okay? Remember this, we are a company that is combining production with drilling. And that's great news because at the very least, we offset all our costs, okay? We just raised money in March, and we went public by June, but basically we're not meant to come to our investors for more money. We're just making money. And this is a snapshot of what's going on site, okay? Very conceptual description of a mine being developed, of lots of veins next to each other, having that district concept and a very aggressive drilling program. We've committed ourselves to put more than 25,000 meters of drilling, okay? We're gonna have a very quick re-rating of the resource. Just so you know, as I said, we are processing ore from our concessions. That ore or that concentrate gets sold to Trafigura. It's a very standard metallurgy, but that means obviously that we are making money, that we have everything, the Amos is going on. So good relationship with the community. So again, you are saying now a mine project, which is a reality. This is not a promise. This is one of the very few juniors you can find in the market where, you know, we are proving to be mine builders, mine developers, we are good drillers, and we're actually just turning around a district with new exploration views. And Tangana itself, which is obviously the first target, is a large system. I have highlighted on that 3D view only 5, 6 veins, which are the main ones, right? But this is the first time in the history of this district that those veins are being understood as a holistic project, just one single mine, one single infrastructure. Sort of one enables the other. And eventually we're gonna come up not only with a good resource, actually 5 million tons already in the inferred category, but actually a system or a mine that is productive, that is competitive, okay? Our cost over the last year has been extremely competitive. Now we're finding the good grade, the performance will come, okay? And just an anecdote, because our exploration is perhaps the most exciting part. You can see on this aerial view the various veins we have on the Tangana system. And when you see on the screen is gold values, okay? Occasionally, these epithermal systems, or silver veins, are sort of encompassed in other kind of system, different pulses, different activities, and we find consistently more than a gram of gold. That tells us a lot, not only that that brings value in the concentrates that we produce, but that we are talking here about different targets, exploration targets. Again, it's something we are going to be announcing over the next few months as we can actually prove the results, but reality or the facts are supporting the idea that Tangana will also be gold bearing, and we are now targeting different deposits, potentially disseminated deposits. I'm going to show you just a few pictures of the very recent intersects. It's extremely exciting. We have our mine gate, our mine portal is at 4,650 meters, 4,650 meters. And what we're drilling consistently is 100, 200, and up to 230 meters below our feet. That's extremely important, not only because we report great grades, but to actually demonstrate that our veins are very deep and actually long on a strike, okay? So basically now we can guarantee that Tangana is gonna be a long mine life. And these more intersects, and you can see any geology will understand not only that tetrahedrite or rhodochrosite typically bring high grade of silver, but we actually have chalcopyrite, for instance, and gold. And as I said, some of the drill intersects also support the notion that at both sides of our veins, we have gold. Anyway, that's about Tangana. We are processing, our volumes, our tonnages keep increasing over the months. And finally, I'm going to talk about Coriorco, which is a project that we have in Ayacucho. It's a low sulfidation target. It's a bunch of veins of very high grades and actually sitting next to a dome, which is a disseminated target. Coriorco is a project that has all this a very good social standing, and we are going to see some activity and very good results over 2022. At the moment, the focus in Tangana. Coriorco will be subject of drilling in the first or second quarter of 2022. So in other words, SilverX is a company that will have a number of catalysts. Again, we are making money. We are investing wisely. We are going to increase our production from 600 tons a day very quickly to 1,200 tons a day within the next year or so. And more importantly, we are going to increase our reserves very dramatically, okay? As a team, we are very ambitious, quite aggressive. We'll also pursue some M&A opportunities the moment we can. We are very active in that aspect as well. So I guess SilverX is going to be a company making very positive noise over the next few years. If I draw some comparables, obviously, I want to support the fact that we are undervalued. We are above 110 million shares at the moment, trading today, I believe, at around 42 cents, okay? We see that actually going a number of times higher, but when we actually compare our market cap, which is roughly around $50 million, this is still a long way to go. Based both on valuation per ounce of silver in the ground, but also for the forecast that we have in terms of EBITDA, obviously our enterprise value is quite modest, okay? So SilverX, as I said, is gonna be quick growth, it's gonna be production, it's gonna be very exciting exploration, and obviously we're seeking the X factor. The X factor is a combination of, first, we are in phase of a bull precious metal market, but also SilverX is a company at its inception, it's a company which is very dynamic, it's a company that brings high quality teams, high quality projects, it's gonna be very active, and obviously we believe this is the beginning of a large silver mining company, okay? Gonna grow to Latin America. We just took this slide from other competitors, we love it, because it tells the story of other companies like First Majestic, like Pan American Silver or Fortuna Silver, doing just the same in the previous cycle, okay? The next cycle is our opportunity and we're gonna be there. That's it. Thank you very much, Gwen.
Hey, excuse me. Thank you very much for taking us through that story. All right, moving along to the last but certainly not least presentation of the day. I would love to ask Mike Povey to come up and I think for the first time at a Metals Investor Forum, take us through the gold Basin. I was about to say Gold X, but that's because your ticker is GXX and the last speaker was SilverX. Anyways, the Gold Basin story, which is a story that I'm quite keen on. So please, Mike, take it away.
Well, thank you, Gwen. Make sure I'm unmuted here.
Yes.
Thank you. Well, yes, good afternoon, everybody, and good morning from Perth in Western Australia. The sun's just up, so it's a nice start. Obviously, as Gwen said, I'm Mike Povey, and I'm the CEO of Gold Basin Resources. I'm also a mining engineer by background, so we've got a couple of us here on here today. As you can see from that sort of slide, we're currently listed on the CSE and the OTCQB, but you would have seen a news release today that we're progressing with a TSV listed application. So that'll be sort of ongoing. I'm fairly quick, I would imagine. Yeah, I'm going to run through some background to the Gold Basin project and what we've learned in the last year, particularly about the cyclopic section of Gold Basin. But I think I'll probably emphasise up front that the cyclopic is really just a part of what is the overall potential of Gold Basin. And as we run through, it's a very exciting area. There's a lot of mineralisation about. We've got a good chunk of ground. So let me take you through that. Firstly, some forward-looking statements. There's our current board. Got a strong board. As I said, I'm a mining engineer. Charles Straw, director there, is a geologist, and we've recently added John Robbins and Darren Klink to the board. That I'm sure some people in the audience and in Canada will know fairly well. And we've also joined the Discovery Group, which we're really pleased about, actually. We've worked well with the Discovery guys in the last 12 months with our capital raise and discussions on the project and where we think it's going. So that's a nice thing, and I think it will give us a great deal more exposure in North America, as well as the expertise that we can tap in as well. So we're pleased about that. Now, our project, well, the Gold Basin project lies about 50 miles southeast of Vegas. You can see it there. It's in this Walker Lane trend where essentially it's that sort of transition area between the copper-dominated south and the gold-dominated in the north there. It's really, in terms of location, you really couldn't have after too much more in a future mine development. We're just west of I-93, the high-powered 345 kV transmission line from Mead runs just west of probably. Literally, we drive under it to go to it. It's a very convenient sort of location, and obviously being in a mining-friendly district like Arizona, it sort of augurs well for any future development now. In fact, we get that much support really from the authorities there in terms of some of the things we've been asking them about. It's terrific. Makes a change actually from some areas. The project itself, well, we got over 31 square kilometres of ground there. That's 290 unpatented mining claims and about 5 private mineral rights, which make up about 35% of the project area. And recently we acquired the surface rights over most of a big chunk actually, not most of it, we've got probably about half of the private mineral rights. So we actually got the surface rights and the private mineral rights over what you'll see in the stealth there and areas around that, which is the main private minerals rights areas. The project itself, I'm sort of, before I go into the work we've done, because it's quite interesting that the work we've actually just put in is really the first really modern exploration in the last 20 years. And I'm asked about it quite frequently, why is that the case? And it's kind of an interesting story from the point of view that Gold Basin was typically your older, late 1800s to about 1920s, small underground shows. There was a small couple of open pits in the cyclopic area in the 1920s. But that sort of all died out by the 1940s with the gold price and what have you. Very little, virtually nothing was done between the last sort of 40 years up until the mid 80s, late 80s. And a New Zealand chap in the early 90s started putting together a package of ground. He's pretty much an entrepreneur. He put together a package of ground. He did very well actually in grabbing this package and doing deals with various people. And they went into a public company. And that public company, he sort of, they did some various drilling programs. They did a lot of surface sampling. It was not particularly focused, we'd say, by modern standards. Most of it was around the cyclopic area. And that's because there was small open pit there. It was reasonably sort of high grade, 5 or 6 gram dirt, it seems like. And they sort of focused there, and given the low gold price at the time, you can probably understand that. But it sort of the company ended up being delisted. And what happened there from that point of view is that the shareholders grabbed it and they looked after the claim. So for the best part of 20 years, it was probably held by a group of New Zealand guys, and they just paid the essentially the rents and rates, and virtually nothing was done. We came along, our group came along in 2014. We ended up doing a JV with these guys, and in the end we did work, put together their databases, and moved on to 100% ownership. So 100% is now in Gold Basin, and really we did some drill holes in 2019, but we had a major program at the end of 2020 and 2021, which has really shown us what we think is going on there. But you can just see from that the area is dominated with some major structural features, the cyclopic fault, the stealth fault, and there's some dotting of mines around the place as well. There's a lot more when these things looked up close. It's been completely underdone over the years. If we move into the cyclopic area, which is where we're focusing in the last year of our drilling, because there was a historical database of drill holes, which you can see through this. There's the holes in yellow, they're historical holes, and the circles in white are also historical holes. The ones in yellow are differentiated by being less than 50 meters in depth, and you can see from that's in the cyclopic pit area. They were mined. Some of these holes were only 15 meters deep. Some on average less than 50, in fact. And really, the guys who were doing that back in the 1990s were looking for extensions of the old sort of small pit there was here, high grade material. And so when we looked at that, we had a fair database of these things, but we really couldn't see too much what was really going on in the mineralization. So our program essentially extended along this 1.7 kilometer area. We extended to the north with a view to hopefully expand the mineralization and learn a lot more about its distribution, because we really couldn't tell too much from the historical drilling. We knew that mineralization was pervasive over a lot of these holes, and as you can see, both from the red stars in the area, there's a lot of rock chip sampling as well. All that stuff's over a gram. So each of these, there's a lot of mineralization in the holes, but we did have a good feel for exactly how this was distributed. So our drilling which finished in April 2021. We've got some great intersections across here to the right. We also put in 4 PQ diamond holes along strike on this stuff, mainly for network, because we had we got a good idea in terms of the previous work that was done. So we wanted to make sure during the program that we locked up some diamond core so we could move into network pretty quickly on this oxide material. So what did we learn? Well, we learned when we were through the drilling, there's a section that's basically a north-south section that we've got through our drill holes. We've modeled it, and you'll see some of these sections here that we've got these flatline structures. They're vertically stacked layers. They pinch and swell, they push into one another, essentially right from surface. We've only limited this to 90 meters, just as for our first phase of drilling. We were aware that we had detachment fault mineralization there that was flat line, but we had no idea that we was going to end up just how extensive it is and the continuity that we're getting. Essentially, gaps in the mineralization there are areas where we just haven't drilled. They stack up, blend into one another, as I say, in some places sort of like 30 meters. The scale on this is such that these are quite small gaps. In fact, they're sort of meter intervals in some of these areas. So right from surface, we've got this material. It's all oxide. We've not reached any, and everything's open at depth and sort of east-west. We literally have not sort of entered into a transition zone. It's all oxide still. We've got a couple of historical holes that show the oxide is down to at least 150 meters, but we've got to sort of prove that up. But what we've seen is that this lateral extensiveness, that's the north-south section as well. We're drawing much denser. On the east-west, you can see from that similarly we've got sections that showing exactly the same layering. It's all flat.
You can see out to the eastern side here, we've got a few historical holes. They show the same sort of layering. We've got nothing out to the west at all, even though we know that we've got mineralization at the stealth area up here. There's just no drilling in these areas is what it amounts to. So looking at that, we've just got obvious priority targets, both over here, and north and south. So effectively, we've got mineralization that runs east, west, north, south, and at depth that's all still open, and it's from surface. So what else we got with regard to the rest of the target areas there? As I said, cyclopic is really just sort of part of the story. We're almost sport for choice is what it amounts to. The cyclopic area in here I've just sort of shown you. We've got expansion either side of that. We've got a set of Fry mine and a Ring Bear mine. We're going to be working on expanding what we've got there. We've got a good idea of the numbers that we've generated with our current drilling. We didn't think it was appropriate at the moment to actually run through a resource because there was just so many gaps that we needed filling in to extend the resource that we know is coming up there. But on top of that, we've also got the stealth target, which is a good historical target, as you can see to the right here. We had some great historical intersections there, the 45 meters at 2.5 grams, or 2.25 grams. So that will also focus on our next phase of drilling, which is going to expand this resource and is going to move on to the stealth as a new exploration target. So from our point of view, our timeline is such that we've completed phase 1 drilling early in the year. We've flown a lot of geophysics. We haven't announced anything on that yet. We're still going through the data. We've done some hyperspectral. We've done some 3D magnetic interpretations of it. We're learning a lot, all good. We completed the modeling, so we've got a good feel now for what's going on. Really, really pleased at the extensiveness of this deposit in its lateral extent. It is a really bulk mining target, which is fairly obvious from that. I've run through these things as a mining engineer. I can model it internally. And, in all intents and purposes, there's going to be a mine there one day, and it's a matter of how big. So what are we doing? We've got our second phase of drilling. We're going to start next month. We're going to work on both expanding the resource area at Cyclopic and the new exploration drilling at Stealth, which will add significantly, we think, to what we know is there already. And we've also got metallurgical test work underway with the PQ cord I mentioned earlier is already been cut and it's on its way to the lab. And we hope that that work will take 3 to 4 months. We don't expect any issues there, but it's all based on heap leach recoveries. So we've got KCA and Reno, we're working on that. So as far as we're concerned, we've really done most of the geophysics we want to do at the moment. We've got really good understanding of the geology and the mineralization at Cyclopic. We've got a great bulk mining, oxide target, typical of what you see in that part of the world. It's got massive room for expansion, in our opinion. And we've got metallurgical test work, which with a touch of luck will be finished, I think, early in the new year, to be honest, with the way that labs are currently working. And really, we're kind of sport for choice in terms of targets, but we're trying to keep ourselves under control and make sure that we expand Cyclopic and add the stealth one, the exploration work of stealth, so that we can move on from there. And we currently got 100 million shares on issue. We got a market cap, I think, today of about 37, 38 million. And we're fully funded for all the exploration work we've got now. So we're happy where we are. We don't have to go out for any more money. We'll be able to complete these programs, and hopefully we'll have some really good news in about the first quarter of the next year. And that's about it, Gwen.
Thank you so much. Great. Why don't I jump right into it with you, Mike? Because we just went through the presentation, and I have questions fresh at hand for you. One of them is so when you were looking at the, I guess, call it a long section, or the plan map, there's a 1.7 kilometer distance marked there. When you were showing the drilling plan map that had different colored drilling for old versus stuff that you've done, it looks like, there you go. So it looks like you've basically doubled the strike length of the resource area, at least in terms of what's drilled. Is that a fair statement?
Yeah, we have. Yeah, you can see some splattering of these white sections here, which are some historical holes. There's a big gap in between where we didn't know anything. We knew we had some mineralization to the north here, but it wasn't coherent. Overall, when we started, there was one thing we noted that in the old work in the old pit, you could see in these very shallow scrapings, it's really almost to dignify and call them open pits, really. But we could see that they had been chasing some higher grade, like feeder faults is what they turned out to be. And we thought that was what there was. We didn't have any real good idea. We knew these detachment faults were there, but from the mining and from the previous drilling, we couldn't really interpret like what we now can in terms of the layering of these structures. So as we move north here, the idea was that we'll find out more, and we've doubled the strike length. Quite frankly, the next range will extend it again. We can, if you look to the Fry mine to the north here, that one, I don't know if you can see my cursor at Fry, there's an incredibly good intersection there, which when you rotate these things and look at it, in 3D, they match. What a beautiful thing was happening is that these layers are matching on elevations that you can actually just see. There's no logical reason at the moment why there should be any gaps in them. So we know that this is a 400 plus meter distance here, and it's shown exactly the same, and the intersections are exactly the same levels as we see the layering in the northern section of our drilling here. So yeah, we've at least doubled what we had historically. I should have pointed out, we don't really talk too much, but in 2019, because of the JV conditions that we had, we did have a resource that was put out on the ASX between this and Stealth. That was 360,000 ounces inferred at 2012. Because of the nature of changing into North America, we haven't sort of referenced that much. In terms of the 43-101, we figure we're going to be going out with a much bigger one in the near future. But you can see that we've got holes out to the east here, which have got historical intercepts, exactly the same as I showed on the other section, where these have hit these, now we know, layers, which again, you see them, and match their elevations. They line up beautifully with mineralization, in the new drilling, like from here. So we've got these large gaps in drillings you can see all the way down, and we've got these large expansion targets of cyclopic, both east and west. Essentially through here, we know this would be an area that we'll be drilling through that, and we're going to expand out towards the Fry on the phase 2 of our drilling this coming October.
So I'll put you on the spot here for a second. So obviously, there was that old resource that, because of different regulations in Australia versus Canada, we're not supposed to talk about the old resource in particular. And so then the question is, when does the new resource come out? Because this is a very consistent near surface oxide resource. In terms of convincing the market of value and a starting point for value, everybody loves a number. What's the plan for that in terms of timing?
Well, I think it's a good question from the point of view that we're able to do these things in-house pretty well. So we'll be knocking it up as we go along with the drilling, to be honest. So, but I think in terms of where we finish, I think that, as I said, probably realistically in terms of our lab results, probably by about February, March. I think that's probably
gotcha.
Realistic. It really depends on the speed that we're going to be able to drill. We're quite lucky that we've managed to secure a rig. We're hoping that we might be able to do a second one. We've got about 15,000 meters planned. It's all RC. And we'd just like it to go a bit quicker. We're used to drilling a little bit quicker here. We're only doing 100-meter holes on most of these things in depth. Although the new program, we will extend it in the northern section here. We ended in mineralization in these northern areas where we were drilling. So we're going to be pushing those a bit deeper towards here. There's a definite trend that we know that these 100-meter holes literally were still in mineralization. So we'll have a few deeper, 150-meter holes through this region. But we'd like to get a second rig on if we can, just to push it a bit quicker before it stows up. Yeah. Yeah,
fair enough. It does seem to be a drill limited opportunity as much as anything at this point, right? Like you want to go east and west to Fry to Stealth and.
Oh yeah, it really is. I mean, stealth is an area which is we haven't spoken about much. It's got fantastic results. I've modelled that. That's you know, on the previous modelling that showed about 60,000 ounces on the historical drilling. It's probably a bit more than that, but that's just the tip of the iceberg. You know, that was, you know, that's I often joke about that because that's part of the private mineral rights that we have. And I scared someone the other day saying we can mine it in 5-acre lots because we've got surface rights and private mineral rights, you know. So there's a bit of amusement there. They took me seriously, but that's a great time. Now we definitely add more to the exploration side. But yeah, in a given, it really is. We debate internally. You know, this is largely, to be honest, around the sides of this thing is just infill drilling. I mean, and to be perfectly honest, with the drilling that we've done and the spacing that we've got, a large chunk of this is already in an indicated category. You know, there's no doubt about that. You know, so when it comes out, it'll no doubt be both, and in some of the areas where it's a little bit tighter, it might even be better than that. So, you know, I think that we'll end up with both an indicated and a decent inferred resource by the time we come out in, say, late Feb, early March, maybe.
So this, bit of a broad question, but this resource, I mean, the reason that I am so obsessed is a good word with this resource is it's just these very consistent flat-lying layers that start at surface of good oxide mineralization. Like, from what I understand, and maybe I've drunk too much of the Kool-Aid, but from what I see, there doesn't seem to be a weak link that's particularly apparent as yet. What are you most concerned about as you go forward with this project? I guess I'm trying to figure out if there's a weak link that I'm missing, because right now I love.
Yeah, I can understand that, and being a mining engineer, I'm always looking for the problems, to be honest.
Yeah.
And the reason why we got involved, the reason I got involved early on is that I liked the look of it for a kickoff. Thought there'd be a bulk target here when I first saw it. To be honest, Gwen, it's almost like Christmas. Couldn't believe it actually came out this well. You know, I mean, internally, I'm obviously able to model this, and I've run through some optimum pit scheduling, and I've tried to you know, muck it up, and you can't really. As it currently stands, in all honesty, as it currently stands, you run through this on the basis that it's you know, like it's indicated what we currently got with this, model it up and run through some optimum pit scheduling. This thing comes out of a stripping ratio around about 0.6. Right. There is no real waste areas, as I've mentioned previously. At this moment in time, in all the drilling that we've done, there is nothing that you would be able to separate out from a mining, you know, operation that would design it as a waste area that you've got to ignore. At the moment, where there is a little bit in between, where there's low grade or nothing, they all blend in. And if I move this to, you know, selected mining units, you know, or typical blast sizes, they all disappear. So it is, you know, literally a bulk operation from surface. We're down to 90 meters. We fully expect it to go deeper than that, towards the north, particularly. South of the cyclopic area, we know nothing, essentially. There's no drill holes immediately south. So, you know, that strip ratio may increase a bit. The previous resource, I didn't mention grade, but the one that was announced back in 2019 on the ASX, the inferred resource there was at about just under 0.9 of a gram. For this material at a 0.25 cutoff. So the cutoff's a bit too high, you know, that was used at the time. You know, that grade is pretty good and a low strip. So it's, you know, we don't expect any issues on the metallurgy either. There was a bit of work done in the 1990s. They were high-grade samples. These guys, you know, they were playing around down here when the gold price was less than 300 an ounce. So they were trying to find this 5 and 6 gram, you know, material. But they did some work, they showed some reasonable recoveries on what they had. It was still leaching when they stopped the testing. But we now got some, but we don't know where they took the samples from, is what it amounted to. So we're starting afresh, but we had no expectations of any issues at all. There's only gold in the system. The amount of silver is minuscule. It's basically less than the gold. So, you know, we metallurgical wise, we don't expect any issues. So to answer your question, I can't find any fault in it at the moment, and we just want to carry on smashing some holes in. It's what it amounts to. Yeah.
I think we should leave it on that. I can't find a weak link at the moment, so we've just got to carry on smashing some holes. I think I'm just going to leave it.
That's what we got to do. Put the truth machine on all of it. Yeah.
Well, thanks for getting up middle of the night or very early in the morning, whatever the better descriptor is, and for
it's my pleasure. My pleasure.
I'll work backwards. So I'll move on to Jose at SilverX now. I've got a few questions in from the audience. One of them, I have a couple actually who've asked about sort of the political risk around Peru's new government. So obviously, this is an area that I'm sure you could speak on for a long time, but do you want to just dive into, politics in Peru and how that relates to SilverX?
Well, obviously, the international community or the investment community has been concerned about the recent election. But reality is that after almost 3 months of the new party in government, they have not made any move onto the mining industry. We don't believe it will happen. Okay, so maybe some of the contracts might be renegotiated, but honestly, we don't expect any big changes. Don't forget, Peru relies on the mining industry. We account for 60% of the exports. It's basically the main source of currency. And still, one single conclusion is still building and operating a mine in Peru is a lot safer and easier than doing so in BC, Europe, or North America at large.
Fair enough. I spend a lot, whenever people ask me about jurisdictional risk or political risk, I certainly spend a lot of time talking about how the places deemed safe are not often that safe. There were some specific questions about the feedstock at the mine. So is it all coming from your own property, or is there feed coming in from other mines in the area? Do you want to just describe that and your approach to that call it toll milling potential?
We did some toll milling in the past, about 1.5 years ago, when we started to do some cash flow. But no, at the moment, 100% of the production comes from our property. We grant permission to a couple of contractors to mine for us, okay, and we supervise that. So far, as I said in the beginning, we were moving from the carbonate-hosted veins that were very wide, very productive, not spectacular grades, but finally we made it to the andesitic-hosted veins. You can see the grades. Keep an eye on the news releases coming up next week as well. It's going to be interesting.
Okay. The scale of when you show the long section of the mine, and then you have the whole resource sort of expansion potential area, and you show all the green dots for planned holes and sort of the hatching for where you, I mean, the area that's down there is bigger than the area that's been mined, right? It's a very large area. Do you want to just dive into that thought process?
There's several beauties in vein operating in such difficult areas. It's extremely hilly. Our mine portal is at more than 4,600 meters altitude. It's not easy, okay? So that's why we can't drill from the surface. So we developed the underground infrastructure to be able to drill. Just that single vein, which is one of the 6 actually veins that we'll put into production right there, just only one, is 1.8 kilometers on a strike, okay? And this epithermal system occasionally going on to a vertical extent of several hundred meters. For instance, in our district, there is evidence of past mining below 4,000 meters, and we are above 4,800 meters altitude. So that tells you about potential vertical extents of 1,000 meters. Okay, that's extremely exciting. So we just need to keep going with the infrastructure. We drill deeper, we drill farther, we keep going, okay? Like many underground mines, of course.
Yes. I'll give you a bit of an approach question, which is there's a huge number of targets. I mean, you were just describing the opportunity at one vein, which is one of the 5 known veins right in the Tangana area. I mean, there's veins everywhere. There's Maria Luz. There's all kinds of targets that you have to that you're keen to attack. So talk about that balance between, there's obviously a lot of spending that has to go into development. That's just part of mining. Drilling holes costs money. You obviously are making money from the mine, but not a bottomless amount of money. So talk a bit about that balance, the approach to exploration, development, and spending.
Well, actually, I don't believe we have those many targets. In some of these areas, we have several veins. They are parallel to each other, okay? So you got to understand that this is perhaps the first time in this district that we understand like a multi-vein mine, okay? So Tangana is one single mine with 6 to 7 veins brought to production with the same mine infrastructure. So again, that gives competitiveness to our operation, okay? Of course, we are going to talk about different targets because we like to say that one vein after the other brings all together a pretty outstanding resource. But don't forget, we have 2 projects. Tangana in the north and Esperanza in the south, both coming online together for a much increased, let's say, capacity of throughput. And Maria Luz is a high-grade silver target. It's a more long-term oriented project, okay? We need to drill a lot. We'll be looking at that over the next 3-4 years, but the production will come from Tangana and Esperanza, 2 projects in a district.
Okay. And let's just briefly touch on Coriorco. Do you want to talk about the permitting approach that Silverex is taking at Coriorco?
Coriorco, we actually are in very good standing with the community. Okay, we just visited the project again last week. So we have social agreements. There is historical mining there, even artisanal mining in the property. Okay, so we're gonna do some drilling around the first quarter or maybe Q2 next year. We'll see how best we can do it, but definitely we're gonna make a move in the first half of 2022.
Okay. Okay, that'll be from a project that we haven't heard anything from in a while, so that'll be add something to the mix. Okay, thank you, Jose. Let's keep on going. I know people have been paying attention to this event for many hours already today, so I'll just harass 2 more gentlemen with questions, and then we will wrap up for the day. So, Ian, you started your presentation by talking about the number of people that Libero has added to the team, and it's a very impressive list of people. I guess, I mean, it might be a bit of a funny question, but how on earth did you do it? I mean, people are a hot commodity in the mining sector these days. How did it happen?
You know, it's funny. I remember being a mining engineer starting 25 years ago and going, wow, everybody's got great hair. This is going to be awesome. One day this could all be mine and it's going to be great. And then I was like, you know, maybe 5 years ago, go, oh, wait a second. I'm not going to have any crew, right? You know, where's the rest of where's everybody else? And so, right, it was like, where's the money? And then it's, okay, where's the projects? And then, oh, where are all the people? So there's been a focus on this a long time. And, you know, I've spent 15 of my years in South America, which made a lot of great relationships and getting actually the, you know, work done on the ground. And that is, you know, so it's one of these things that once you start creating a little bit of a critical mass, I mean, I have to give 90% of the kudos to Ian Slater, who's the executive chairman and founder, who just kind of brought all this all together. And I think it's like a dominoes, right? You know, once you get Brad Pitt signed up to a movie script, then Angelina comes along and all this other people start adding on. And so there was a very, you know, Rob Pease and Bill Bennett were original directors with Ian, and it just, I think, really started, you know, it's a center of gravity. And most recent acquisition person who joined us, I think maybe a month ago, was Lisa Patterson, who's our CFO. She was ex-staff of capital projects of Barrick and of the Frontera district, which is between Chile and in Argentina. And it's just kind of restates that once you start getting that real solid core, you just bring more and more people become attracted to it.
Yeah, which is great on many levels. In part, one of which for Libero is, you know, you do have 4 projects that all have similar but different needs, right? And so you do need a diverse cast to attack that. Zoning in, on one of your projects, do you want to talk about zonation and alteration at Big Red and what you're seeing? And I ask that because, of course, you reference GT Gold and the Tatoga porphyry as, you know, a value marker for what you're looking for. But that, you know, a high grade core is a really important component when you're looking for these kind of porphyries. So do you want to talk about what you know in that area so far? I realize information remains limited, but.
Well, first of all, Mike set a terrible example of a mining engineer who knows geology really well. So he like set the stage up for me. So, I mean, the truth is, the end of the year last year, Big Red was focused on earlier in the season on gold targets. And it was the very last pad of the year. It was like, we, you know, have this outcrop, it goes down to the valley. We can, you know, follow the grade all the way down. We don't have a high chance of hitting it. Let's do it. So in many ways, we are, you know, the discovery came before the groundwork. So a lot of the work that we're doing on the ground right now, doing the soil sampling, doing the 3D IP survey, We're actually redoing and trying to fit in one more geophysics survey before the end of the season, because we're just gaining so much knowledge on the project as is. So the feedback from the geologists is that we're into a system more similar to like a galore, where you have that's the current thesis, right? That it's these porphyry swarms that are coming up. So we're kind of at the top of the system. And I think that they're also going to be going in and doing some of that alteration analysis to get more and more understanding. Each drill hole, we're learning so much. And it's one of the other reasons we focused on a larger area, right? The mining engineer wants, next step is I want an exploration target. I want to start knowing what kind of size and scale we're having, but it also creates so much more knowledge on what kind of system we're dealing with. And I'll throw in something I really didn't get in, is that in the same field season, we picked up, 4 additional potential targets as the mapping and work is going on to the southeast. So we're just continually gaining more and more knowledge, but we're pretty sure that we're at the top of a porphyry system.
Okay. Moving quickly to Esperanza, I'm asking the question because you had that one slide that sort of suggested parallels to the Filo del Sol process. And perhaps that sticks with me in particular because, I followed that story and failed to make a move on it, and now kick myself most mornings when I look at the share price. But do you want to talk a little bit more about those parallels? I mean, there's parallel sort of process and geology and.
Yeah. So once again, I'm going to have to, if the geologists in the room, I mess up a little bit, then they can write nasty grams. But the truth is that what Filo del Sol was doing in 2019 is like almost similar to what Latin Metals was doing in 2018. They had some pretty spectacular drilling was going on at that time, but market just was not really interested in Argentina and copper, and it's a completely different story. But they did their homework, right? They just continued to do that fundamental work. Testing it at the top of the system is great. It's obvious that it's got the potential to become an open pit copper mine, right? But they always had the theory that we'll follow this down and develop the vectors to find that feeder zone. So there is a slide that it's in the 15-minute version, but it goes through some of those similarities between the two projects. So same Miocene age rock, same host rock, and then the evidence of the same types of veining. I think the geologists called it a type A and type D veining, same type of overprint. So it's multiple pulses. And those are the type of things that say, hey, this is something that's, put out a lot of copper over a very long period of time. It should be coming from somewhere. So that was the theory from the first look at Esperanza when we picked it up in January. So obviously very excited to see when Filo del Sol hit their feeder zone this year, because it only increased our excitement, not just on our theory, but what kind of results that it could bring and valuation that could bring to the company.
For sure. Well, if anybody wants to get excited about potential, they can certainly go look up what happened when Filo hit those phenomenal holes a few months ago. In the interest of time, thanks, Ian. I'm going to move on and ask Stuart a few questions before we wrap up. Stuart, long time coming on drill. Well, not really that long time coming, but you're drilling, which is very exciting. Maybe for some context, and I didn't put Ian on the spot with this, but for some context, you're drilling into this target for the very first time. Do you want to give some examples of what you would consider like a technical success or a standout? Oh my goodness, we didn't expect it. We didn't really expect to hit into it right away. A real success. So people have some parameters from which to look at results when they do come out. I know, again, I'm asking a non-geologist, but I can't be the first person to ask.
Okay, the expectations. I guess what will happen in most, we know there's a porphyry there. We're drilling. We started sort of outside, away from the I guess our leading hole, the C75-1. That's going to be the third hole we're drilling now. We're really interested in that to see if it corresponds. We get information that corresponds to the log, and we get some grade. That would be wonderful. That could be a great hit. We're going deeper than that hole set out to do. What's happened already is from the holes that we drill, we are seeing we're in a mineralized system. We've got limited overburden, 10 meters on the first hole, 4.5 on the second hole. We're in a mineralized intrusion. We're getting all the right indications. We are getting, looks like it's a big system with the right kind of veining, lots of smoke. So, I mean, we're encouraged what we're seeing so far. We really need to get some results back from the core. I mean, I learned a long time ago, you can't sort of speculate looking at core. I'm not a geologist, even the geologists won't do that anymore because you don't know what you're going to see. But I think we're going to see we're onto something here. We hope we can get some really good real indications from this first program. You know, it's a 6-hole program. We're going to have about $1.5 million left. I mean, the holes of doing another 10 holes would be about another $1 million. So we got room to follow up on this once we get a better understanding of the system. And this for us is, I mean, we don't have anything to work from. We don't have any drill core we inherited or anything else. So we really want to sort of, I guess, probably be cautious, which is kind of my nature anyway, as far as setting expectations. But I wake up in the middle of the night hoping of a nice discovery hole. But you know what? Let's see what happens. I mean, I think we're off to a good start here. We raised lots of money just so we have enough to really properly do a job of testing this. Our first thought was we just go and raise $300,000 or $400,000, drill a couple of holes, take a shot at it, and go from there. And then a number of people said, "Whoa, that's risky. These systems usually don't hit that quick." So anyway, we're encouraged what we see so far. We're really looking forward to seeing what hole number 3 is going to give us. We're seeing some similarities. It's hitting similar zones according to the log. Already we're down about 90 meters, so we're encouraged. And we'll just have to see what happens and wait for the assay results.
And if those assay results come back with, you know, encouraging numbers that suggest follow-up, you've got the money in the bank, and I know in terms of access and topography, winter drilling would be an option. Is that something that you think you would pursue?
Oh, for sure.
Yeah,
absolutely. You know, what we'll have to do is, we're limited with this permit. We're permitted to 6 locations right now. We can drill more holes off those locations if we wanted to. But I think to go back to the next program, we'd want to, to come up with some more targets. We're going to have to go and we can't do them this year. You know, basically, they're saying you can do that next year, the next 10 holes. So that's going to start in January. We get the results back. We hope we can get it back sooner instead of later. We'll do that. The other thing we're looking to do is we already got a quote on a Titan deep survey to go deep in the 250 meters. I think that would be worthwhile. And the reason I think of that is I was impressed with Kodiak. I owned their shares before, and they had a great discovery, and it started at 250 meters.
Yeah.
So, and they attracted tech. So people might say that it's deep, but you know what? If you got a great deposit, that's not a problem. So, we're looking to see what comes back from this, get a better understanding, and then look doing that as well as the drill program. That's going to be the 2 steps that we do.
Gotcha.
The next part of the program.
A question that came in was about liquidity. And of course, this is sort of this pros and cons of a tight share structure question, right? It's funny, when you're setting up a company, everybody wants to hear about a tight share structure and great registry, and nobody will ever sell. And then you start trading and people are like, well, where's the liquidity? So it's obviously a dance. The specific question is, do you have any ideas for how you can increase, or plans to try and increase liquidity? Is that mostly based on results, or what are your thoughts around that?
Well, I think results will drive it. I think it's almost like a standoff here. People are waiting to see, when we started drilling, we've done that now. A lot of the selling stopped then. I think it was a bit of a tough market this summer. I think if you had a bid, people hit it, and we're pretty close to where we did the last financing of that range. I think we've got to get some success and go out and then hit. I think we're just in a bit of a nervous market right now. And I think it's results and some positive information is going to do it, not just running around promoting, waving your arms and making stuff up. I think we've got to show something from the program. The promotion just doesn't work that well right now on its own. It's got to be promoting results.
Well, I'm glad you're not running around making stuff up.
I would never do that.
Of course not. I think the last question I'm just going to put out there, I guess if anybody who feels like answering, there's a lot, lab turnarounds. I mean, obviously this is a big issue. We all hoped that it would be better this year. It is not better this year. I guess Ian and Stuart, you guys are both, in BC. Do either of you have stories or anecdotes that help the investor sort of understand what it's like for those who are trying to get results from labs and what it's like for labs?
We're just getting ours into the labs now and hearing the promises. Okay. We're hearing a 6-week turnaround, but we're not in there and we haven't got anything to really judge it against.
6 weeks? No. Yeah, right. Sorry.
That's what they've been saying. Right. But again, the more people that come in, anyway, the bottom line, we got to get them in. We're probably sort of behind the rest of the people that have already finished up their programs from north of us. And like I say, what can I say? We just get them in there and push as much as we can. We probably don't get as much attention as some of the bigger customers because we're a new company, but see what happens.
Ian, what about you? Any comments on your experience so far?
Yeah, obviously it's one of the hottest seasons ever in the Golden Triangle, and classic ALS. They say in the beginning of the year, sample prep was the significant issue last year, and this year we're going to open up new areas, but the capacity doesn't seem to be the problem, but hiring seems. It's not just mining. It's you see it. Yeah. Schools can't get cooks and people for their schools. It's a significant issue. It seems to be better than last year. We are lucky at Big Red. We got our first, we look like we beat a lot of the others. But now that I hear that they're still saying 6 weeks, it means that it's just the standard answer. But it's something that strategically we're looking at. Sample prep is something that we're this close to doing our own sample prep. But we won't miss the mark on next year. Built a few labs before, so we can build another one, at least on the sample prep side, and get over and make sure that this isn't a continuous issue into the future.
Fair enough. Yeah, especially if you can band together with others in the area or something. That's right. There's lots of potential creative solutions to these problems. Well, with that, gentlemen and audience, I think we'll wrap it up. We're a few minutes early, but it's been a long day of presentations and a lot of information to take in. So first and foremost, thank you so much to the audience, to everybody who's tuned in and is interested. If you have any more questions for any of the presenters, me or any of the gentlemen who talked about their companies, we are easy to find either through the Metals Investor Forum or just at each of our websites. And of course, thank you to the 4 companies that joined me on the panel here today. Great stories. Love to get the updates. And with that, audience, hopefully we will see you all here bright and early tomorrow. All right, everyone, take care.
Thanks, Gwen.